ho, it's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola.
Hola.
How are you?
Nikki, you got the deep V going today.
Do I? Do I need to
Keep it.
Is it too early for the chest hair?
No.
It is way to start off this Monday morning.
I saw my breath this morning for the first time in 2025 in the morning.
To turn on my seat warmer.
Yeah.
Wow.
Apparently, it's going to be like one of our vintage, very cold winters, like polar vortex.
It would
cold.
make sense.
No, I didn't.
That's what I've been seeing.
Nah,
My mums are dead already. It doesn't matter.
Oh.
Yeah, they burnt up.
that's fine.
They burnt up in the sun.
I mean, we got to cull the herd. Some of us are getting a little too cocky, so we got to.
You got all the new guys too. Like Gus needs like a real winter.
Yeah.
You know,
All those
Gus-
Texas boys, Chase too.
Chase.
Yeah. They don't know nothing about this.
Yeah, they came here. They're like, this isn't too bad.
Yeah.
Easy here. No problem.
What wind?
Yeah. Like, oh, just.
that is true. They moved. Yeah, Gus moved in.
Just
like,
you wait.
February.
Yeah.
Just you wait.
He moved in February, but by then, like we were already like to spring weather.
Yeah, it was
so-
fine. We had
Yeah.
Winter was nothing. Can't wait. You go out to the car. You know, the handle's frozen on.
Oh yeah, I've had that happen. Your car just freezes shut.
Hey, you gotta give it a little love for a second.
Can we talk about cars for a minute?
Oh, is the Porsche on the way?
No. Porsche's fine. No, Porsche's fine. The Denali.
Your wife's car?
No, she has a Range Rover.
Oh.
My other car. My car I usually drive.
How many cars do you have?
3 or 4 right now.
Okay, go ahead.
My Denali.
Please add me, Lord, at the end of your sentence. How many cars do you have, me, Lord?
It's a 2022, I believe. It has a recall on the engine. Now, a few of my friends have the same car, and they all brought them in, and they had no problem with it. They scoped the engine. They say you need a new, you got to put in a different oil, I think like 040 now, which is a very heavyweight oil on
Okay.
this year's engine, because it could be a failure. Well, I'm driving home Friday, and it was a little bit of rain, if you remember. I was driving home, and I felt like my wheels slip for a second, but it didn't feel like it was coming from the wheels, but I had lost kind of power.
From the party on Friday? Or no, from the...
No, from work, from here, early in the morning.
you didn't come to work on Friday.
Well, I was driving on the expressway. Then it was Thursday.
I was going to lunch on Friday.
It was Thursday.
Not in the
then.
office on
Right,
Friday.
it was
Okay.
Thursday. It was Thursday.
Okay.
So I felt it slip just a little bit, but I didn't think anything of it. Had the music playing, feeling good. Got up the expressway. My wife called me, so the music goes off, and my engine is making a noise like it lost a piston. Like it's just tick, tick, tick,
So it just seized?
Didn't seize. I drove it straight to the dealership, pulled it in. They said they'd take a look at it. They called me on Saturday. I'm getting a new engine.
Well,
New engine, whole thing.
Whole thing.
Oh.
I'm real happy. I really am. I'm real happy.
I mean, hopefully
go.
this engine lasts longer than 2 years. I mean, he needs a battery every 3. You need an engine every 2
The
years.
question is, how long does that take? That's got to be like.
It could be a couple of weeks, 2 weeks or so.
Yeah, because we don't have enough
3.
mechanics or something. Like it's
I mean, everybody says we don't have enough of everything, but I mean, for some reason, I see the streets are crowded with people shopping. I can't get in for lunch anywhere. It's amazing.
okay. These are not real problems.
What are they going to give you for a loaner for the car?
I didn't ask for one. I have other cars to drive, so I didn't do the loan. I didn't do the loan thing.
Other cars.
See, that's nice. See, the loaner's like the best part.
Is it?
You get
Like
to try
I think
something
so.
new.
I like to get I like to get a loaner. Like you should
Yeah.
try something.
No.
Try something new. Well, I'm glad that you didn't have a catastrophic engine fail. Like it could have been bad.
No, yeah, I guess, yeah.
If you're on the expressway and your engine blows up, like
Yeah, I'm just happy I'm getting a new engine. That's what
yeah,
I care about.
I'm glad you're okay.
40,000 miles on my car or something like that. And
Yeah.
it's all good.
Yikes.
So that's my
Nice.
deal. I was happy as can
That's
be.
good. Yeah.
Made it home. Had to walk from the dealership though.
They have a courtesy car. You did not have to walk.
She won't give me anything.
They
She
have
really
a
won't.
courtesy car.
Yeah, you took the bus.
I had
Yeah.
to walk
Public
uphill both
transportation.
ways.
Scooters. Yeah,
Yeah.
you could take a
Both ways.
scooter.
I walked both ways uphill.
You were gonna be fine. Nikki, how was your weekend?
I was good. It was good. Had our little party on Friday. Got to go out with all the youngins. It's fun.
Did you go to the after party?
Oh, yeah.
After the show,
Oh,
it's
yeah.
the after party.
Yeah.
What after party?
fun. Unc was out, doing his thing.
Did you shut it down?
Oh yeah.
Where did you guys go?
Down the block.
Down the block. I know there's some breweries and other stuff. There's a bunch of stuff up there.
Yeah. So it was a lot of fun. And then we got
Was it a lot of fun waking up the next morning? Because
No, that was tough. That's like 48 hours now is usually your after you
You can
get
make it?
No. After you get past like 30, the recovery time is about 48 hours. It's not like, you wake up.
Do you do any of these new like IV things or anything like that, or you just do the?
like the liquid IV?
Yeah.
No.
Like an element?
No, just
a couple
coffee
extra zins or something like that.
Yeah, throw a couple
Coffee
zins in,
and some hash
coffee.
browns?
Yeah.
Yeah, that'll get you right.
A
Do the
nap.
jalapenos. You got to do the jalapenos and the hash browns when you have a little bit of a hangover.
Ooh.
Yeah, get you
Seems
sweating.
like a way for some spicy acid reflux.
Yeah.
Well, jalapenos, however they say it. That's the way you say it. Mm-hmm.
So then what'd you do on Saturday? You just recovered on Saturday?
Yeah, just hung around. Nothing too crazy.
Yeah. The weather was not great.
Yeah, no harvest.
No harvest
No,
bowls.
no
Did you meal
harvest.
prep? Did you meal prep for the week?
No. Did make some chicken cutlets last
Are you
night.
meal
It was
prepping?
nice.
Do you have that kind of discipline?
Yeah.
Really?
Yeah. So
This always bothered me because I don't eat leftovers really. So you'll make food on Sunday and eat it on Friday?
I don't go till Friday. I can go
Wednesday,
till like Thursday.
And
Yeah.
it's the same thing?
But that's also my
Horrible way to
neurotype.
go
do
through
that?
life. I'm not gonna lie. What's that?
You can't do that. You can't do like
Eat the same
You don't do leftovers either.
No.
You're not a leftover.
But see, it's also my neurotype. Like I like routine and I like to eat the same thing over.
I get that.
Yeah.
over.
So you get a
But I s-
craving.
Yeah, but I switch up my meal. But I made Sunday gravy. No, but I made meat sauce. But I made my meat sauce, and it takes a while.
Yeah,
And so
yeah.
that's what I did. That's what I did last night for my meal prep for the week.
I can
and,
fry
'cause
pasta
and then
in
you
a
get
pan
the
the next day. I
protein
can do
pasta.
that.
You get the protein pasta too.
Ugh.
But I use ground turkey in my meat sauce. It's
Why don't
not
you do-
bad.
The gluten-free pasta, the
gluten-free,
protein
just the
pasta.
protein.
Your mother used to try to throw in the artichoke pasta.
Artichoke
That
pasta.
didn't go over.
That sounds better than
That didn't
some
go
of the
over
other
well.
ones.
That didn't go over.
No,
well.
they got
She
the
tried to do that.
chickpea pasta.
Oh,
They got
Lord.
No, the bands, that the chickpea pasta is not my favorite, but the barelli protein pasta is my favorite.
We love it.
Yeah, thank you.
Oh, there you go.
My house loves
Vote of
it.
confidence there.
There you go. Some
I like it.
good times all
Yeah,
around.
no, it's just it's the consistency and the texture. It's just not. It's not right. Like it's like
Usually
grainy
mushy.
and
Yeah.
it's like
All right.
doesn't
Yeah.
hit the spot.
Yeah.
But
Do you
each
make
his
your
own.
own? Do you make your own meat sauce?
Oh yeah. Oh
Yeah.
no. That I mean, let's be honest here. My wife Chris's best room is not the kitchen. So
She's an amazing
I
woman.
have to help her from time to time when she goes down that route. So yeah, no, I have to be in there. Otherwise, it doesn't come out right. Yeah.
I didn't know. Like if your grandma gave you or your mom gave you a recipe for.
No, unfortunately, I didn't have that good of Italian home. Like some families have that.
Yeah.
No, I mean my father wasn't around, and my mom was working.
Sure.
As a waitress and stuff.
Sure.
So we
We
didn't
weren't
have-
as Italian as we thought.
right. 73% ain't bad in this
They were
world.
close. There was a little Puerto Rican in there.
Oh, boricua.
Spanish, yeah.
Yeah, I mean, listen, we were out conquering, son. I mean, where we couldn't
That's right.
be out there
That's
just
right.
like sitting in one place.
Yeah,
I mean,
yeah.
Yeah, so I didn't get that kind of. My friend Mark, he had that kind of upbringing. That was
Well,
good.
Mark Scally.
Yeah.
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 Yeah, he had that kind of upbringing. That was good. So I lived vicariously through them.
So, but there's also Pinterest. That's where I got my recipe from, and I love it because it's dialed in. It's got some stuff in there that you wouldn't think to put in there, like mustard powder and Worcestershire, bay leaves.
Ooh.
Good.
I'll
And
experiment.
nothing from a jar. I don't use jarred sauce at all. I use like the diced and crushed
Yeah.
tomatoes and tomato paste.
It's so easy. You can make a sauce in like a frying pan. Like you can make a quick little sauce in a
Yeah.
frying pan. It's,
Yeah.
it's good. You don't really have to go to the jar, but
Yeah.
I know previous administration I used to be across from, he loved jar sauce.
Put it up on his wall.
I mean, yeah, it's sad. I mean, right, he would surround himself.
He made a shrine for
Yeah.
jarred sauces.
It's horrible.
I mean,
It's horrible.
Jesus.
Oh my goodness. Well, how was your weekend, Badge? You get in the sauna at all, or?
Oh, yeah. Got in the sauna.
The sauna thing.
So you're using it. So you're disproving all the haters.
Yeah, but this is the first year, so people
That
will
is
say
true.
it's the
That
first
is
year,
true.
it's new. It's
That
like
is-
a new
yeah, that's
girlfriend
true.
or something
That
like
is
that.
true.
It's going to start to get like gross and,
No, it's like
Put lights in there.
no, You kidding me? You can eat off the floors in there. You're
Oh, gross. No, don't do that.
Oh no, it's beautiful. It's beautiful. It's gonna be good. It's still gonna be good. Cold now. It's getting colder out now, so you can't cold plunge in the pool anymore, which was 90 degrees. You know what I mean?
Well,
Kind
you
of thing.
could.
Could, but not anymore. I'll be
Yeah.
covered. It gets pool's closed Tuesday. It's done.
Ooh.
That
Yeah,
makes
well,
sense.
I mean, net gas is up this morning, so I had to close.
You had a nice run.
It's up almost 6% this morning. Nat gas over $3, three and
That's
change.
the winter storm coming through.
That's right.
There
Right.
you go.
Seasonality, right there. There
Seasonality.
you go.
Yeah.
There you go. Hockey games. 1-1.
How
lost
did
2.
they win? How are they doing?
1-1, lost 2. Could have won 2 out of the 3.
Okay.
Yeah, 1-1, lost 2.
Is Vinny getting ice time, or is he?
Yeah,
Okay.
yeah. He's at the lower end of the range now, 3rd and 4th line there. So he's
The only way is up for him.
Mm-hmm.
So
that's right.
That's
right.
it.
That's
The
right.
only
You got
way
to
is
touch
up.
bottom before you get to the top.
Yeah, there you go.
Yeah. The boys are getting big. Boys are getting fast. Vinny's not.
Yeah. I mean, everyone hits their growth spurts at different times.
Yeah.
So
He's into his. We've been talking about it. He's looking into his cars now. You'd like this. He found a $9,000 2011 BMW X1 that he has his.
it's only 9,000. What's wrong with it?
It's a
2011,
BMW, and
I mean-
it's got 200,000 miles.
100 and something thousand miles. Not too many miles, right? But for,
You got to fix a BMW.
Oh,
It's going to cost you $9,000 to fix it when you drive
I
it.
have no interest in
Yeah.
it. But he's like, I told him, you need a beater. Expressway yesterday, coming home from one of the games. You put your life in your hands. Like when you go on the expressway, I tried to explain to him that, you try to, on the on-ramp, even before you even get on the on-ramp, you try to see how traffic is flowing.
Sure.
If there's a lot of traffic, what cars are there, maybe blue, red, yellow cars, so you can, kind of see, who you can.
Sure.
So he goes into it, and he goes like this. And as he's looking, the wheel is turning to the right. I got to grab it and push it to the.
Wait, he's going away from it.
He's going away from it.
Sees it.
Right,
Yeah,
because
come
he's
in.
turning his head like this.
Yeah. Everyone, when do we
Does he
all
know
start
that there's a
in-
mirror?
Yes.
We're working on the mirror.
Yes, we're working
on the
mirror.
mirror.
It was a tough one. My wife was in the back screaming. It was quite an event.
Yeah.
I gotta say, I blessedly got to learn how to drive in rural Indiana.
Yeah.
And so, I learned how to ride a motorcycle in Chicago, and that was a choice. But to learn how to drive a car in Chicago, that's hard.
Yeah.
Yeah,
I mean-
he's got a.
He has.
It's a different place to learn how to drive than Indiana.
Yeah, no, that's what I'm
he's
saying.
gonna need
It's
to.
the
You can't just bring him on the easy roads and have him
Right.
just fly by.
No, that's what I'm saying. Is the
Gotta-
learning curve.
So he
is-
wants to go out with you next. He says you're his best teacher.
I tried. We'll see. That was terrifying. I'm glad.
I'm going to
that
bring
he
him
has-
down this weekend. You could take him on the expressway. I'm just kidding.
We could start out in the suburbs. I think
You go early in
bumper
the
to
morning.
bumper Chicago traffic, I don't think is the spot for him, especially right now with all the construction that is everywhere.
Yeah.
People are
It is-
angrier than they've ever been.
Sure.
And it is as
It is a lawless
aggressive.
land.
It is Mad Max.
Yeah.
It is nuts out there right
Yeah.
now.
Yeah.
And
Yeah.
it takes 40 minutes to get anywhere in the city.
Yeah,
It's
yeah.
really
That's why you just got to throw in a podcast and just deal with it.
Yeah.
You can't get upset about anything. But especially we can't get upset here in Chicago. Bears have won 4 in a row. What are we even doing?
amazing. They're amazing.
What are we doing?
No, I'm just kidding.
I believe. Well, I bet against them, which
course.
aggravates.
You got to stop doing that.
First year, I'll be happy. I won't be happy to pay the money, but I'll be happy for the Bears. I mean, I'm a Bears fan. They just always disappoint. But I think they had the same record last year. I think they were.
Yeah, no, they were 4-1.
I think they were 4-2.
I think they were 4-1 going into the Washington game, and then that was when
Oh, the wheels fell off?
Yeah, I think they went 4.
Yeah, they shattered our dream.
I don't remember.
I think they were 4. They're 4-2 now, right? Are they
4-2.
Yeah, I think they were 4.
I think they were 4-1. It was something like that, or 3-1, something like that. Yeah.
I think they had the same record last year. Yeah. So let's just wait before we crown them Super Bowl champions.
Okay.
Mm-hmm. But I'm happy for them. They played good.
Got a poo-poo.
No. I'm just being realistic.
It's just...
You know me as a realist. I'm just being realistic.
Yeah. No, it looks good. They got to still clean up the... there's a little bit to clean up.
Sure.
False starts, the missed handoffs. There's a lot of little things that you got to clean up.
Not watch the game. I went to Costco, but...
How was that? Busy?
It was a choice, yeah. But I didn't have... I have to be here today, so I can't go to Costco today because I'm here. So I had to...
Oh, you can't go after work?
Yeah, because I got to get my nails done.
Oh, I thought that was like... Because Sunday you do the special people...
No, I didn't get up early
people,
enough. I went to the gym Sunday, and then I had to
James just said you're right. They were 4-2 last year as well.
Yeah.
Yeah.
But he said they're much better than last year, though.
That's right.
You will see. Okay. Well, technically, the state that is dominating football right now is Indiana. The Colts.
Yeah.
The Colts are 6-1.
They are.
And my Hoosiers are at number 2. Is Indiana the greatest football state in the land? No, please don't write me. Just let me have this. But I'm very proud. It was homecoming. We beat Michigan State. We got to keep the old spittoon. I don't know why we trade a spittoon between the two teams. So there's an Oaken bucket between Purdue, but then there's a spittoon between Michigan State. I was like, what are we even doing? But I like the old
spit, like.
Yeah. I like the old tradition. So the spittoon stays.
I had a spittoon when I was a kid
in Bloomington.
I loved it. I bought it like in upstate New York, and I really did. I didn't spit in it. I just thought it was.
What would you do with it? Like,
nothing. I just had it. I used it as a garbage pail in my room because I bought it in like upstate New York, and I thought it was probably only like 10 years old, but I thought it was like from like
So wait, you drove upstate New York to go antiquing?
You didn't get out much, okay?
My mom took me up to Fort Ticonderoga.
Oh.
As like that was like a weekend excursion.
Sure.
So it took me up to Fort Ticonderoga. So I bought one.
How much did you pay for this spittoon?
Oh, I don't remember. But it was all beat up. Like it had like a dent in it.
The brass?
Yeah.
Yeah, nice.
Yeah. I used to use it as a garbage, but I thought it was like from some I envisioned.
Like the Civil War.
Yeah, exactly.
Yeah.
Exactly.
Like General Grant spittoon.
Yes.
Yes.
I imagined all the heroes that's sitting there.
Yeah, because you're at Fort Ticonderoga. Yeah, but that was not. It's okay. Mm-hmm. Hey, we got a great show for you today. It is a magnificent Monday here at Tasty Live. At the top of the 8 o'clock hour, Kai is coming in. He's going to forecast what he looks at when he's looking at the markets and how they might participate or react this week. So that's going to be at 8 o'clock. Then at 8:40, we have an options jive. Forward curves.
Ooh.
What are forward curves?
Futures.
Oh.
Like predicting out prices, different prices.
Backwardation.
Yes.
Okay.
Tango, backwardation.
You guys are just saying words.
Buzzwords.
Okay, well, forward curves ahead. That's at 8:40. And then at 9 o'clock, we have a market measures. When traders panic, what IVR and volume reveal. That will be interesting. And then 9:20, live from the trade desk, we have Quentin and Ryan in the house. So a little Q&A with Q&R. I tried.
Good.
That was good. No Dr. Jim today, so we don't get our,
Right, yes. Dr. Jim had his live show in Detroit last night, and also Dr. Jim's new options crash course for beginner traders is now live on our YouTube site and here.
And we're going to display it. We'll show it at 1 p.m. today, too. Which is very nice. First time.
Great.
Mm-hmm.
Cool.
Great.
Beautiful.
So, thank you to everyone who came out in Detroit to see Dr. Jim, but now he is traveling back to Florida, so he won't be on the show today. But hey, you are stuck with me. Sorry. Do you want your daily dose? You don't have a choice. Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire. Leading story. Top story. Just in.
In today's headline.
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's October the 20th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
First headline of the day, gonna have a lot of interesting data coming this week ahead. The NASDAQ and S&P both clocked rebounds after the prior week's slide caused by China's tariff concerns. But on the horizon this week, we have Tesla and Netflix reporting their earnings, which will be big. We're going to get some late inflation data, but that's better than no inflation data. And
I believe it's Netflix first, then Tesla.
Yeah,
yes.
Put it in order.
Yes, you are right. So yeah, Tesla is after the market on Wednesday. So that will be in view. They're going to roll out their robo-taxi and their robots and other things. And then Netflix has their earnings on Tuesday. And then also some defense aerospace buyback. So some of those stocks moving around. What are you guys looking to happen for this week after last week?
I mean, right now it looks like, we're at 67.22. You talked
gone
about it 2
nowhere.
weeks ago. We're going sideways at 67. I mean, but we've had a violent week. Volatility is up. It's 2041. It's down 22 cents, but it's elevated for most
We're in day
recent
20
range.
of the shutdown. The beige book that came out last week was not super great. Other economic indicators are softening.
My friend of mine reminds me NASDAQ's up over 18%. SPX is up over 13%.
I'll take it.
Russell's up almost 10%. Dow's up almost 9%. So, I don't know. Maybe you think the NASDAQ gets a little bit weaker here, but for us to continue this rally, I think the NASDAQ's the one that's got to take us to the promised land.
It's hard to fade the big name stocks into earnings. It's usually a nice time
Tesla
to be
the
long.
first one coming. I mean, Netflix too, but sure.
It's interesting. Gold's up $96 this morning. Big
Gold
crazy.
Just you wait.
They raised.
Just you wait. I have a gold tip. We'll get to it. Just
I
2
want to talk
seconds.
about gold because.
But I do want to get to currencies real fast. The yen seems to be easing. I guess the new Japanese prime minister is set to take throne. I don't know what they have in Japan on Tuesday. So the yen weekend Monday because Sanai Takachi is an advocate of fiscal and monetary stimulus. And like I said, the new prime minister should be installed. That's the word I was looking for. On Tuesday, the safe haven currency also hit by an improvement in risk appetite. Let's talk the dollar, yen, euro.
All the currencies are down. You just mentioned the yen, but the euro's down, the pound's down, Canadian dollar is down, which means the dollar is stronger. Now, they all are going kind of sideways. Maybe the Canadian dollar is a little bit weaker than the rest. From the most recent range right now, they've been going sideways. So dollar catching a little bit of bid, currency's going a little sideways.
Yeah.
What about bonds? Bonds had a massive move last week.
Yeah, which remember, as bonds go up, interest rates go lower.
Yes.
Bonds are up 3 right now. They've been unchanged most of them. They've had a pretty tight range. They're actually at the higher end of their range, only up 3 ticks.
Okay.
118 and change. High end of its range.
America's wealthiest shoppers are boosting spending and the U.S. economy, but lower earners are pulling back. Americans making over $100,000 a year are boosting the U.S. economy, with industries ranging from travel and the auto industry to packaged foods and even dollar stores. The consumer is a high-end consumer, and they're not stopping, baby. But again, this is kind of just glossing over some of the cracks in our economy because I don't know how sustainable this is.
American Express had earnings on Friday last week. It was up like 2x the expected move, $10, $15.
Yeah, it was around 325, 30 or something like that. Got up to almost 350.
Whoa.
That's kind of the gauge of
Sure.
the higher end consumer.
Sure.
So it's at highs.
Sure. And also the airlines, too. Like, they're like, yeah, people are still traveling. People are still
In this economy?
People are still paying the stupid prices we are making up. So they're just going to keep doing that. Hey, gold. There we go. Gold prices are so high. Even central banks are feeling FOMO. The gold prices at record highs. It sounds like a broken record, but we just continue to set new highs. But even central banks have continued to buy more than they're selling, even with prices at their highest levels ever. What do we do in gold, and what is it doing this morning?
It's up almost 2.5%, 2.33%, up almost $100.
That's a lot.
4,300 and change here.
Yeah, back near
Crazy.
its highs that it made Friday before it fell off, I guess, right?
Mm-hmm.
They raised the margin requirement. The brokerage firms raised the margin requirement.
Oh, they did.
That's typically, they did that on Friday. That was the big sell-off. That's typically like, like we have an.
And that probably comes down from, that's probably like a clearing firm / CME change.
Oh, it's from the CME.
Yeah, it's not like the broker.
No.
Like,
Tasty didn't do it, or ABC brokerage firm, or whatever didn't do it.
Yeah.
No, I mean that comes from the exchanges, and then they pass it on, just like everything else. That event. Typically, maybe we should do actually like a little option jive on that. Usually leads to a reversal in the market move, one way or
the raising of margin.
Yeah, almost like when you have an underwater close
Sure.
on the S&Ps versus SPX.
Sure.
And the S&Ps trade past 3 o'clock. SPX, closes at 3 o'clock. That usually marks kind of a stoppage in that move, one way or the other. Same thing if it's an overwater, if they close too rich kind of thing. I'm really surprised by this move. Now it's either
it's become like irrational at this point.
Right,
almost.
right.
Yeah.
I mean, or this thing's got legs, as most people feel, and in social media feel. It's got legs that you haven't seen before. Volatility through the roof in gold too. So
I've been watching. I mean, like you see gold mentioned on like mainstream financial media, which is not something that like gold has not been talked about for years and years and years.
Sure.
And now you get all the tech bros come on and talk about how they've loved gold for the last 3 or 4 years. And like it's
See, Liz is the OG.
Liz is an OG. Frankie's the OG.
Yeah.
But yeah, usually when you get the mainstream media talking about it is usually like when we're near the top. So
Sure.
I'm hoping that's the case.
Just take a look at all your parents' Facebook pages. I don't know. Hey, in other commodities news, oil steadies after a weekly loss as investors continue to weigh U.S.-China trade. Oil was, I guess, steady overnight after posting a third weekly decline. Brent held around $61 a barrel. Let's talk oil. Inverse to gold.
Yeah,
painful.
It's inverse to every commodity, really. I mean, every commodity's higher except for oil. It seems like the most widely traded ones, at least. I mean, oil's been on a kind of a slide all through September into October from around $65 down to $56, $9,000.
Why is gas not cheaper?
Yeah, I've always argued about this, and I don't want to
because they had to go to their pumpkin spice blend of fuel. Like what? Like
that's usually.
Right, no, it's the pumpkin spice blend now. It's the.
Yeah, I don't want the true oil traders to send me the email about how it, the cost to, store it, and there's so many different, the breakdown of it. That's why it doesn't reflect just in the barrel of oil. You're not buying oil at the gas pump. You're buying gas at the gas pump, the refinery. I don't want to get through it, but it doesn't seem to have a very good correlation.
I mean, I have $61. Like, I'll just buy a barrel of oil.
Yeah, that would last you a pretty good amount of time.
You can get it cheaper than that.
Right?
$6.70. Yep.
I will do it.
Rough.
Hey, in other news, as the crypto mining industry evolves, some of the biggest names are making a dramatic shift from the traditional world of Bitcoin mining to the booming sector of AI and high-performance computing. There's a couple of companies that are making the shift on Wednesday. A company that is called BitDeer, BTDR, saw their stock jump 30% after they unveiled plans to transform their facility in Ohio to be more AI dominant. I don't know if they have options on there, but we don't ever talk about the Bitcoin miners.
BitDeer.
BitDeer.
That's quite the name. How'd they decide on that one?
BitDeer.
It has $half wide strikes now that after expiration. A lot of things have $half wide strikes and dollar wide strikes after expiration on Friday. That's the monthly expiration that we had on Friday. This one is not really tradable, 40 to 70 cent wide markets on it.
Well, how about TerraWulf? WULF. It's up 155% year to date, and they are based in Maryland, and they are expanding with a $3.2 billion issuance of senior.
Is this the one that had the
notes.
reverse?
No, that's Wolf.
Oh, Wolf, WOLF.
Yeah, this is
sorry.
Wolf Speed.
Wolf, WULF.
I get my wolves mixed up.
All right. And then last but not least, the tried and true Riot. Riot.
Yeah. Mara is the other one that's kind of
Yes.
the more well-known of the group. I think all of these, they have a high correlation to Bitcoin, or at least have, but it's not the same magnitude. So
Yeah, but now it's all about AI, Nikki.
I know, that's what I'm saying, is now maybe, they'll have the
wait till I
AI.
get the AI cloud going. This is going to be nice.
AI cloud Bitcoin.
It's going to be amazing.
What is Bitcoin doing this morning to start the week?
Bitcoin's up big. The futures are up almost 4%,
Oh, nice.
4.25% to $4,500 to 111 and change. If you remember, on Friday they were down under 104.
Oh, yeah.
104,000 to 111,000. So Bitcoin quite a bit.
Risk on.
What's that?
Risk on.
Risk on. This is the old low from back in September and August that it would go from like 125 to 111, 125 to 111. So I got a lot of emails about people saying this 111 area, for those who follow technical analysis, might be a little bit of a hard ceiling to get through, at least the first time. Take it with a grain of salt.
Also, speaking of the cloud, Amazon Web Service reported a massive outage overnight affecting multitude of things from Reddit, the website, to Coinbase, Robinhood, other things, Verizon. The systems should be back online this morning, but if you're experiencing any sort of technical difficulties with anything, it's because everyone, a lot of companies use Amazon Web Service.
Blow on the cartridge.
Yeah.
Log off, and log on. It'll
So
fix it.
just putting that out there.
Amazon's unchanged. Coin's up, obviously, with Bitcoin up big.
Yeah.
So Coin's up almost $9 or so.
Here's something that's dastardly. I don't get to use that word very often, but yeah, this is dastardly. Companies across the US and Europe have been cutting staff, and they're citing the impact of artificial intelligence, but there may be more than meets the eye, because the layoffs were probably they're scapegoating AI. These companies just probably overhired during the pandemic, and they're like, yeah, we need to lay people off, but they're like, we don't want them to feel super bad, so we're just going to tell them that it's AI. But I guess it's not really AI. Like, which is worse, that you were replaced by AI, or that, like, no, we just don't need you?
How do you want to be let down?
Right.
Yeah.
It's not you. It's me.
I think the AI would be worse. Like
I want it to take like a quantum sort of computer system to replace me. Like, I don't know.
Yeah, but that depends on like what you're doing.
I know.
I don't know. Either way, yeah, it kind of stinks.
Well, companies are just straight up lying.
Is this like, it's like you have a great personality, but I have to let you go?
Kind of. That's what it is.
Is that what it is?
We like you, but we
Yeah.
found better.
It'll be interesting to see how this continues to play out. But OpenAI is going to have to spend over $1 trillion to deliver its promised computing power, and it may not have the cash. OpenAI is spending like a like a stockbroker on spring break, but they may not have the funds to back it up. They've been making deals with literally everybody in the industry, but people are doing the math, and they're saying the company is going to have to spend $1 trillion over the next 5 years to deliver the massive computing power they promised to deploy through their partnerships with NVIDIA, Broadcom, and AMD, and people.
Was that with a T?
Yeah,
T.
T
Yeah,
with the
yeah.
trillion.
Big number.
So this whole thing is all smoke and mirrors.
We've gotten past the billion. The 100 billion, 200 billion.
I remember as a
those
kid,
don't move the
say
needles
trillion,
anymore.
and then you basically won.
It's a jiggity billion.
Yeah.
But there's also
Google
falsely,
Googleplex.
Googleplex now?
Whatever.
it's also
now.
falsely propping up our economy. Does this not worry you?
I don't know. Falsely? What is that?
Yeah, I don't know
Everything
what that
props up the
means.
economy. I don't know.
Okay, all right.
What worries? What are you? Look at my hair. Look at me. I got a full head of hair. What's worrying me? Nothing worries.
Let's look at Broadcom and AMD, because I got an NVIDIA story after this. But let's look at Broadcom, AMD, SMH.
AMD up around $4. AVGO, which is Broadcom, up around $3 or so. AVGO has been a leader of the clubhouse. It's one of those chippy things, like you just mentioned, up near its highs. Hasn't really sold off that much. Every sellout's been met with.
Wall Street is growing louder with warnings that the AI trade may be overheating. After months of record gains in AI-linked stocks and corporate spending, concerns are mounting that the boom is starting to look like a bubble. This is what I have been saying. How can you position your portfolio for.
You're getting very public. You see, when they put these out there, they need.
You've been saying bubble all year,
right?
I mean, you've been saying every day the bubble.
They need to buy.
Yeah.
They start saying the opposite, then we'll go lower.
Yeah.
Right now,
Okay.
to buy. When they say we should all be in, that's when they're selling. Come on, you got to be cynical here.
Yeah.
Do you see
Never
sector,
to go through life being so happy.
Do you see sector rotation or stuff people just
No, Nasdaq's up
funnel
20%. Rest market's up 10%. It's only good and better right now.
That's a good way to put it.
Okie dokie.
I mean, it is what it is.
I mean-
the only canary in the coal mine right now is volatility. So you're going to get some short-term movement in the market. Like you could probably sell these ranges. I mean, even the S&P's expected move for today is closer to around $30 today. We're up 23. So we got a little bit of a bid. Maybe, you can sell into a little bit just because volatility is there.
Sure.
Yeah.
You can have some two-sided action.
Two-sided action for sure.
Well, NVIDIA unveiled on Friday the first U.S.-made Blackwell wafer that was produced at Taiwan Semiconductor's manufacturing facility in Phoenix as the demand for AI chips accelerates. It was the first debut of the U.S.-produced chip. What are you doing in NVIDIA?
Unchanged at 183 right now. Its high was 195. Its low for the last 3 months or so has been 165. So
Right in the middle.
right in the middle of the high end of the range.
Sorry to go off topic, but the chat's saying that if you say bubble 3 times, you get the bubble video on the break.
Oh,
And
that'd
so
be nice.
now we've got to tee up the bubble
We got to tee
video.
up the bubble video.
No.
Oh, that's not gonna
Bubble
Yeah, bring back the bubble
That's
video.
not going to make anybody happy, by the way.
Yeah.
Toilet bubble.
James, bubble video, please.
Bubble video, please.
On the break, thank you.
Nikki, what are you doing in NVIDIA?
We've been selling volatility there. It's actually like not been participating in really either direction. It's kind of found its price here.
Okay.
And it's been between like 175 and 185-ish. I mean, it's been kind of choppy here. So
Earnings November 19th, Ivy rank of 30. There's better Ivy ranks around.
yes.
Micron is going to exit server chips business in China after a ban. That's according to sources. Micron's going to stop supplying server chips to data centers in China after the business failed to recover from a 2023 government ban on its products. What's going on in MU?
What would you think from that headline?
That it would be up.
It is up. You are right. 210. That would be a new high in MU, which made a new high yesterday and the day before that too. MU has been
Crazy.
Yeah.
120 to 220 in a month, 2 months.
Yeah. No. You're
100%.
there.
That is crazy.
September 5th, it was 120. It's 220 today. Big move in MU.
Yeah.
Microsoft is also the latest company to start decoupling some of its business in China. The big tech giant has asked multiple suppliers to prepare out of China production for the company's Surface laptop computers and data center servers. Microsoft wants to manufacture parts and components and assemble products for new notebook computers and servers outside of China starting as early as 2026.
Microsoft unchanged at 513. It seems like that's where people kind of park money for some reason. I mean,
In Microsoft?
yeah, I mean, it doesn't. I mean, it's pretty solid. Like
Sure.
it just meanders around slightly higher. It's been going, sideways to up small. It pays a dividend of 90 cents. I mean, I remember when Microsoft was a $30 stock, and now it's a $500 stock.
Yeah.
So
Well, they pumped $1 trillion into its market cap since May, so it's
T, right?
Yeah, with a T,
Who's they?
The market,
The government?
the evil hand.
Yeah.
Yes.
What are you doing in Microsoft, Nikki?
Ivy rank of 38 in Microsoft. I know you asked Dickie what he's doing, but October 29th is earnings. Has earnings in about 9 days. You have a Microsoft position?
I don't have a Microsoft position, but we'll probably. I mean, like all these stocks are going to be in play for earnings, so we'll be looking at those over the next week or two.
Chinese tech giants are pausing their plans to get into stablecoin after Beijing steps in. Ruh-roh. Chinese tech giants, including Alibaba-backed Ant Group and e-commerce JD, have paused plans to issue stablecoins in Hong Kong after the Chinese government said nope. They raised concerns about the rise of currencies controlled by the private sector and not the Chinese Communist Party. So what are you doing in Baba and GD?
They're going to stop these plans real quick.
Yeah, they're going to stop this show.
Yeah.
Baba unchanged after making highs around 190 down to 160 or so. Since I mentioned September 5th, that's when the market kind of took off. Baba did 125 to around 190. It's back down to 166 or so. Baba, one of the few stocks that's down small this morning. IV rank of 50 in there. Earnings coming November 21st.
We put on that trade for either was it Fast Market? I think it was Fast Market.
So.
On Friday?
Or no, that was Julia's trade. Trade from the research team.
Thursday, there you go.
Yes.
So we did the 145, 200 strangle. So we're wrapped around, where it's been trading.
Are you doing anything in JD?
JD, not something I usually trade. I don't think you have a position in it, do you?
No.
$32 and change, down small, about 10 cents. Maybe Chinese stocks.
Look at that one.
Take a breather this morning.
Okay. I just thought I would put it out there.
Yeah, no, good IV rank of 54, has earnings November 13th. Markets in JD are tight, now has $half wide markets, so you can be even more selective in there. $half wide strikes, I should say.
There you go.
You can be even more selective in there.
Hey, just a mere, 60 days after Bat and Tom flew it, Grupo Aeromexico said on Friday that they're going to do an IPO. They're targeting a valuation of $2.92 billion in a U.S. IPO. The Mexican carrier looks to go public again after over 2 years.
No comment.
You didn't like flying Aeromexico?
No comment.
What is it like a lower end airline or is it?
No comment. No, I mean, it was fine. It was just all the airlines are basically the same.
Yeah.
They're seeking 200.
That's my story. I'm sticking to it.
Are you getting held at gunpoint here? What is
You getting threatened by?
Yeah, I'm like.
No, I want to go back. Tony from Mexico was a great host. It was a great host, so I just want. I want to go back. I would take a donkey there if I had to. It wouldn't matter to me. I want.
Aeromexico is seeking up to $234.5 million by offering 11.7 million ADS. That's American Depository Shares, priced between $18 and $20 each. The company filed for Chapter 11 bankruptcy protection in 2020 with $2 billion in debt. So. We can all turn our lives around. Hey, shares of Eli Lilly and Novo Nordisk dropped Friday after President Trump said he just blurted out during a press conference. He's like, we're going to make Ozempic $150. And then Dr. Oz, he was like,
maybe cheaper.
We haven't negotiated that. He's like, but everything's on the table. And then so they kind of had to walk this back. But you can get these drugs for $4.99 at Costco. Yes, $150 would be great, but you have to ask the manufacturers if they will give it at $150. You can't just decree it. But whatever, I'm not the police. Eli Lilly.
Always one of the bigger movers up and down in the high option volume list. Although I don't know who's trading Lilly because the market seems to be a little bit wide in there. $801. Let's just call it unchanged. 802 and change. I don't know, not a great trading vehicle in my mind, but always one of the bigger movers. So if you have a directional bias in Lilly, you really can get a lot of bang for your buck.
Something else moving this morning, Hims.
Ooh.
Yes.
It was up $8, then down $8.
Well, if they're going to fix perimenopause, God bless them.
They're doing
no comment.
Yeah.
Leave me alone.
No comment.
But Hims is up, I think, $1.50.
It is approximate. You're right. It traded up to around 65-ish or just under, down to under $50.
Yeah.
And it's sitting at 51.25.
That's a bonkers move.
On the bid.
Yeah.
Yes.
We got a strangle in there, so this move should help into the
IV rank of 65, sorry. Quite
That's
high.
pretty good, though.
And continuing to go higher. Let's take a look when it has earnings, November 3rd.
Okay.
So looming.
This story comes from the nobody asked for this department, but Kohler. Yes, that Kohler, our neighbors to the north. It's very wonderful.
Oh, yeah.
We've never been to Kohler, Wisconsin. It's very beautiful.
Great golf.
They have spa, they have golf, they have little something for everyone. Well, the Kohler company is unveiling a camera for your toilet.
Why?
Whoa.
Listen, wait. It's called Dakota. It's $600. It's attached to your toilet bowl. And it takes a picture of what's inside and then analyzes those images to provide updates on your gut health and hydration. Why?
Do you get like an update?
Can't we just look at feet? Once we go
It's currently available for pre-order with shipment scheduled to begin tomorrow.
This is like when I watch a commercial.
You will also need to pay between $70 to $156 for a Poo Cam subscription.
Yes. And they're going to send you an update.
I'm not kidding. I'll show you. So the camera's $600, and then you have to pay another $70 to $156 for the subscription.
Like, I'll watch a commercial on TV, and I'll say, they paid like $1 million for this thing, and I'm saying to myself, who came up with this stupid idea of, like, this commercial? Who came up with this idea?
I have friends that will probably be on the wait list for this.
Really?
There's the bowel problems. It runs in the group.
I mean,
really?
if you could have it analyzed by like an expert and you don't have to like, I mean, I guess. I mean, so they make litter.
You had Mexican food.
No, listen.
Okay, that's all it is. It's all right.
Hey.
Listen, they make a cat litter that the crystals of the litter turn different colors. Like if your cat is having different problems. No, like urinary, because cats have like kidney problems and like
Why
other
don't we
stuff.
just poop in there?
Right, no, but I'm saying, well, because cats can't talk.
No, we humans should just poop in there. If they made it for the cats, you got gut issues.
Yeah. Well.
Does it send you instant updates though? Like,
I'm not sure that it's instant.
Good morning, Nick.
You
didn't have enough fiber this weekend.
Listen, there's a fingerprint sensor to identify.
No, that's not a sickie camera. That's my poop camera in the bathroom. I'm not a pervert.
Like the Aura Ring. The Aura Ring tells you like you've been sitting down for too long. This one tells you.
You can put your poop in a jar and have it analyzed.
Not every day.
Yeah, not every day.
There's also
want instant update.
You need it analyzed every day?
You want to know how it's trending? Look, there's a fingerprint sensor, and it detects different members of your family. So that's a lot of utility. You got different people in your family. So you can go on the Kohler website, and like I said, it's available for pre-order.
Did you text your friends? Oh, you could text them on the break.
I guess. I don't know.
I can't wait to send this to them. They're going to be incredibly excited.
Excited? It made their whole week?
Oh, yeah.
In a story that has captivated me over the weekend, in a 4-minute strike, thieves used a basket, I don't know what this piece of construction equipment is called, but one of those baskets, a construction basket. They go into an upper story window, break through the window, steal all the jewels, run out. They leave like a crown on the ground, hop onto scooters, get away. The Louvre is then shut down. They've been having staffing issues and overcrowding. But see, here's my question. I don't think that the jewels and stuff, or even the art that's displayed, is the real thing.
Is that a conspiracy theory?
No, there was a documentary that I watched on Netflix about these guys in London around the year 2000. They tried to steal like this fancy diamond or whatever, and the guy from De Beers, he was like, "Yeah, it wasn't the real diamond." I don't think these are the real jewels. I mean, yes, it's upsetting, but
all right. So I could see your point, and I don't know if it to be.
But wouldn't they say it after the fact? Like if they were.
Well, not even that. Wouldn't the thieves, like who went through all this trouble of all this planning to get through with all of this, know that the stuff they were stealing was paste? Like it wasn't real.
Yeah,
diamonds?
I don't know. This also just seems like a marketing campaign for a movie.
But
Man, we've gotten so cynical.
I know, I'm so jaded.
We're thinking like, oh yeah, this isn't a robbery. It's just a movie.
I'm so jaded.
I know.
But anyway, these were the Napoleonic jewels, and they're priceless.
Right.
So.
And where do they take them to sell them?
Right. Sure. But with jewels and stuff, you can cut them into smaller pieces. I guess. I don't know.
That's got to kill the value of.
This is your family's expertise, not mine.
Hey.
You need a fence.
You got to go to a good fence.
You need a fence.
You need a good fence.
You need a fence.
Call me.
Then you do that. Hey, Apple and F1 have reached a 5-year media deal, bringing all races to Apple TV streaming in the U.S. Apple's paying around $140 million per year for F1 rights. ESPN had been the most recent broadcaster of F1 races. Apple is desperately trying to get more sports programming, also inking deals with Major League Baseball. What is Apple stock doing? I'm not a big F1 fan, but I watched the movie.
Movie was great.
The movie was good.
I've gotten more receptive to F1.
Oh, good,
Okay.
good.
Yeah.
And the F1 series is great.
Yeah. I just don't know enough about it. But I mean, I like
Learn
to.
quick, I'm telling you.
I
you
like
would
to
it.
watch the drivers walk in slow motion. Like, I'm not mad at. I'm not. I'm not mad at Lewis Hamilton's face.
$2.56 and change. Apple
$4.
up around $4. Catch a little bit of a bid here. Been going sideways since September. Now at the high end of its range.
Finally today, this is great. Shout out to the originator of this premise, which I believe were the Milwaukee Brewers, where they had the sausage races, that go around. But then every stadium, every arena, then had their own, race. So this is at Shields Arena, and it was college night. So they had beer races, and it was hilarious. Watch this. All right, who you got? Who's like
Truly, I'll go through.
Take the Bush. Bush is gonna put it get in there.
Truly.
Oh, Bush takes a fall.
Bud Light stood up.
Yeah.
Look at his legs! Bush, the dark horse.
Oh, no.
Oh God. That's gotta.
No.
I don't know how much padding is in there. That's gotta kind of hurt a little bit.
Oh, my God, it came in last.
Oh,
that's
thank you.
cool.
That
That's
was
good.
So good.
That's good.
That's better than shooting pucks into the net.
Yeah, and that's better than like the Dunkin', the
Yeah.
fake Dunkin'. You gotta have real skin in
This
the
is
game.
good.
You know.
This is good.
Yeah.
Somebody broke her nose, too.
Yeah.
Yeah, I know.
For sure. For sure.
That's great.
Good job out of you. Good job out of them. We're going to take a quick 90-second break and come back. We got more Tasty Live with Confirm and Send next. We're back in 90 seconds. Tasty Live.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son, and you know what that means. Time for a little bit of confirm and send, but before we do, let's take a quick look at the market. Even the S&P's up 29 and change, near their highs, about 7 handles off of their highs. You can see they traded down to just under 7,000, which would put them down around $7 or $8 or so. NASDAQ up 129, Russell up 26, and the Dow up 143. Volatility in by 37 cents. It's about as low as it's been recently, still elevated over 20. So you're going to have an expected move in the EM and the S&Ps. Now only around 30, so it's come in a little bit, almost 7 handles from this morning. Bonds are up 9 ticks, 118.24. As bonds go up, rates go lower, or should at least. Bitcoin up $4,290 to just under 111. That's a 4% move. You can see here, got all the way down to 103 and change, I believe, on the low, 103.7, up to the highs now of around 112, 111.8 and change. Oil down 50 cents. That's the only commodity that can't catch a bid. IV rank of 34 in there. Gold up 123. No words, son. No words.
Yeah, we've pretty much reversed, most of the move. It got to 44 and change on
come on.
Friday.
We're at highs. It reversed.
Oh, no. I mean the one down day that we've had.
Right.
They
raise the margin in there. It's usually a aha moment for the move.
Because it takes away liquidity. It's harder to hold that position.
Yep.
And so
you
figure
I'm really surprised by this move, but hey, nothing surprised me anymore.
No.
Silver up around the same, 2.5%, a little bit more, 130 and change, but off of its highs. That's all I got for now. Let's get to confirm and send. And then we got Kai coming in with the Research Corner.
Let's do it.
I'm ready. How is gamma scalping used to manage risk in a short options portfolio?
I think if you're using like stock, is that what we're talking about here? As like a way to?
I think what they're saying is you have short calls and puts. You come in. Your trades are delta neutral. Let's just let the stock beat me. And so now you've got
a little bit of short delta. You buy some stock.
We got short delta as you go higher, long delta as you go lower. You get the opposite. How do you kind of mitigate your risk? Do you really use stock to mitigate your risk?
No, I think it's just not a capital efficient way to do it. I think you have to kind of withstand these moves and lean a little directional, especially with volatility where it is right now. If volatility is lower, then maybe I could see a point to get long gamma, whether it be with long options or just stock positions. But for the most part, I feel like you got to kind of lean into directional moves a little bit.
Totally agree with you. I think you got to roll down the untested side, cut your delta by half. I think the mechanics stay the same. Roll your puts up, cut your delta by half. As long as you're getting in with high IV rank, it's the entry that you're looking at. Really, the key here. High IV rank. As the stock goes lower, typically the volatility will contract a little bit, so you won't get as long as you think. But as it goes higher, you're definitely going to have to roll up those puts because you're going to get even shorter because volatility is probably going to expand in these products you're trading, like NASDAQ type products. Next question, please.
What influences your decision to hold or close in the money spread positions before expiration?
Ooh. What influences your decision?
You don't want death by paper cuts?
Yeah.
And also the probabilities don't really change all that much. So if you have a $5 wide spread that's at the money versus just outside of the money, they're basically the same. You're still a 50-50 shot. A lot of spread trades are going to be in the 50 to 70 range. You don't have high probability spread trades. So you should expect to have those spreads be tested or even be in the money at some point prior to expiration. So, I think that's what influences me is that, if you're right at the money, the spread doesn't move all that much.
Yeah, I think you're making this decision on entry by going to a vertical spread, which I think that's what they're talking about here. And if you're going with the vertical spread, then I'm probably just going to hold it. I'm directionally wrong, and I'm probably going to hold, like you said, a cheapish $3, $5, $10 wide spread. I paid half the width of the strikes. It was a 50-50 shot. I'm going to wait for the direction or my expectation direction move to pay off. You could sell the opposite side. Let's say you bought a call spread and the stock went lower. You could sell above call spread and make like a condor, not an iron condor, all one side. But typically, you're not going to do that. You're going to probably just sit with the spread that you have.
Yeah, especially if it's a tight spread.
Yeah.
You define the risk on entry, and that's it.
Yep. Next one. How do you manage long-term covered call positions when special dividends are announced?
This is a tough one. I mean, the special dividend won't be priced in to the options because it's special, just like you.
Yes, but you got to remember before you go any further down that rabbit hole. It's not gonna. Not only is it not gonna affect your covered call, the
strikes are going to adjust. Everything adjusts. If it's like when Costco had that $15, it was like a huge special dividend that messed up everything. It screwed. Remember, it screwed up the QQQ strikes.
Yes,
because it was so big that it affected the Qs had like a 4 cent or 5 cent. Yes. Special dividend based on the Costco dividend.
That's correct.
Which adjusted all the options, and so
it adjusted all the option strikes.
All the strikes
themselves changed.
Of any expiration that was open at that time, including like the leaps and further out in time. We probably still have some that we're gonna, find.
Sure.
Well, market is up significantly from that point, so they're probably way out.
Sure. Yes. So it doesn't change your position at all. If you had the 300 strike, you'll have the 285 strike. And you'll get $15 if it was a $15 dividend, so special dividend. So hold steady, nothing changes, nothing for you to do. I mean, people consider it a good event. For the stock price, I would consider it a non-event one way or the other on future direction. It just means that company has money sitting on the sidelines that they don't know where to put, either in buying their own stock or buying a new company, and they're going to give it back to the shareholders. Special dividends are okay and typically good for covered calls or anything else like that.
Normal dividends, if you intend to keep the stock,
if you're long stock, short call, and your call is out of the money or at the money, you're fine with the.
But if they want to have this on for a long period of time, you want to roll out and be somewhere where the dividend doesn't come into play for your short call.
Okay. Next question, please.
When volatility drops sharply, do you close out of trades or hold for potential rebounds?
I don't know. Am I up money? I mean, usually I'm playing for volatility contraction, and if I get volatility contraction, my position is going to be a good one, meaning it's going to be a profitable one. So I'll probably look to close out the trade. Now, listen, nothing's set in stone, but if I put something on with an IV rank of 60, let's go like, forget about even putting out a number. Let's just say it was an earnings play, because that's when you get sharp volatility drop, and the stock stays inside the expected move. You're going to get a volatility drop. We usually look to take it off. The play is done. It's over with. It goes. Now, if it's not an earnings play and I'm just in something that has a relatively high IV rank and am in between my two short strikes and the stock stays there for a week or so and volatility continues to contract, I'll look at it and say to myself, do I want to stay in here or not? I'm usually having my finger on the trigger to close the trade. If volatility contracts, that's what I played for. Stock didn't go anywhere, that's what I played for. I got the best of both worlds. I usually pat myself on the back too hard and then move on, close it and be done. Same?
Well said.
All right, beautiful.
Anything to it?
Okay. Listen, let's take a quick 90-second break. Even the S&Ps are up 33. That's about as high as I've seen them all day long. We'll take a quick 90-second break. We'll come back. We got Kai coming in. Little recap from last week with Research Corner. We'll be back in 90 seconds. Tasty Live.
Oil getting killed.
Oil getting killed. Gold getting bid.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's options. Jive. We're back, but you know what that means. Time for a little bit of an option jive. Research corner, my man Kai. What's up?
Not much. Happy Monday.
Happy Monday's right.
Made it.
Got the jacket on.
It's cold outside today.
I saw my breath for the first time this year.
Yep.
Sad. I hope we get like a real fall where it stays like this for like another month or two.
I think you got about 2 weeks of it.
I know that
it's looming.
I think it's even less than that.
Yeah.
From the reports that I see, I think it's like coming.
Oh, your reports? What do you?
Yeah. No, I'm deep in the weatherman.
Almanac now. Like
I have people.
Farmer's Almanac.
I have people that are very in tune with the weather forecasting.
Really?
I mean, have you seen some of Westwater's stuff that he puts out?
Is that a sign that people are getting older? You watch more Weather Channel.
I think.
Thanks,
Kai.
Kai.
Is calling you out.
Thanks, Kai. You know.
I think
I came up with a joke there. You see that?
Yeah, that was good.
That's pretty good.
Thanks, Kai.
I'm on that road too.
Thanks. I remember.
I never watched the.
You're already there, Kai. Okay, I know you look young, but you're already there.
I'm there. I never watch any Weather Channel or like a forecast before 30. Never. I don't even care.
Wow. Shade.
What do you got for us?
Yeah, what do you got here, Guy?
All right, talk about the markets. Yeah.
Let's talk about a market.
Yeah.
So what happened last week, we actually still experienced high volatility, historical volatility, and also implied volatility because of a lot of the reasons, trade tensions, the government still shut down, and it also hit the crypto markets. Bitcoin was really low last week, following the week before the action. And the second most important is all major banks pretty much beat the estimate, but some stocks fell. I read some comments say, oh, maybe that's the selling news, but who knows? We had really good earnings week for all the major banks, but some of the performance was weaker than expected.
The regionals kind of put a little bit of a dark cloud on the sector, but I mean, Bank of America, Citigroup, they're all around their highs.
Yeah. Deja vu with the regional banks.
Say again?
Deja vu.
Yes, deja vu. Yeah.
SBV. That one, remember when that was
2 years ago?
Yeah.
Remember KRE we were trading?
Yeah, KRE is getting
for a long time. Went from around 64 down to under 60.
Yeah.
Hanging out at 59.5, up 50 cents this morning, but tough trading vehicle too.
Yeah, so the regional banks wars, I guess some flavors to Thursday's trading. We actually have much larger intraday swing in the past week, much wider. And also, you cannot miss that gold, keep going higher, 4,400, like a couple of points near 4,400.
Might be there by the open here. Tuesday, middle of the day. I mean, we're moving 25 handles up.
We are. You're right.
Every 30 minutes.
Right.
It's like a point a minute, basically.
You're right.
Yeah.
Crazy.
But we had a sharp reversal on Friday.
Yes.
That was a pretty big one.
Buy the dip.
It's all gone away.
Yes.
So this coming week, we have CPI, which is probably the most important economic data coming out this week, this Friday.
Will it come out with the shutdown?
It says the first important one coming out.
Okay.
I didn't read the.
It's there's like other report like non-official ones. Other they have.
We got to get on our. We got you and the research team. You got to get on your act. You got to have your own report.
That's true.
We can track.
That's actually that could be a huge market for us.
There we go.
Come out with the research team's CPI report. Yeah, we can do that.
Breaking news.
With CPI and PPI and everything.
Well, we got to have you guys like man on the street type thing,
Interview
right? Because you got to interview people to ask them if they feel good about their job, like
Wow, when was the last time?
prices? Yeah, you got to go to the grocery store. You have to go to each grocery store. Figure out where the Campbell's soup is more expensive, that sort of thing.
Great. I love talking to people after doing the research for 12 years.
But the White House did just say this from the people in my YouTube chat. The shutdown could end this week.
Really?
It could end.
Really? Who knows? Who knows?
Yeah.
So this actually leads to my second point. So the government shutdown actually into the fourth week. So it will be the second longest in U.S. history by Tuesday. So the second longest one is 21 days, which is 1995 by Bill Clinton. So tomorrow is going to be 21st day since this shutdown, right?
Okay.
So passing Tuesday, this is going to be the second longest one.
Yeah.
And we have tons of earnings. We're going to see the names in the last slide.
We do have tons of earnings coming, but I know you'll get
a lot.
Yes.
Yeah. All right. So what happened last week? The indices pretty much all green. You see these big numbers around 2 to 3%. It's not like they keep going higher. It's just like a bounce from the dip from the Friday before. So it was actually went up and down in between the weeks. But
The dip was bought, as I would say.
Yeah.
Yes. Again. It was a one-dayer.
Damn, we almost had him.
We almost had him. That's right.
Yeah. For expect move, next slide. Fortunately, we actually landed in the expect move, 2.4%. The expect range was 2.5% because of the lifted VIX the week before. It was closed at 22, almost 22 the Friday before. The last Friday, we closed at 20.8. So the expect range of SPX is about 1.9%, which is still much wider than we normally see. Much wider. Normally, we see 1 to 1.1%, 0.9, tradable.
So now we'll be taking a look at maybe the 0-day trades again today. You got high implied volatility, market going higher. Volatility, if market continues to go higher, volatility should contract. Should help those trades. We'll take a look at those today. That's what I read from this.
Goes with our VIX and VVIX study from last week.
That's correct.
Like this is a good time where volatility is not super hot. It's not on the tail end of volatility, but this is kind of the spot where premium starts to look juicy. Where you don't want to be on the super low or the super high. It's right in the middle. Yep. This is the spot. So.
Yeah.
But in between Friday, the intraday VIX actually almost hit 29 or something, right?
Well, that was, I think it was mostly pre-market because you had basically, the move was done in the first hour or so.
Yeah.
Yeah.
I mean, like you guys had a 40, 50 point down move and then it was over. So.
Talking about the IVR, because of the IVR of the Friday before so high, so actually dwarfed the IVR last week. IV is actually still pretty high right now, but the IVR actually reduced. So the only green ones we saw is the gold and the Bitcoin. Gold actually went up to 94%. It's pretty high.
Yeah, gold price and volatility. You like trading gold? I stink at it. It's the world is your oyster there.
It is so
35% implied volatility in gold, like in the near term.
It's usually in the teens.
15, 16. Like that's your best case.
You're smiling. Did you get?
No, I just remember there are so many articles and tweets that I saw over the weekend, in the past couple of weekends. You actually see more people posting gold trade, gold ETF, gold whatever.
That's what I was saying. But isn't that usually our top mark? when everybody starts posting that, because
Everybody's a genius.
there was nobody talking about gold for the last 2 years.
I know.
The market was
No
up
one.
1 billion% and gold went nowhere. Nobody said, I love gold here. And then all of a sudden, gold has a move, and then everybody, is talking about 10, 15, 20% allocation to gold.
There is a ETF or whatever mutual fund says that they actually use a dollar average, like a monthly investment, as a strategy into gold. I don't know. That's this is commodity.
I just sold a micro gold.
Oh, good for you.
Yeah.
Good for you.
As we
Trading
talked
it nice on Friday too.
We had some nice scalps on it. We'll see.
Yes.
We'll see. If usually you don't when you go back for more, that's usually when you give it up. Where they let you get it. You get a couple and you think you're a superstar, and then you go back for more. Like I'm going to take some seconds on that, and that's when you really get spanked. So we'll see. But I got a 123-point buffer today versus Friday.
Yes.
Because that's what they're up right now. So I didn't hold through the weekend.
Okay.
So we'll see.
Beautiful.
Yeah.
Very nice.
Yeah.
Very nice.
If it doesn't work, I blame you, Kai.
Okay. Did I give you the micro? No, not me. So this is the historical volatility versus the implied volatility in SPX. You can see the implied volatility was high, or like it went higher, but the historical volatility actually hit the highest point since this May. So that's why we experienced the wider swing range, especially for zero DT. We definitely experienced that testing on both sides, right? It was like went down 50 points on Friday and then keep going up afterwards. It was kind of scary if you trade zero DTs. Even though they give you rich premium, give you wider range, it's still you gotta be careful.
You know that if you're trading 0 days, you should expect to have some tail events. You should expect to have some max losses.
Well, if you sell something with a 20-ish delta, there's a 40% chance of a touch. Just using round numbers. So I mean, it's in your favor that you won't be touched, but it certainly can happen. I mean, you have to play for that. It's not like a 5 delta option you're selling. There's a 10% chance of a touch. You don't necessarily feel that that's going to happen to you today because it's so far away. It still can happen, but it's going to be a lot less. But I think just about every 0 day trade that we've traded, I think we traded 3 or so of the last 5 days, we had a chance to manage them for a profit, which we did. And that intraday, it touched your strike. I mean, that's volatility there. So.
And that's the next.
I agree with you guys. Friday's quote is a trader's market.
It's a trader's market.
For sure.
Yeah.
Yep.
You have a lot of opportunities to manage your position, even though you got to test it multiple times.
Yep. Totally.
So the daily volatility was actually 1.7% last week, last 5 trading days. The long-term average is 1.1%. If we're looking at a medium number, last week was even higher. So last week was pretty volatile. Okay, so next one is the gold. I just want to try to show you the performance in the past years. You can see that big bar on Friday, right? Nothing too much to talk about, but I just want to show you this crazy.
Up and to the right.
Yeah.
It's just.
Yeah, don't ever show this again. Okay, good job out of you.
I bet there are a lot of people is going to jump into the selling premium camp for gold after see this 94% IVR.
Yeah, listen.
GDX or
keep it small. I mean, you can go into. I mean, listen. I haven't traded GLD in forever. It's certainly a tradable place now. Markets are a little bit wider.
It's too cheap, GLD, right?
No. I mean,
premium.
Almost $400 now. I mean,
no. I mean premium wise before.
It's gotten better.
Now, what's that?
Yeah. No, I mean, volatility is higher now. It makes it more interesting.
Makes it totally more interesting.
It's going to be interesting to see if volatility stays bid.
Yep.
Even if we have a little bit of a pullback, because you typically have that reverse vol skew where as gold goes up, volatility tends to expand.
Exactly.
If it comes down, you usually see volatility contract. I'm wondering if because of the move that we've had, if volatility kind of stays at a little bit of a higher floor for a period of time.
Yep.
Like we were talking about being 14, 15, 16% implied volatility. What if the new, next year or whatever floor is 25%? I would think that you would see that, but who knows?
Okay, the last chart I want to show is Bitcoin. So Bitcoin and its implied volatility. So Bitcoin actually dropped to the lowest point since same since May. The implied volatility actually went up. So this gold and Bitcoin are the only major assets we saw the implied volatility or IV rank went up last week.
Well,
traders market,
Bitcoin up $4,000. I mean, but it was a slow march lower. I mean, it just stair-stepped lower and lower and lower. And again, we're up at 111 again. That's where we used to stop and go back up to 125. Got a lot of charts telling me might be some headwind here. So,
are you bullish? Are you guys bullish or bearish or neutral? Or you don't
bullish long term. Bitcoin. October. A little bit of long Bitcoin.
Yeah. If October doesn't pan out, we might have to get rid of our very own Ryan Grace here. Has us all in the October bucket.
Yep.
All right. The next slide. So the best and worst performers in the S&P 500, very liquid ones. AMD, AXP had the earnings last Friday. Starbucks, Airbnb, and Wells Fargo. So the upside move is all lower than 10%. IVR is much higher because of one reason is the overall IV market IV is high, and also the earnings season is coming. Yeah, so don't get confused about the high IV market. Sometimes you got to check the earnings date.
Yes, you do.
That Oracle move up, $30, and then the next day down $30-$40 on another projection out to 2035 or whatever the number is. Huge moves. Crazy.
Huge moves.
Yeah, downside hood lead the biggest down move 8%. Still, most of them are falling between 5 to 8% to the downside. Oracle, down 5%.
Yeah. We got positions in a lot of these. I mean, we traded Starbucks. We have a position in AMD. No hood or coin. We got Oracle in there. Hood and coin. Those are probably.
You guys haven't traded coin for a while, right?
No, we haven't traded coin for a while. I don't know if you've looked at the markets in coin. If you go out to November with 32 days to go, they got dollar-wide markets in coin. Makes it a little bit harder to trade. Now you've got $2.5 wide strikes. Might make it a little bit more interesting after expiration. So be good.
Yep. So earnings review from last week. None of the companies had more than 10% double-digit move. So I just put some numbers there. American Express and Wells Fargo both up 7% the day after. So nothing too excited.
Yeah, we didn't really trade any of these. I don't think
none of these.
We did United, and we did TSM.
TSM, yeah, for sure. Yeah. None of the other banks.
No,
really?
I mean they're just lower volatility, and I don't know. The earnings that come out in the pre-market are usually earnings that I just don't trade because I like to watch movements in the after hours. So I've passed on most of these.
Interesting.
But we're coming up to the sweet spot. You got Netflix and Tesla, and then you got all the big name stocks next week.
Exactly. So we start to show again. We bring back the earnings season stats. So for this season, the third quarter, so far we have more than 100 companies announced the earnings. Can we go to the next slide? And so far we have more losers in the past week, 55%, and less winners, 45%. And overall, the last week, the average return the day after is negative 0.2%, which is not actually a big number.
Right, small moves after the market, after the earnings, what you're saying.
But this can be
maybe post-earnings trades.
Yeah,
post-earnings trade. So this can be feel a little bit different from the earnings report, whether they beat the expectations or not. So last week, the major banks beat the expectation, but in general, we still saw the negative return.
Got it. Got it. All right, good.
That's a surprise. I mean, going into the meat of earnings season.
A little bit. Maybe that means the next.
If this plays out,
these have been fringe players too. These are not your players yet. So
right.
Take a little bit of a
if it plays out like this, though, you'd expect markets to be lower.
Yep.
So.
The last one, so the upcoming earnings this week, we have tons of earnings. Definitely the biggest one or most traded one are Netflix and Tesla. But also important ones including Coca-Cola, Ford,
IBM in there.
IBM. We have the
GM,
Southwest. If you trade airline, Southwest and American Airline, all these. Oh, and also this afternoon, Zions, the regional bank, went to the problem. Is going to announce their earnings. I don't think that's. I checked the market. I don't think that's liquid enough.
Yeah, you only have monthly expirations there, 30, 40, 50 cent wide markets. I don't know. There's so many other interesting spots to be right now that Zion's Bank is not on my list of
the radar, right?
Yeah. So, but Netflix, the GEs, you have GEV and GE, both aerospace and Vernova.
Lam Research, a lot of people trade that, right?
Yeah, Lam Research is in there, LRCX, GM, Tesla, Intel, now that it's, a big name.
Yeah. Now that's a mover and a shaker.
IBM's a big name too. I mean, IBM had a relatively strong week despite the weakness last week. It's
most of
$5 or $6 from highs.
This week also.
Yeah.
It's going to be fun.
Couple interesting names.
Yeah.
Good.
Cool. All right. Good job out of you.
Yeah. You said that like it was a shock.
No.
He always brings the heat.
It's been amazing. We're going to take a quick 90-second break. We have a wonderful opening, amazing opening. Right after this, it's Tasty Live.
About time. We've been waiting for it.
Yes.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live with the opening bell is imminent here in about a minute and a half. Even the S&P is holding steady up 30. You just sold a little bit of gold right here at 36.20. You're the first person to be up 30 cents in gold selling it from the short side. You try to get out of that.
I was 43.36.20.
36.20,
which is basically the high. I mean, we're 5 or 6 points from the highs.
Oh, I apologize. I had
please don't.
$10 lower than
that.
Yeah,
do not take my in $10. That's that's something.
Yeah, no,
$10 scalp on gold.
Scalping for $10 on Friday. No,
we were taking like 25 takes.
Oh, okay. Well,
yeah, but it's 100 ounces.
Yeah,
$5, $250.
Yeah, no. Yeah. Nothing to shake
on the micro.
I got it.
Or is it a mini? It's a mini. GC, because they have the micro, which is 10 ounces, I think.
That's okay. Keep going.
Which is the it is a micro, 1/10. Go on.
Got it.
100 notional 100.
Been drinking this weekend?
No.
No,
No.
you sure? You're okay?
No, there is somebody. There's our bell. Somebody emailed me in about a.
Micro versus mini?
No, there's another one that's 10 ounces. It's new.
Oh, like a nano? No, I'm just kidding.
Yeah, I don't know what it is.
What it is either.
But that's what I was getting, because the mini is a
I get
fifth,
confused by it too.
and then the micro is a 10th.
Yep. All I know is $100.
E-mini's up 36. You gonna talk about that?
Cancel crash. E-mini S&P's up 37 now. That would be a new high. I just clicked at a new high for the day, 67.40. We're just a skosh under that. NASDAQ up 170, 180. Russell up 28. Dow up 190 and change. Volatility now in by 51 cents. Let's look at the E-mini S&P's expected move here. $31. I think you wait a little bit from our research. We usually put it on closer to 9 o'clock, 8:45 to 9 o'clock. So maybe we'll wait and see what goes on with the overall market here. Volatility is contracting, down 58 cents now. Bonds up 11. Bitcoin flirting with 11,000. There it is. 43.30 on the futures. 111. Ethereum up 207. Ethereum up 5%. Bitcoin up 4%. Cancel crash there. The only thing you don't cancel crash in is oil. Oil continues to go lower. I guess that's good for the pocketbooks of people who have to drive into work every day. Goes right to their bottom line as lower gas prices hopefully come soon. Gold up $112 to $43.26 off of the Nikkei high of 43.36. Let's see what's moving in this market. Let's go to the Buckers. APP, well, get your act together. Down $10. It's never down when the market's up and down today. Oracle down 4. Volatility products, some oil-related products, and then NVIDIA down small. But you look here, high option volume list, very few. Matter of fact, Coke, which has earnings.
They just smashed volatility.
Yeah, they are smashing
volatility. I mean, that is...
Upside.
We're below 20 on the VIX right now.
Upside, Netflix up 9, MU up 8. MU is a hard stock to trade unless you just buy it. It just goes up every day. Reddit up 7. Lulu up about 7. AVGO up 6 and change. Apple up 6. Apple, I said, was kind of a lagger. Here it is looking at new highs coming up here in Apple. If it stays here, coin up $4 and change. It's kind of a relatively small move in coin for the amount of movement that you have in Bitcoin right now. Tesla up 4 and change also. That's all I got, son. What do you think here? So far, it looks like cancel crash, right?
Yeah, the move in volatility is what's moving most of my positions. I mean, we have some stocks that are moving, obviously, but it's the vol that's really coming out here.
Yeah, Phillips/X now under 20.
Yeah, like I'm looking at, we sold that UNH put, the 320 strike put. I think that was fast market. Wasn't that fast market? So. I mean, the stock is up $2 today, but that put came in $1 over the weekend. I mean, you sell it at 580 and it's trading at 477. You're well outside the decay curve in terms of 2 or 3 days. You don't normally get 20% out of a put where the stock's gone nowhere. It's just like stuff like that. Even some of the stocks like MP, volatility coming in there. I know we're getting spanked on BE again. That one's exploding higher. We got the Amazon strangle. We're the 195-250 that's coming a little bit. Just kind of it's a vol crush trip.
It is a vol. It is,
and
yes.
It seems like if this continues, we'll be back at highs in no time.
Yes.
You get another day like this, and we're probably back at 6,800.
In a heartbeat.
In a heartbeat.
Yep.
I mean, that's how it's been. Do I put an order in to close this micro gold, or do I just let it sit?
It's your poison. I like the. What do you got? Almost.
I think you take a little shot here. You see if something happens here.
Got him right where you want him. Even the S&P.
The AMD strangle, the 180-280 that we sold. Stock's up $3, and that spread has come in 60-70 cents. That's a 10% move with the stock basically going nowhere, and we did that, on Friday. Vol.
Yep, very nice, very nice. Yeah. That's vol contracting.
Yeah.
Take your profits when you can, not when you have to. Bonds up 10. Taking across the board here. Yeah, your gold's looking good so far.
Are bonds interesting to you? Doing anything like? Do you? I mean, even two-sided.
I'm the world's worst commodity trader. I think you could probably put on. Look, Ivy rank a 5 here. Yeah. I think you got to either just trade them directionally or not trade them at all. I don't think they're a premium selling product. So if you're gonna do something, maybe it's get short them, get to the high end of the range.
Is there a spot you get long them? You just don't think they're going to go anywhere. You think it's just kind of dead.
I think it's dead.
Like it's over.
I do.
Yeah.
I do. I think interest rates are going lower through the end of the year, so they're probably going to catch a little bit of a bid in bonds. So I don't think they're a phenomenal sale here.
Mm-hmm.
Oil's the most interesting thing to me. I think you can catch a little bit of a bid in oil. That would.
Oh, I'm locked and loaded. I got micros. I got put spreads. I'm ready for the move in oil.
I know.
I'm ready for that.
I know. Anything in your portfolio that you can take a look at that you might be able to
I might take
reduce some of the risk that you have on here?
I just took my MGC off.
Oh, good. Yeah, you took 16 points on or something. I mean, that's what you got to do with futures, hopefully.
I mean, how many times prior to the last 2 or 3 months has gold been moving?
It's at all-time highs.
$16 in 10 minutes.
Yeah, exactly.
I mean, these are
exactly
well outside expectations. Volatility getting smoked.
Mm-hmm. Mm-hmm. Yes, volatility is.
Yes.
Ethereum, you're short the at-the-money puts now with the.
Oh yeah, I'm long that stuff. I actually sold some puts. Let's see if I can close out of these. Yeah. So I sold the 60 strike puts on Friday in IBIT. So I'm gonna peel those off right here because I have long.
Yeah.
I have stock and an in
long
money
stock
short put.
And you're short the 65 puts where it's in the.
So I might look to sell some calls there too into this move, but I'm going to take off this put. All right, so we're out of the puts. We took 100 and something out of that. ETH, I'm going to do the same thing.
You sold them for 3 and change. You're taking them off for 2 and change. I mean, you're taking 33%.
Yeah.
I mean, I know you're good, but I mean, how good can you be, right?
I mean, no high fives here, Johnny.
No high fives.
Things didn't change that much. I'm just,
No high fives ever. You hear me? Ever. SPY's up $4.47 makes sense because even the S&Ps are up 46, right? So they should be up pretty much 1-to-1.
I misspoke. We do have a hood position.
A what position?
This was one of the 112s. Remember the 112? We did that. I think that was fast market, or what's your assumption? Did it on the 15th.
Let's see.
So that one's coming in. That's helping a little bit. The vol is coming out there.
Yeah, you did just put it on the 15th. You did it for $1.10 credit.
Yeah, it's at 75
70 cents. So you're a small winner in there.
Yeah.
You needed the move. It's a $5 move in hood. You needed it to the upside.
Yeah.
All right, son, you ready to take a quick 90-second break?
Sure.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next?
It's usually nothing says Monday.
Nothing says Monday like Dr. Jim. You're going to have to figure out it's Monday all on your own because he's traveling right now. But at 1 o'clock, he's got his new option course coming out. You're not going to want to miss that. So check that out at 1 o'clock.
Yes.
If you're into that. We're going to take a quick 90-second break and come back with an option jive next. Even the S&Ps.
Into that.
Without a downtick. Well, I mean, listen, people are writing me in there like they're going to get the poop camera. I mean, so.
Don't yuck everybody's yum, okay?
I'm not, man. Whatever you're into, it's all good
thing.
by me. It's all good by me. I'm just not going to the bathroom at your house. We're going to take a quick 90-second break. We'll come back. We got more Tasty Live after this.
The camera?
The camera really freaked me out.
Yeah, I didn't think about that angle. That's
not going to lie.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this Tasty Live site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It's option jive. That's right, Nikki. It is time for an option jive with E-mini S&P's up 46, NASDAQ up 212, Russell up 40, and the Dow up 240. Volatility in by 73 cents. What'd you just trade? What'd you just do?
That was another. We did that Oracle Strangle, the 250, 350. We did that on Friday that last week for $8. I just traded at
$6.73.
Yeah. I mean, what?
Yeah.
What more you want?
So we just had a confirm and send where they asked, what do you do, when volatility contracts and you run like a thief in the night. You played everything you played for, worked, you go. Because you're going to have other problems, right?
Of course, yeah. You'll have the delta risk along the way. But if you're selling vol and vol is coming in, 5x what you would expect on a 2-day move, which is just the weekend move. You didn't even have the markets open, nothing moving. When it's moving that fast, you take the money and run and pat yourself on the back, but you definitely don't high five because there's no high.
There are no high fives.
No high fives.
You know that. I know that.
We take $100 on the AMD trade too.
Why not? I mean, it seems like the practical.
We're gonna do that too,
right?
Yeah.
Good job out of you.
See, but then what do you do? So if you get a little bit of a downside move here, which is crazy to even think about in the stock market, downside move. You get a downside move and a pop in volatility. Do you now play it to the long side, or do you get back in as a strangle?
You could. I guess with the market the way it moved, if you were smart enough. Right?
If you had the crystal ball ready to go. Yeah, no, I hear you on that.
Yeah. I mean, what else are you going to do? And that's the way to do it.
God, there's just, all right. Cool. A little risk off like that.
Yeah.
Couple trades.
Yeah, for sure. Perfect.
What do you want from me?
Rinse and repeat. Free up buying power. I mean, take your winners when you can. Most of these were probably losers yesterday or the day before.
Oh, no.
Less of a winner.
No, these are perfect. I'm going to take Uber off too.
Uber.
These
You're going
markets.
to attempt. Uber, you got to let markets kind of sit.
Yeah, they're not as tight. I'm going to put it in for $100.
Give me S&P's up 45.
Volatility coming in. UNH too. We take that for $150
across the board right now. I mean, we talked about it on Friday how volatility was going.
It was the sweet spot though,
and you were not going to get the weekend coming out. You've got the weekend coming out right now,
and you're getting
If you had 100 long deltas in the SPYs, let's say, and the SPYs are up 450 right now, you should be up. $450.
It's up 5x.
Yeah, well, I wouldn't go 5x,
not that much,
but you're up probably $600-700 instead of the $450 on just volatility.
And that delta is going away quickly.
And the delta.
That's the other thing is that you come in with 100 long deltas.
Yep.
And it's mostly via short volatility, like if you're short puts or you're short meteor puts against further out calls. Your delta goes from 100 to like 30, 40.
In a heartbeat.
Very, very quickly.
Mm-hmm. Yep, you're right. Now what? Even the S&P.
I know that's the big question is but I get that all the time. It's like, okay, so you took all these positions off and you freed up all this buying power. You got to, either find other opportunities where volatility is higher or kind of sit on your hands a little bit.
That's correct. Or start going a little bit directional. Yep.
Yeah, you change into like diagonal spreads, calls, long premium trades, stuff like that.
Yep.
Cool.
Yep. All right. Beautiful.
Forward curves. Let's do it.
Forward curves. Let's see what that means.
In place of the great Dr. Jim, who will have his segment later today.
Yes, he will at 1:00 Central.
Yes. All right. So we're going to talk about forward curves. What are they and why do they matter? How do they connect today's data to future expectations? How do traders use them to spot mispricing? I don't like that. Seasonality and sentiment shifts. I don't like that because price is price. You can buy it or sell it.
Price is king, you mean?
Price is king.
Mm-hmm.
Today, we will look at two kinds. So we're going to look at equity IV forward curves and futures price and IV forward curves. So we're going to talk a little bit about contango, backwardation. That's kind of part of the segment today.
Dokey.
So a forward curve plots the expected value of something such as price or volatility across future dates. Each point on the forward curve represents a future expiration or delivery date. So when you're trading futures, really this is where this comes into play mostly. You'll see different prices for the same product along the curve. The oil trading right now is not the exact same price it trades at months or years out from now. I mean, you can't really trade years out. You can, they're there, but they're not really tradable. You trade really the front is where most of the trading happens in the front 2 or 3 expirations. But when you look at these products, you'll see that they have different values across the curve here. It's not exactly a forecast, but a snapshot of the current market sentiment and assumptions about the future. So, these can and will likely change, and they can move in different ways. Like the back can go down and the front can go up.
Yeah, I mean, there's carrying costs involved here. Interest rates are involved in here. On something like oil, be storage costs in here. There are all kinds of, not hidden fees, they're known fees, but known to change too.
Yes. And sure. So the next slides, we're going to go over equity forward curves and earnings dates, and then the futures forward curves, which is combining and looking at just the future price curve along the futures here. So the first one, so looking at Tesla. So Tesla's implied volatility is what we're going to be looking at here in the forward curve of that implied volatility. So this looking at it has coming up this week. So it's October 22nd. That's on Wednesday of this week. Each dot represents the implied volatility for a different option expiration. And so volatility across the curve, you'll notice a spike in the near-term earnings date because you have that implied volatility, that binary event baked into the expiration here. The market is pricing in extra movement for that earnings. And this is very normal. This is very typical for implied volatility. If you look at any equity chart or equity curve of volatility, just looking at the option chain, you'll see front implied volatility is typically much higher than it is in the back. And that's just due to price uncertainty. When you're talking about like where a stock is going to go tomorrow or at the end of the week, you're a lot less 50-50 than you are, 2 years out in time. If you say, where's Apple 2 years out in time, you probably say it's probably higher. Like it's those, and that's priced into.
That's just the drift too, right? I mean, the
drift, but the uncertainty is a lot lesser than it is in the front. So after earnings, IV drops as uncertainty disappears, right? So you have this binary event baked into markets. After the binary event happens, you typically see implied volatility come off the board. Of course, you can see big moves in the stock, which is, a digestion or reflection of that binary event. But regardless of what the move is, you typically see the fear and the uncertainty that is implied volatility come out, regardless of if it's an up or a down move in the stock.
Fair enough.
So getting into the futures forward curve. So here we're looking at oil, which is much lower than the spot price that we have here of 61.8 as the boys were making this over the last couple weeks here. It is now at 56.74, so you can buy much cheaper today. So we're going to look at the combined crude oil forward curve. The green line is the IV forward curve, and it shows how the expected volatility shifts over the months. So you have high volatility as you get further out in time here. The orange line is the price forward curve, and it shows how future prices change by expiration. And so you actually had a little bit of contango in the curve that we have here. When we look at it now, I wonder if it's changed.
Are you going to look at oil?
Yeah, just to look at it now.
You got 56.70.
It's pretty flat.
Pretty flat.
I mean, a little bit of
239 days away, it's $1 change.
Yeah, you got a little bit of backwardation now, which is not, when you have crude oil fall, you would expect to see higher prices further out in time. When crude oil is very, very high, you expect it to kind of come down towards a mean here. So just to give you an idea of just how fast these things can change. The downward sloping price curve is called backwardation, which reflects strong current demand. When you're in contango, it's strong further out demand. Together, the forward curves help show macro themes like supply and demand and seasonality. This comes more into play with something like a natty gas, where you need, where typically natural gas demand increases as you get into these colder months. Oil has a little bit of that as well.
Absolutely. Good little slide there.
Yes. When we talk about contango and backwardation, this is in futures only, and it's important to understand this because with equities, you can see changes in the implied volatility, which I don't know if I would say contango or backwardation applies to equity implied volatility. I think it's just a general fact that front implied volatility is higher than back just because of price action. But it's important to understand with futures, this is where your pricing comes into play. When you're trading options a year out in Apple, they're trading based on the current Apple price and the next week's Apple price. Like those affect the price. When you're trading crude oil, like if you're bullish crude oil, you can't necessarily go buy very far out options to be bullish on crude oil because you're trading that specific contract, which is on a curve. And so you have to keep in mind that futures have this sort of dynamic.
And sometimes it could be not misleading if you're not in the know, like you didn't know about this segment that we're doing right now. you'll see oil in the front month, just for argument's sake, trading around 56, and then you'll think the at the money in the back month is 54 or something like that. And you're buying oil $2 cheaper.
Free money
hold
trade.
it for 100 days or something like that. It's not. You're trading a completely different future. Futures options typically expire to individual futures themselves, not like IBM that always expires to IBM stock, or NVIDIA that always expires to NVIDIA stock. Futures options typically have a specific future that they expire to, so be careful.
And this comes even more into play with like specifically volatility, because people say, well, I think volatility is going to spike at some point, maybe 6 months from now.
Mm-hmm.
It's very hard to trade that. That's because volatility is so reflected in the front of the curve. Back month volatility, unless something crazy happens like a COVID type situation. But even then, the back doesn't move as much as the front does. And so it's very hard to trade, that sort of situation. And even more so when you get into like a USO or a UNG, where there's significant amount of drag and that comes into rolling of futures contracts, as well as the contango or backwardation that you're exposed to. So you got to keep that in mind. So overall, you just have to keep in mind the contango or backwardation will dictate is a reflection of the time value of these products as well.
Yep.
Couple takeaways. Forward curves turn market expectations into a visual story, as it shows how traders see the future today. They're pricing in the future today. Equity IV curves highlight event-driven volatility like earnings and big announcements. Those are kind of the biggest factors that will change equity implied volatility, at least in the short term. Futures forward curves reveal macro themes like supply and demand and seasonality across months. This is particularly the case with something like a natty gas, sometimes with oil as well. Oil has that supply demand, not as much seasonality. You do have the seasonality in like summer months, people drive more, blah, 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 blah. It doesn't always reflect in the prices though. It's again, not a given that because winter's coming, natty gas goes up. That's priced in.
Although nat gas does have an interesting curve here, you would think it would typically go, if it was $4 in the middle, it would go to $4.10, $4.20, $4.30 the further out you go. It actually has a bump in December and January where there's a full dollar for the next 30 days. Like right now, nat gas is trading, I'm rounding up 3.3. It's basically 4.25, almost $1,000 higher, 60 days away. Where go out 200 days and it's only 50 cents higher. It's a little bit of an interesting curve there.
But if you're not aware of the difference in the futures contracts that you're trading, you could go there and buy and say, oh well, winter's coming, I'm going to buy these calls here. It's already priced $1 higher. I mean, a point higher, full point.
There's no free ride is what we're showing here on this curve.
Yes.
Now, if you're bearish, it becomes an interesting play.
Yeah, because it's a lot higher.
Yep.
For sure. Traders use forward curves to time trades, price options, spot when sentiment shifts, so you can see when things go from backwardation to contango and vice versa. And overall, the curve tells you pricing of where traders see futures priced. The future priced.
Very good. Very good.
It's not certain though.
Not certain. No. Everything
Can
is
change.
a snapshot at this moment.
Likely to change. Yes.
Accurate at that moment. We're going to take a quick 90-second break, but you know what? Let's just take a quick look at the market here, what's going on. Even the S&Ps are up 46. I think I steered you wrong here. Expected move is $23 now.
Oh, yeah, we forgot to do our SPX.
Yeah, I think it's too late. It's too late. Volatility is contracted by too much. Volatility in almost 4%. 1976 has not caught itself a bid here, now under 20. NASDAQ up 234. The Russell, really the leader in the clubhouse. Russell, the weakest last week. Leader now up almost 1.5%, $35. Bonds are up 8 ticks to 118. 23. Bitcoin hanging in there to the upside, up $4,700 on the futures to 111.4. Ethereum up 212. Oil down 59 cents. Off of its lows by about 50 cents. Gold trading 43.16. Good sale by you, good cover by you. Now trading up about $100 or so, 103. Silver up 72. Equal upside move, not quite as strong as gold today, but decent upside move. Let's see what the buckers are here. We only had a page before. We got a little bit more than that right now, but it's all volatility related products. NVIDIA is the big name, down small, down 30 cents. CMG down small, about 30 cents. Some of the Chinese stocks like JD down small, 37 cents. BABA down 60 some odd cents. The big mover AXP down $3. AppLovin down 38. I don't know what's happening there. AppLovin has earnings on 11.5. Volatility is expanding over there. IV rank of 39. Let's take a look at AppLovin here, down near the end of its range. You look at the markets in AppLovin. If you go to November, they're untradeable.
Yeah, they stink. You
don't want to do anything in AppLovin. I got a couple of emails about AppLovin. Do you want to, do something in there? I don't want to do anything in there with the market so wide. We're going to take a quick 90-second break and come back. We got a good market measure for you next, so stay tuned. We'll be back in 90 seconds. Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Time for a little bit more Tasty Live with even the S&P is holding steady up 50, NASDAQ up. That's actually the lagger of the group, by the way. I mean, with the Dow only up 230 and change.
We just got our Uber.
Oh, good. You had that resting order? Did you?
Yeah, for $100.
Did you move it?
No. Well, it's moving with everything else, which is just volatility getting absolutely
hammered down $1.13, 19.5%, 5.5% move. This is the whole weekend plus coming out.
Oh, for sure. For sure.
Yeah.
I mean, this is
most definitely.
Yes.
NASDAQ up 250 and change, and Leland Clubhouse Russell up 32. Before we get to this next market measure, which you're going to love, I and Mr. Tom Sodnoff will be at the Fillmore in Charlotte, October 24th. That's this Friday, son. So I won't be on the show, but I'll be in Charlotte. Doors open at 8. The show starts at 9. So if you want to come and talk to Tom, myself, for about an hour before the show, an hour after the show, we would love to see you. Still time to get some tickets, tastylive.com/events. Love to see you there. We're also going to be in Austin coming up immediately following this one on November 7th. That's also a Friday, same thing. Tom will be there. Doors open at 8. Love to see you there. Shoot the BS, have some fun. It's a great show. You'll love it. It's all trading all day.
Do you guys get food at your event?
Do we get
you get bagels and stuff,
for the
usually,
customers?
right?
We do. Yeah. A little snack in the morning, some coffee and donuts or a croissant.
It's another thing to put out there, come for a bagel if you need. Come for free breakfast.
Yeah, and then you know what? We don't lock the doors. You can go back out.
Yeah.
It's fine. Yeah.
No problem.
So come. Antone's nightclub. So if you stay late, you can get a free entry into the nightclub, which will be great.
You gotta stay for the rest of the
stay for the rest of the day. You gotta hide. It's like
hide.
Like you're in a Target overnight or something like that. You have to hide in there, and then you get to be in the nightclub, which would be
like
fun.
Inside Man. That was a great movie.
Right.
Remember that one? Denzel and Clive Owen.
Yeah. What was the other one where they in a airport? Wasn't he stuck in an airport for a while? Wasn't there another one? I don't know.
Yeah.
I digress. And we have one more coming for the traveling.
You're thinking Bad Santa. Billy Bob Thornton, where they
that was a sicko movie.
That's a great movie.
It's a great. Thank you, Beth.
It is.
That's a great movie.
It is a great movie, but it's so.
You don't get those anymore, though. Those are
I agree.
It's so
It's
good.
cool.
It's
I
so
agree.
good.
I agree.
We need that sort of thing.
I
Okay,
agree.
go on. What's this one?
Speaking of Bad Santa, you got the whiteboard tour. That's right. You, Katie, the man in the middle right there.
Yes.
That'll be some trading and portfolio management, November 2nd, San Diego, California. The Music Box. Check them out. Go to tastylive.com/events as where you need to go to see all of our shows. tastylive.com/event. Even the S&Ps, what do you think here? Up 53. Traded up to 57, right where they are now. We are at the highs for the day.
Volatility, that's all you have to look at. I mean, they caught us again. Buy the dip.
Yeah, the buy the dippers caught us again. Even the S&P is up 54. Volatility in by $1.11. Probably have the lows in for volatility today. It's getting crushed 5.5%. I mean, I think that's probably enough. Would you agree?
I mean, if we stay up here through the rest of the day, you don't think they smash us down
even more?
Even more? 10%? I mean, like Vic said, below 19. We're going to get there in the next 10 minutes.
Oh, you're probably right. Who knows? I mean, listen.
Middle of the week, you got 17 vol again.
Volatility, so
doesn't matter.
Yeah.
Nothing matters.
Yeah.
Just got to be long.
You know what matters?
What?
We got a market measure.
Yeah, let's do it. When traders panic.
You going to talk about your sponsor?
We don't panic.
So if we don't panic, neither does the SIBO, which is sponsored by the SIBO.
Always open every day, every morning for us. They wait for us.
More on.
We wait for them.
More on than off, usually.
Yes.
Definitely more ons.
So we're talking about IVR and volume here. When fear spikes, traders show up. Then when traders get nervous, they hedge, and that panic shows up as higher volume and higher IVR. You typically, never sell a dull market is kind of the opposite of this statement in that, when things are just grinding higher, it's usually low volume, low implied volatility. When things are moving, you typically see higher volume, higher implied volatility. That typically happens on downside moves. So we're not saying anything profound here, but there is a twist. Once everyone's in the trade, there's no one left to panic and volatility fades. Typically, when you have the huge spikes in implied volatility or bigger spikes in implied volatility, it usually marks a bottom. The fear is usually overstated. This study digs into how IVR and trading volume interact in SPY and what happens next. So the question is, when volatility spikes, does the crowd's participation, as measured by volume, help predict how fast volatility will cool off? What do you think, sir?
When volatility spikes, does the crowd participation volume help predict how fast volatility will cool off? How fast? I don't know how they quantify it, but yes, it will predict, but I don't know how they quantify it.
Like spike in vol and spike in volume together. Mm-hmm. Is that the indicator for more to come or bottom?
No, it's usually a capitulation moment in my eyes, up or down. Matter of fact, that's why I talked about it with Bitcoin the other day, and that's why I talked about it with gold. Now, Bitcoin worked, gold didn't.
Yeah.
So, I mean,
But that's the trader in you.
That's the
Most people, the texts you get, like when my sister texts me, it's usually at this point when volumes are really high and volatility is really high. Yeah. I'm losing so much today. Should I sell? That's that's
the moment.
Not everybody thinks on the contrarian realm like us and our viewers do. So, it might be an easy answer for us to answer.
Yes.
It's not something.
We'll come up with an opinion, right?
Yes. Mm-hmm. So let's get back into the slides here. So the study that we're going to look at is SPY over the last 5 years. So we use IVR and volume. We're looking at the IV decay, which we are defining as the next day IV change split. So this is a percentage by IVR and volume. So you're looking at the IV decay versus IVR and volume. So we're showing really the same story here, how crowd behavior drives the volatility cycle. So volatility compounds on itself as people begin to sell, which is very, very intuitive. So looking at the next slide here, so we're looking at IVR versus volume here. So on the bottom, you'll see implied volatility ranks. This is IVR. And then the volume on the left side here, you can see shows IVR is a reflection of volume and vice versa. And this is intuitive because you typically have the most volume when things are going crazy. You have the most volatility when things are going crazy. They go hand in hand together. And you could see that most of the time when you're in these low volatility regimes, your volume is also low. It's just kind of, by the dip slightly. And then when things get crazy, you see volatility come in, and that's, a reflection of markets. I mean,
I have no idea what that scatter plot is showing me.
High implied volatility.
Yes.
See, IVR of 100. You have lots of volume.
Oh, okay. I got you.
When volume is low, you typically see low implied volatility. Yeah, that's most of the time.
I like it now. Thank you for explaining it to me. To me, with my eyes, it just looked like...
It's good that they put the slide together for you because you could just take this and print this one out. You don't even need the scatter plot.
This is perfect.
This is you. This is the Cliff Notes.
All right, good. I like it.
So each dot represents a trading day for SPY over the last 5 years, showing its IVR and the total trading volume. There's a clear upward slope. You saw how the volume went up as implied volatility went up as well. Higher IVR equals higher volume. This means when volatility spikes, more traders rush in, typically of fear, which is typical of fear environments. Volume acts as confirmation. It validates that volatility spikes are emotionally charged and not random. It goes hand in hand. Volatility comes in, you see volumes also spike as well. The key takeaways here is high IVR days attract crowded trading, and you can watch for those overreactions. Volume confirms fear. So spikes with high volume are genuine volatility events. A lot of times you'll see downside moves where volume isn't that pronounced or volatility doesn't spike. That's not really like our bottom signals, really. As traders flood in, volatility often peaks, setting up short vol opportunities. We talked about that last week with our VVIX study. You typically get to the kind of the sweet spot where vol's high, and we're talking about volume here. We're putting that part of the story into it. But when vol's high and volatility is high, not extremes, but high, that's what we're targeting. And it goes to everything we talk about with high implied volatility and IVR. You want vol high if you're selling risk.
Certainly do by the trades you were able to peel off today. So yeah, yes. 100%. You want vol high.
When IVR is high, but volume is low, the spike may be weak or unconfirmed. It's all the kind of same story here. This next one's really going to get, this next slide's confusing to us laymen's. This is a research team slide.
This research team, you in the know? The heat map.
But we luckily have another Cliff Note slide for this. So this heat map shows how the next day IV change depends on IVR and volume level. So you're going to be able to see here that the IV increases are sustained when volume is higher. And so getting to the next slide here. So then this slide, the heat map, shows how next day IV changes depending on IVR and volume levels. So the darker colors represent IV increases or small moves. The bright, warmer cells show large IV decays. So the bottom right cell, which is high IVR and high volume, has the most negative IV change. And so when you have high IVR and high volume, you have the highest propensity to have a big implied volatility change. That's what it's saying. When you have low volatility and low volume, you don't typically see volatility change, which is, intuitive. In calm markets, low IVR, volatility doesn't change that much, no matter how much volume comes in. So volume and high volume, high implied volatility is the target here, which is a small amount of those occurrences. The pattern is consistent, though. Fear peaks with high volume and then fades fastest afterwards. So you get these spikes in implied volatility. It tends to be the biggest moves in terms of IV crush after a spike. You don't typically see big moves in implied volatility, big crushes in implied volatility when volatility is low. So the key takeaways here, high IVR.
What do we play for? I mean, we play for volatility contraction, not only price, we play for volatility contraction. So
yes.
Again, another reason why you want to do this when volatility is high. If you didn't get a chance to do that, you almost lost your volatility. Today, with it down full of, what is it?
The volatility contraction now comes in 24 to 48 hours.
Yes.
That's all you get. There was once upon a time where you have a little bit of volatility, like sustained.
You'd have weeks sometimes.
You could have a week or 2 weeks. Not anymore.
No.
So the key takeaways here, high IVR and high volume equals the juiciest short vol setups. Elevated IV with heavy trading activity leads to mean reversion the next day. After the study is the last 5 years. So the next day you're getting vol crush after these spikes. Pretty wild. Low IVR equals quiet markets. Selling vol offers little reward. I mean, that's why we target high IVR, is because you get paid to put that risk on. And in the last couple of years, it's been very, very quick that you've got paid on that risk.
Right.
When both metrics spike, expect a volatility crush as traders unwind hedges. This is another reflection of when volatility gets high, people rush to get protection, which means they pay up for that protection into lower prices. And when it doesn't realize that move, those options move very, very quickly, and you have a propensity to take off those hedges, which is another natural bid. So you get kind of this, the volatility of the actual price move is big in both directions when you have high implied volatility.
Very nice. Very good.
Last slide here. So the final takeaways here. Fear fuels trading when markets get scared. Both volatility, which we look at as IVR here, and trading volumes rise. Crowd peaks mean reversal. Once everyone reacts, there's no one left to panic. Volatility fades. So typically those spikes in vol are usually your signal to get some long delta there, or at least sell some volatility. Volume confirms fear, so high IVR and high volume signals real emotional driven volatility, so you typically have those two go hand in hand. High IVR and high volume is our short vol setup. I mean, this is what we look for in all of our trading here. Call markets, you got low reward. Low IVR means little movement. At least that's what the market's pricing in, so you might have to be a little bit more directional versus the short volatility aspect of the trade.
Good job out of you. We haven't mentioned it today. Your OKLO is down around $6 and change.
About time.
What's that?
About time.
Yeah, no, you need
more to go.
That a little lower. Even the S&Ps continue to rally. They're up 53. Nasdaq's up 255. Russell, which is the leader of the clubhouse, has sold off a little bit, but still up 31. Dow up 290. Volatility in by $1.15. Oil down 61 cents. Gold back up near its highs, up $1.30. I digress. Up 130. I apologize. Oil up 130 to 43.43.
Do I get back into a short gold? Do I try for two? Didn't even let you respond.
Well, I'll let you know if I love it immediately following this break. Only if it goes in that direction.
Only if I make money on it?
Correct. Only if you're
if I lose on it, you're going to tell me how stupid I am.
Of course.
Yeah.
Of course. With gold, now you can't do it with, you're trading them.
I'm doing the MGC, which is 100 ounces. So
right. You could do it in GLD. You could sell puts and futures because volatility is so high. Now, you're not going to get any margin relief.
In GC, you mean? Or
in GLD.
You want to sell stock?
No. I want to sell puts because it's like 100 shares is like your
you're saying
you're trading. You're trading the smaller future. So if you want to take advantage, you want to make a little bit of a premium play, you could sell a put in GLD and sell your micro that you're selling.
And those are the same.
Equivalent. Now you're not going to get any margin relief, so it's going to use margin on both sides, not like a classic, sell stock, sell put, or buy call, sell, buy stock, sell call, covered call, or inverse covered call, upside down covered call, whatever you call it. But again, a strategic play. But You're a Neanderthal. We'll take a quick 90-second break and come back. We got
way outside my
outside your.
Couldn't do that. No way.
We haven't had a downtick in the market, by the way. Let's talk about the market just quickly here. We haven't had a downtick.
How could you have a downtick when they're smashing vol?
They are smashing
vol. Every second that goes by, you have just vol getting vaporized on those puts on the downside, and you got people buying, selling out of what they bought, and you got bids in the market.
Yeah. And you've got Bitcoin, which has been quite volatile as of late. It too.
Do you get long vol though?
Again?
Do you get long vol? Like, do you sell a call spread or something in SPX? Not exactly long vol, but playing for downside.
Are you looking for like a short-term play in 0-day, one side kind of thing, or they're going to trade pretty cheap? Let's take a look here. If you go out to around the 20 delta and go $10 wide, you get $1.55. I guess if you were going on both sides, you would get to around $3. Let's see, 90, 80. Now you're getting 245 puts.
I thought I was going to be able to do like a broken wing butterfly for a credit. Can't even get that.
No,
not in the
not in the 0-day. No. Let's take a quick 90-second break and come back. We got more Tasty Live. What comes up next? We got our friends Quentin and Ryan next. We'll be back in 90 seconds with Tasty Live. Even the S&P's making new highs.
56. Cancel crash.
Don't fade anything.
Can't fade it.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in-the-money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, son, but enough out of you. Tasty Trade Desk. That's right. Quentin, my man, how are you?
Fellas, how's it going? Doing very well. How are you?
Good to see you. Now, you're new to Chicago relative, right?
Yes, yeah. I've been here for a little over a year and a half now.
Okay.
I think,
okay.
yeah.
So that's still new. If you can say year and something or under a year.
I would agree. Yeah.
What's a young man like you do on a weekend? I've never been able to ask.
Upward Mobile. What do you
He's
say?
upwardly mobile yet. I got to talk to him, check his bank account. What's going on?
Hey, we just work on the trade desk, but it's really funny. So I was talking to so this weekend I went to Tuscaloosa, Alabama. That is what I did this weekend. The best place on earth. Went to go watch the Tide play a football game. Destroyed the Tennessee Volunteers. It was amazing.
Well, they're a volunteer team.
It was amazing.
I mean, so they probably don't play together though.
Exactly. That's what it looks like. That's what it looks like on the field. I'll tell you that much. But
throwing some shade.
yeah,
some shade over
Hey,
there.
we can. Last
Did you go
year
to
was a
school
tough year.
out there?
Yeah, that's where I went to school.
Oh, okay.
So last year was a tough year, so I could throw all the shade I want this year.
Yeah.
And I apologize if
I love that he says tough year, like Alabama wasn't in the top 5.
Right.
That's a tough year. They were.
No, last year was a tough year. This year, though, we look good. Kalen DeBoer he's on the good list this year.
I love that.
Last year, not so much. He's been wearing his black hoodie. That's all they talk about. Is like he's 12-2 in the black hoodie. I'm like, you've got to be kidding me. That's like the stat they love to put up about it.
That's what's made the difference.
But yeah. So went there. It's actually funny that you mentioned that. So I was talking to this woman there. She was like, "Oh, you're a stockbroker that lives in the West Loop," and I'm like, "No, don't get it confused. I'm not like some super high."
You don't have a hot tub out on your rooftop deck overlooking the city with a skyline of the city in the background?
Yeah. No, I do not. But we're working on it.
Okay.
No, we're working on it. We live in a nice building, though. Nikki,
you don't have a loft, a 10,000 square foot loft.
I got like half the employees here at my old building that I lived at.
Yeah, it's actually really funny. Yeah.
It's great. It's a great building. It's a good scene.
Yeah,
you migrated them over there?
It's a lot of talent there, I wanted to put them in a good spot.
There you go.
Yeah, I did go to Tuscaloosa with my girlfriend, though. It was a phenomenal time.
Did you have to say that for her so that she
Hey, just trying to,
that you're not looking for the talent in that building?
We're all on the same page.
Yeah.
Just make sure we're all on the same page. But yeah, it was really good.
I know what that pool is like in the summer. Okay, you get the taco place that serves the tacos on the side. Things get a little rowdy out there. It's all a little.
That's why he never came out to my pool in the summertime. I knew what he was doing. I wasn't.
It's a good time.
Where you think I'm gonna come to your pool?
Right. I wasn't heartbroken.
Yeah.
I knew what he was doing.
Yeah, and then I apologize if my voice is a little sore here, because after the Tennessee game, when you win, you smoke a cigar. That's like the tradition there, and then it's really cool. You see like all the smoke in the stadium, and on the TV.
Oh, you stay in the stadium?
Yeah. It's pretty cool.
Oh, that's a cool tradition. That's kind of cool.
Yeah, and so they do it at Tennessee too. Like
ruin your lungs and stuff like that. That's great. That's great. So you have a turnover of the.
In the name of tradition, it's fine.
We smoke cigars all the time.
What the hell they do as they say.
Yeah.
Right.
Yeah, in the name of tradition, it's all fine.
I think it's a fun tradition. I mean, it's better than tying the other team's mascot to the.
It's not like we're freaking animals that take down the goalposts and throw it in the river like some other schools, like Tennessee did the other year.
Oh, that's pretty cool. That's pretty cool.
Yeah. Good weekend.
Nice and you went to the game too? It wasn't.
Yeah, went to the game. It was amazing. I mean, the atmosphere at Alabama is like no other. I mean, you can't even compare it to an NFL game.
Yeah.
There's over 100,000 people in the stadium, and it's incredible. I mean, it's insane. Yeah.
So you're an alumni donor then?
I am not an alumni donor
see,
yet.
They're hitting me up.
Yeah, there we go.
Look at the team putting this up here for the Tennessee cigar tradition. Look at this.
Yeah.
1935, when Paul Bryant played against the Vols in Knoxville, 25-0 win. That's pretty cool.
There you go.
Yeah.
Very cool.
Yeah, it's nice. If you're a sports fan, would highly recommend that you go to that game, even if you're not like an Alabama fan, just to see the
experience.
Atmosphere. I mean, it's literally like nothing else in the world, really. Maybe like a European soccer game you could compare it to.
What's the food like? What do you get? So in
the stadium, you
barbecue,
you want to make sure you're good.
Oh yeah,
stadium food isn't great.
Yeah, you can do.
But yeah, lots of barbecue. We had actually on the way back, I took my girlfriend to Buc-ee's for the first time. It was her first time there. You get a chopped brisket sandwich.
Wow, you a player? Okay,
hey, you know me.
Wow,
but a chopped brisket sandwich.
You took her to Buc-ee's?
Yeah, I did.
What's next? Did you let it pump the gas for you? I mean, wow.
Well, so took her to Buc-ee's. You get barbecue there, though. That's a big thing.
It is.
Like on game days, barbecue is a big
listen,
thing.
No cameras in the bathrooms there. Great bathrooms at Buc-ee's.
Yeah. But Buc-ee's could be the first one.
Could be.
It's a complimentary report on your stool softness.
Yes.
Please explain that.
I'm sorry, you guys probably missed this.
I'm like, what's going on? I'm just like smiling.
So there's a new camera, poop camera.
Vanetta
talked about it. I've been having a great conversation with people.
Okay.
That you put in there and it analyzes your poop. At least that's the story we're sticking to.
Okay.
I'm thinking it's kind of like
a way for somebody to get a camera in a
It's like the Aura Ring, but for your poop.
Yes.
Okay.
So you get like a little
All
update, at least this is my own.
I had somebody wrote in, they said, listen, if a camera in the bathroom is going to stop you from taking a poop in my bathroom, I'm going to get one. So that's the best.
I didn't think about that angle. That was a good angle of like.
Do you have to put a sign outside your bathroom now? You are.
Oh yeah, you're being recorded.
Right, you're being recorded.
It's like when you walk in here, you got to have a sign. Do you have to have like waivers or something? That I didn't think about.
Hey, just letting you know. In the guest bathroom, there's no camera. In here, though, in my bathroom, there's a camera. So you can go anywhere else if you'd like.
Would you be interested in that though? To get a little update, like maybe it tells you to eat more fiber. Or
Nick said he's got a lot of friends that are probably interested.
So that leads me to like something like in our generation, it's really like you want all the health stats, you want all this, all that. I think
then we go out and just.
Be this, and so I think that does some detriment, but then also like a lot of people aren't drinking and socializing as much as they used to, and I think that's like a net okay, well that's fine, right? But it's like a net detriment.
Look, mine's softer than yours.
It just has to float. I don't know why we're talking about this, but if it floats,
well, I think like all those metrics though, like whatever you want to study, I think it's a net detriment. Like you should just be hanging out, having fun, and that stress relieving will do more than any of these metrics can ever do. Really, that's like one of the big things. Is like just reducing
words to
stress.
live by, Quentin. Words to live by. I agree.
I can't believe Beth has let this go on as long as it has.
I stopped listening.
She can't stop us. She can only hope to contain us. You kidding me?
Yeah.
All right, let's get to some business.
All right, Quentin.
Not that kind of business. This kind of business.
Yes. All right. Yes. Top 20 symbols going through the system and their IVRs. Number one, we've got Tesla, 27%, GLD, 90%, Apple, 25%, AMD, 58%, Oracle, 56%, IBIT, 72%, Meta, 40%, NVIDIA, 25%, Amazon, 46%, Micron, 56%, Palantir, 41%, MSTR, 18%, SoFi, 44%, Robinhood, 36%, Google, 54%, SLV, 84%, TQQQ, 30%, AVGO, 26%, RGTI, 49%, and HIMS, 61%.
What a list.
Some high IVRs here.
There are some high IVRs there.
It's good for the premium sellers. We were talking about the up move can just be so frustrating as a premium seller.
Because volatility starts
just
to
straight
contract.
testing the calls right away. Well, at least it might not be that bad because you're collecting so much premium on those puts when you first enter the trade, but it's like the market just tripped and then it's back to normal. Just all green bars.
It's been quite fast. It's been the story of the year or years. This buy the dip thing has become used to be a couple of days. Now it's a day, really a day and a half at most.
I remember when it was
to have conviction.
Yeah, when it was in the heat, like in April, we were talking about it, like just after when the market moves back up. Like I was talking to some of the guys on risk, like Steve, who's been on the show. Yeah. It's like the velocity of the moves now are just so much faster.
Up and down, but really up.
Yeah, like the velocity of the moves, it's elevator down and then elevator sometimes back up. Instead of the
to 2 floors higher.
Yeah,
to go through blast through the roof.
Straight to the
sometimes.
penthouse.
It's straight to the penthouse. Yeah, you go from basement to penthouse. Amazing.
Yeah, so that's what we've been seeing a lot is like the velocity of these moves, whether it's to the downside and now the upside. The velocity has been a lot faster in the markets that we've seen.
Very, very nice.
Crazy.
Good job out of you, Q. I'm going to let you go back to work on the trade desk. I don't want you to be. This counts as one of your 15-minute breaks, right?
There's really no breaks on the trade desk. When you take lunch, you're eating and taking emails.
It is true. Everybody on the desk.
Well, hey, we've got customers to take care of. I like to say this a lot. I love my team and I love the firm, but my loyalty is to the customer to make sure to take care of them. Hey. And so, if that means taking a little bit of a shorter lunch break, that's what it is.
Got it. Love the attitude. Really do. We're gonna let you.
We're giving them more applause.
You got applause coming in. You got applause coming out.
Yeah.
Good job out of you.
Thank you very much. Thank you very much. Have a good day, fellas.
Who's our next person coming in here? I believe it's Ryan. Give him some. Yeah, there we go. There we go.
Up. There it is.
There it is. What's up, Brian? How are you?
I'm doing well. What's up,
How's
guys?
little Bambino?
He's doing well. We're at like 7 weeks now, so we're going through it.
Oh, you're basically through this. You got this. You're done.
Yeah, they say after 8 weeks, it's all good.
After 8 weeks, they're basically on their own.
So I'm almost
Yeah,
there.
yeah.
How you guys doing?
Doing good, man. Doing good. No complaints.
Yeah.
No complaints. October, crypto.
It's back. We're back, baby.
Finally catching a little bit of a bid here. I mean, it did start the month around. I mean, I'm giving you about 116 on Bitcoin, trading around a 111. Got into the 105 handle.
Sometimes it goes up faster than it goes down, Tony.
Sometimes.
Yeah,
This would be a
sometimes.
monumental move if it goes up faster than it went down, because it went down pretty swiftly.
It did, yeah. We collapsed all the way down to, well, not quite 100,000, but close.
Yeah.
Yeah, we'll see.
I think Mini's up 63, NASDAQ up 300.
Yeah.
Vol getting smoked today.
Mm-hmm. Seeing that come in quite a bit. I mean, look, at the end of the day, this is all positively correlated short term. When I look at the correlation between Bitcoin and the S&P 500, it's about 0.73 last I checked. So I think everything's kind of moving in the same direction. When you look at risk on, risk off, you see some correlation with yields here. And so I just think if you're in an environment where you're going to continue to see risk assets perform well and you get into earnings season, you see rate of change of kind of earnings growth here to the upside, crypto should do well in that environment. And quite often into the back half of the year, it does. We've been in a bull market in crypto, clearly been in a bull market in equities. So I think that continues, but I think it's at the same time, it's all the same thing. And so if there is some disruption short term, right, which we saw some volatility last week due to concerns over regional banks, what other bad loans are out there, a couple things have kind of come to the surface, that is going to impact crypto. I wrote about this over the weekend, though. On the other side of it, right, short term, the response to that is likely extremely bullish for crypto. But you would definitely get short-term volatility that I think you'd want to take advantage of if it results in some sort of Fed action. Now, we're looking way ahead, and I don't think you really have all that much to be concerned with, at least in terms of what we know right now, and you're seeing a bounce in the market this week. But those are the things that are going to drive this, and it's also going to drive equities, obviously.
And that newsletter, get it through the Tasty Crypto site.
Oh, I appreciate that.
Sign up, tastycrypto.com. Sign up free.
Sign up right now.
Yeah. You get it Sunday. Are you still doing Wednesdays too?
We do Wednesdays.
Wednesdays
have slowed down a little bit, given what's happening in my life. Because I do write this email. We put out the kind of midweek market update. You get your trading ranges. Those are the estimated moves or expected moves based on the volatility. A little bit of commentary there, and then I write a long form piece every Saturday morning that goes out.
Tastycrypto.com. Get it.
Get it now.
Stuff. Yeah.
Before it's too late.
That's right. Yeah, before I'm no longer writing it or something. So looking at the biggest movers, guys, Chainlink is up quite a bit here, and that's one that I think is interesting to me personally, where that's DeFi, that's a price oracle, that's something that to me is, again, real. Not that the rest of this stuff isn't, but when you look at use cases, utility, Chainlink is certainly one of those that's been around for some time.
Link Army.
That's right.
As the Twitter sphere has it, the Link Army. Don't F with the Link Army, let me tell you.
I'm not messing
you say
with
something bad and they will get
anymore.
you.
I just want to be left alone.
Right?
Don't mess with anybody.
Give this man some peace.
I just want some peace. That's right. I just want some peace.
Yeah.
Got going on.
Others on the list.
Some of your SUI at around 275 and 255. It's trading around 265 right now. Pretty much unchanged on it. So playing for a little bit of a move up on that, on your recommendation. I'm holding you responsible.
Fair enough,
for everything.
NFA, not financial advice.
Of course not. Of course not.
Your money.
But I don't know much about these, and you said it was the one that you liked the most, just like listen to any other person with a 50-50 shot that I think is better than my 50-50 shot. I went with your 50-50 shot.
Beautiful. Yeah, in terms of where I'm seeing a lot of activity, and one of the things that I'll focus on, Tony, in terms of just trying to determine where are you seeing participation and more so adoption? Because this is early stage, and a lot of this value is simply driven off of network effects. You could argue the same about social media at a time prior to a lot of advertising revenues, right? It's who has the biggest network, what's kind of the exponential growth as a result of that. And so a lot of it is network effects. And on the next slide, we do have those expected moves for SUI. But when I look at SUI, you're starting to see, to my point, you're starting to see a lot.
Is that what I can call it, SUI? Because I call it SUI. Yeah, okay.
SUI, whatever you want to call it.
No, I want to be cool. SUI.
You're starting to see stablecoin market cap growth on SUI as well, which is an indication of adoption and liquidity use cases on these networks. Absolutely, right? Because when you start to see more stablecoin usage on those chains, it's definitely a signal of increased activity. You've seen that clearly on Ethereum. That's where the majority of stablecoin market cap is. See that on Solana, seeing that on SUI and others. So that's just kind of a signal that I'll look at. But in terms of our expected moves outside of what we just showed, you're getting a bounce in the market here today. But for most tokens, as you mentioned, October off to a very disappointing start, right? So when we look at 1 week, 1 month,
I'm not mad. I'm just disappointed.
It just leads into Morvember.
Oh, I like that. Okay, yeah.
I saw somebody tweet that one out.
Yeah,
I can't take credit for that.
Eventually it'll go up, right?
Yeah. Everything goes.
I can take credit for I'm not mad. I'm disappointed.
Yeah, that was
for 35 years.
That was a staple of my childhood. A staple.
Yes, I don't think I can take credit for it really, but I can. Even the S&P's up 67. Whoop, whoop.
My dad used to tell me, "You're not sorry. You'll never be sorry."
Oh, is that wow?
Because the response was always, "I'm sorry."
Yeah, you're not sorry.
Wow.
Yeah.
Old one.
No, my favorite one was, "What'd you do at school today?" And I would say, or "What'd you learn at school?" And I'd be like, nothing. They'd be like, "Well, why'd you go?"
Great question.
So why'd you go? Yeah, great question.
I do that to your brother too.
Yeah.
I mean, listen. You're going to spend all these hours there. Learn something, for crying out loud. Do something.
Yeah.
To learn something. I mean, otherwise, why going? Like, why go?
Yeah.
Anyway, it didn't work with him. It's not working with the other one either.
Classic.
Doesn't matter.
Well, you didn't do anything. I didn't take a
because I have
day today because I had to
I have to go, Dad. Because I have to go. Why go?
Sorry, these are we're voicing past traumas.
Hopefully, you'll be able to tell that to your kids someday soon.
It's good release,
You can tell it to your kids.
Absolutely.
Pass it on to everybody.
Yeah.
Well, if you guys want to bounce back, we can bounce back to the slides
Sure.
quickly.
I mean, the S&P's up 70. No stopping. A good speed.
Can't stop, won't stop.
Ooh.
October, everything October.
Well, quick look at expected moves here. So volatility's popped a little bit. When you look at implied vols for Bitcoin and ETH, we've got those three-month IV ranks, especially with ETH, trading towards the high end of that range that it's been in, kind of mid-range when we look at the 1 year period. But there are some outliers there. So I would argue you start to see ETH at 80%. That's pretty high vol, given what we've seen historically. Bitcoin above 50%. Also going to get you back up there, right? It's not. I don't think you're going to immediately go back to an 80 vol in Bitcoin, even though you have seen it technically at times. Expected moves right now about $7,000 for Bitcoin, $400 for ETH. Sol's about $30. SUI 43 cents. That's almost doubled from where we were. So you might get some vol in there, take you back up to $3 possibly, Tony, at least within one standard deviation. XRP looking for a 27-cent move. For those tokens that don't have options, we use the 30-day realized vol as a proxy. So not perfect as it's backward looking, but an indication of how things might trade. We put that in as the vol input. These are the ranges. What I think you really want to see here, in my opinion, you need to see ETH retake 42.50, and you need to see Bitcoin retake 115. Then I'll be a lot more bullish about October. That's where that trend gets back to bullish. It's clearly been pretty bearish over the last couple of weeks.
Very nice. Good job out of you. Taking a look at some of these IV and H, did any of them surprise you on the premium on Bitcoin versus Ethereum or anything like that, or is that?
What's interesting to me is that you have seen, for the most part, and this has been pretty consistent over the last 6 months, you've really seen ETH implieds trade at a discount to realized volatility in there, which might mean that, if you want to buy premium, you want to do debit spreads in call options and something like ETH-A, there might be an opportunity for that. Some people just want to carry those tails to the upside. So you do see that, IV has been a little bit cheaper than realized on a 30-day basis. Implied in Bitcoin has traded at a premium, and you've been paid selling premium in there for the better part of the last 6 months or so.
Oh, yeah.
But yeah, that is one thing to point out. We haven't recently really seen much of a premium in ETH vol.
Very nice.
Anything new in the crypto space coming down the pipeline, regulatory?
Yeah, so that's a great point, Nick. That's something that has been a little bit quiet given the government shutdown over the last few weeks here. But prior to this, we were looking at the month of October as an important month because you were likely to get an announcement on a variety of ETFs, which, should they be approved, bring in fund flows. And these are tokens like Solana and others. We're starting to see more investment funds that are being spun up to invest in certain assets or different areas of the market. So we have the Bitcoin treasury companies, we've seen the ETH treasury companies, SUI, Solana, now starting to see a lot of attention on something called BitTensor. Symbol is TAO. Yes, TAO.
Yeah, you got me in that earlier this year. TAO.
TAO. I'm blanking for a moment there. Apologies. BitTensor.
We don't have it on the platform yet.
Not yet, but that's one that's starting to garner a lot of interest, and you're starting to see some funds that are being spun up to invest in that as well. But I think, again, on the regulatory front, you got two big things here. Short term, you have potential ETF approvals, and this is at a point where the SEC has kicked the can. You have a new administration. You have a much more pro-crypto, kind of pro-DeFi administration. So it's very likely that we start to see some developments there, some positive developments. But the other thing to really keep an eye on here, once the government gets back to business, is the crypto market structure bill. So we got the stablecoin bill. The second piece to all of this is the market structure bill.
Which has kind of come into focus with kind of the cascading of liquidity that came out the other week.
Yes. And you very well might see this as a major catalyst for DeFi protocols and larger investments into this space. It could be kind of the next step in terms of the overall evolution of this and the harmonization of global kind of regulations. So that's the thing to keep an eye on.
When might that come?
Government's got to open back up. It could get that by November. Okay. So there are, into the back half of this year, there are some big catalysts. I still think that you have an economic environment that's conducive to this, right? Unless something comes out of left field, which the thing to monitor is what's going on with high yield credit and some of these regional banks, right? There's some risk there, but you do have a lot of potential bullish catalysts for crypto structurally, which you kind of forget about given the short-term volatility, and the government has been closed. But once maybe we get back to business, those could benefit the space.
Very good. So you know what? We're going to take a quick 90-second break because we don't want anything to change here. Even the S&Ps are up 70 handles, 70, 75 without a downtick. And NASDAQ up 320 and change. Russell up 46. Dow up 439. Talking about breaking down a week ago. You're talking about breaking out today. Volatility down 138. That's 1925, almost a 6.5, a little over. Look at volatility right where it was when all of this started. I mean, unbelievable.
Yeah.
The opportunity in selling premium has been over the last week. Bonds are up 7. Bitcoin hanging out at 111.4. Hasn't had a downtick. Hasn't really had an uptick either. But it is higher than it was starting this weekend, down at 107 and change. Ethereum up 210. Big move there, actually a bigger move, 5% versus 4.5% versus 5.5% for Ethereum. Oil can't get out of its own way, still down 58 cents. And gold near its highs, up 132. We're going to take a quick 90-second break and come back. We got Liz and Jenny next. Good job, Ryan. Thank you so much. Peace.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, while others charge for professional tools. tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. Hold on.
She's wrong, I'm right.
High school party. High school kind of. Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college, I went to a different college, but we both ended up at the CBOE together.
Yep.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking, that beautiful brunette who I want to say, what is the Flashdance? Can you give me a shoulder out?
Is it Irene Cara?
Who from Flashdance?
What's her name?
I don't know, but you
Who's
come up
Irene
with the weirdest names. Hold on.
I don't know. I left early and I'm getting my hair colored right after the show. So I said
Jennifer Beals.
Yes, thank you.
Oh, Jennifer.
I was like, Jenny comes up with I was telling my husband this weekend, Jenny has the weirdest references. Like, what'd you say you looked the other day? Like the girl from, you're like, I look like the girl from 3 Men and a Baby. I was like, what?
Yeah. No, but it was the wrong movie. It was the wrong movie.
Look who's talking. There was a baby in it.
Oh, because my hair looked like Kirstie Alley's. Yeah. No, today I was going for, who is it, Beth? Who is it? Who's the flash dancer?
Jennifer Beals.
Jennifer Beals.
Thank you very much, Beth. You're the best.
Thank you, Beth. Yeah, I wasn't going to blow dry my hair because I'm going right to get my hair colored after
this.
We
could dump a bucket of water on her during the show. This would be great.
Hey, listen, let's get right to it. I've got lots of surprises for you in our account.
I mean, I love when you tell me the surprises because I know what our account looks like, but hit me with it.
Oh, because it's linked to yours.
No, I didn't look this morning, but I know what we have in our account, and I know what the market's doing.
Hey, but you know what? This is a perfect day for calendars, like calendars where the short rolled off and we still have a long. This is when calendars could come in to ching.
Woohoo! All right,
let's go in. Let's pop into the account. So, Apple up $10, and we had a residual from a calendar.
Woo!
Woo! We have the 255. I think. Did we have the 255 calendar?
I don't know. Pop out the side. Let's take a look at it. That could have been a diagonal. Could have been anything. But we have I thought 24 days.
Okay.
Yeah, 115 calendar.
No, that was Disney. That's another one. Yeah. Oh, no.
It was a diagonal.
It was a diagonal. It was a diagonal. 4 days. So we paid $4.26.
We scratched it.
No, it's worth $8.90.
Oh, I thought it's only worth $4. P&L open $4.
What are you reading?
P&L open, right? Go to the next one. You see P&L day, $8.90.
412.
412.
Yeah, 412.
$4.26 for it.
Yeah, it's worth $8.90. It's worth $8.90. We paid $4.26 for it, and it's worth $8.90.
Oh, please.
So here, we paid $4.26 for something. We're going to sell it for $8.90. We made $415. Watch.
Oh, I see.
Yeah.
Okay.
So we made $400. We made $400 and $400. We paid what would we pay here? Pop this out again. You're really ruining this price. We paid $426 for the diagonal, and we're going to sell it for $875.
So that one is worth $4. We paid $4 for the whole calendar. That's why I was getting screwed up. Keep in mind, can't see that distance. I have glasses on that force me not to be able to see that. I think I'm going to look over there.
Take those glasses off.
No, because I can't see anything anyway. Like, so now I can at least
those
see.
are your cheater magnifiers, right?
Those are the ones that allow me to see this platform. So that's what I'm going to do now.
What are you looking at?
I have my computer, so I can look at what our account is doing.
Oh, okay.
Visually impaired people, it's really tricky with the depth.
Hey, you know what? This is why you could just sit back, relax, kick your feet up, and I'll control the platform. I'll just talk you through.
Just tell me what
I'll just tell you. Okay, so Liz, back on the 10th of October, we paid $4.26 for a diagonal, and today we're selling it for $8.75. Our short rolled off. Apple's up $10.
That's good.
So that is helpful. That's helpful.
Very helpful.
That helped offset that loss in that SPX put spread that one day.
Yeah, it did. We're using Apple to SPX.
Yeah, that's good. No, I'm just saying that.
Push it through so I can do it on our side.
If we get filled. Once we get filled.
Okay, but we did get filled in Disney.
Disney was a GTC. That was another surprise. Stop jumping the gun. All symbols today. We got hit on a GTC that was a Disney calendar. GTC on a Disney calendar.
What did we make in that? Can we see what the opening print was?
I think we put in a GTC for only, I'll publish this to the follow feed.
Perfect.
I don't think we made that much in it. I think our GTC was, let me see. Disney. It's gone. So Disney. Disney in the last 14 days.
Hey, that's pretty good.
No, that's a different trade. 265.
Hey, that's great. That's 10 or 20% on a calendar. That's fine. That's exactly what it should be.
Yeah. Okay. So that's on. We're still working this. Let me get out of this Apple trade. 850. Here we go. 850. Let's go. Okay, we're out of Apple. I'll push that through. So these are closing trades, all heading to the follow page. We're out of our Disney calendar. We're out of our Apple diagonal. And it's finally starting to rise. Maybe October is true. Maybe October will happen. We've got crypto up. Look at this jump in IBIT. Can you see the chart?
I can see green. I can see a jump from point A to point B. That's good.
Hey, it's not quite there yet, but we needed it. We needed a big day in IBIT, so we're up $400 today in IBIT, but we're just kind of back to scratch on all of these opening positions. Let me see.
So we have a zebra in the 60. We have a zebra in the 11-day, and we have a 4-day jade lizard type thing.
Yes. So we'll just leave all.
We need it above 64 for our.
But hopefully this is the start. Hopefully this is the start of a little Bitcoin run. BTC. We've got the end of the month coming soon. Bitcoin is up $5,000 today to 111.
And before you press the button, I know it's up, which is good.
Yeah.
Where do you think the VIX is trading?
20.
I love playing this game with you.
I was going to say 19, but I thought 1873.
Yes, isn't that crazy?
All right, cancel crash.
I know.
Cancel crash.
So VIX is down almost 10% today, which is...
Well, and it was down huge, I think, by the end of the day on Friday. Yeah, because it was did it get up to like 26? How high did it get on 29? 29 on Friday.
And it's now 1873?
And remember on Friday, I was like, geez, it's hard to find good ways to like get short volatility. And we talked about a bearish zebra and UVXY or buying something. But it's so hard. Like if you're buying a put spread, you're never going to make that much. You're paying too much of the width of the spread.
So you and I both know the relationship with the market and volatility. So I prefer to use, like, if you think volatility is coming in, you're going to be getting long the market. It's which came first, the chicken or the egg.
Right.
I prefer to use the liquid options.
Like get long the market instead of getting short volatility.
Yeah.
But hopefully Mikey wasn't afraid to sell out his mini VIX.
Oh, yeah.
Because we have 29 on Friday. Yeah. That'd be good. That'd be good for him. Okay, so what else is on the move? We have in our account, some bigger movers. This is the week. This is the natural gas week. Oh, no, 8 days. It's going to be next Monday.
I know, and it's going up. I want it down.
Hey, I got my 3-3. I got my 3-3 butterfly.
Yeah, I want it down. This one we need it at 290.
We've got 8 days. So it doesn't matter. It doesn't matter where it is today. Natural gas can move between now and the next 8 days.
And it will. It will.
Yeah, it will. Other big movers. Oh, ETHA. So ETHA's up too, which we just have a short put spread and a long call. We'll leave that. We're leaving all of that. HIMS took a beating on Friday. HIMS was down like $10 on Friday.
Really?
Yeah.
Let's take a look at the chart.
Look, this hurt because I have quite a few shares of HIMS. It was down $10 on Friday. Painful. So
painful.
This little bounce of $1.80 is nothing.
No, something just, I don't know if you saw. A GTC got hit. All
right, I'll check. And then, nothing else. But at least we have all the crypto stuff. SBET, ETHA, IBIT, it's all
October
going up.
was a tiny blip. Maybe it's going to rise like a phoenix.
Well, hey, the 31st is not until...
it's a while away.
11 days.
Yeah.
11 days. Do you have your costume?
11 days is an eternity. I do not have a costume.
Are you going to dress up?
Probably not.
I was at a family party yesterday. My little niece, who's like 8, asked me, Aunt Jenny, what are you going to be for Halloween?
Did you tell her a box of upticks?
I was like, I'm going to be a witch. I don't even need to dress up. Don't worry. That's all I could.
I do know this. Annabelle had 4 costumes delivered to our house. She has 4 parties she's going to, and she's wearing something different each of them.
What is she going to be?
Wonder Woman is one. Queen of Hearts is another. There's 2 other ones that it's all group costumes.
That's good.
Yeah.
When I was a senior in high school, when I was Annabelle's age, I was Wonder Woman.
I know.
I made my own costume. It's very easy.
Well, so is Amazon.
All right, let me pop out the side and see what GTC was hit.
Jeff.
Oh.
Jeffries, believe we put that on late last week.
You know what? I think we just put it on. Okay. I'm glad that hit because none of our trades are trade recommendations. None. But I was at a party with coworkers on Friday, And there were a handful of coworkers who
50%.
There were a handful of coworkers who came up to me at the party and said, "Oh, I did your Jeff trade. We did your Jeff trade." I was like, great. I hope it works out. But like,
I'd rather be lucky than smart. So
Our trades are net trade recommendations. This was in honor of Jeffries. They did have some news. There was some news and the stock was down. That's why we sold puts in there.
Yes. Jeffries took a big hit, but it rallied pretty quickly off of it. Honestly.
Yeah, let's take a look. Let's take a look at the rally. Up 5% today. Oh, yeah. This was the day. Drop down. We're out. That was quick.
That was quick. I like it. Well, that's why we put a GTC in, because we probably wouldn't have even noticed it. Because on a day when you're looking at all of your agreement, it's good to have those orders in to close for a profit. We, on this show, Jenny and I mean, to each his own, but on our show, we rarely put a stop loss in. We don't put stop loss orders in. Jenny and I don't. We put orders in to take profits. So when it hits, we know that, and we like that.
I was rooting for, so Friday's closed 66.64. Didn't Mikey need it at like 66?
You can take the tape, because I did this for him. But I don't remember what
I know. At the end of the day, I was rooting for Mikey. I thought maybe he needed 66.70. Don't quite remember. But on Friday, we don't have any more bearish positions. Our upside broke wing butterfly is gone in SPX. Our little, what was it called? Delta Buster is gone in SPY. So with the pop up today, we've talked about the two-way action in the market. If we want to put any bearish trades on, we could. Any bearish trade we had is gone. Calendar, Delta Buster, Baroque Wing Butterfly.
Any bearish trade I have in my account, I mean, I'm very similar to this account, is gone. I wasn't holding on for dear life with anything.
Like if you go through here, and I'm looking at our beta weighted delta. So beta weighted delta, I can see, I can pretty quickly add it up. 10, 33, so 43, 53,
you can put
60,
all your
70.
Put all your deltas up there.
We probably are long 80. 120.
I can see it.
So 120, and we have no...
No, but keep in mind, do you remember we looked at this? The beta-weighted delta is long because of those cryptos. So if you hit the top, hit that beta-weighted delta button, and just go to the longs. So they sort them all together. And flip it. Yeah, there you go. It's
SBET, ETHA, IBIT. And so forget it. Subtract those, and we're at like...
Yes.
50,
that's a lot.
Something like that.
That's 70 deltas.
Right. And then the rest are just little.
So when you
what do we have in UPS?
Away, we're not long that much, but those beta-weighted deltas are a lot in...
UPS, here's a long call. I'm going to guess this is left over from a calendar, maybe. Let me see. UPS, what did we do? 85, 89 diagonal.
And it's left over. Oh, let's get out of it.
Okay, so we paid 210. It's 226. It didn't work out. It's
a scratch.
Hey, yeah, we paid 210. We're going to sell it for 226. It's not a loss. So, yeah, let's get out of that. I'm kind of glad we noticed that, just to not let that sit and decay. So that's UPS with the 50. Oh, they have earnings coming up. Okay. So we did take off a couple things today. So we're not as long delta as we were.
No, yeah, true. Can you push those through too? I'll do this.
Sure. Okay. Now tell me, I know your son, JD, had a busy week of being in charge of breaking financial news to his fraternity.
This week.
Oh, this week.
Yeah, so today was day one.
Today, so he has to give the fraternity their financial news every day.
He has to tell everybody, and I actually, well, when I say he, I mean I hope your pledge masters aren't watching, because I wrote the best because it was his week this week. So he's like, wow, thank you so much. I was like, here's what's happening. I was like, the market is set to open up across all fronts. Gold making another number one.
Ooh, is it?
Gold was before the open. I don't know if it's moving now. And then he's got a certain stock. So I told him exactly what that stock was, what the expected move for the week was, and when their earnings date is.
Nice.
So yeah, I said cryptos are getting a little bit of a bid, and gold's at an all-time high. I also said keep an eye on your rare earth minerals as they're still moving on the China.
Okay.
On the China tariffs.
Okay.
So he's going to send that, and they're going to be like, "What the heck?"
That's good. That's good.
So I got to come up with every week. Or every day this week. I got to do some other.
What is that? Rare earth minerals. What is it? MP materials.
MP, and then there's also BE.
Okay, so MP is it's up $1. It's not, but they did come down quite a bit. And Bloom Energy Energy.
And Oklo, they were all up pre-market.
But Oklo is not a rare earth. That's not.
It's being treated as one.
I don't think so. I don't think so.
Well, SMR up? So BE is up 5%, but you can see it was up higher than that. If you go over that green bar and tell me where the high was of BE.
Yeah, it was up to 119.
Yeah, it was up a lot higher.
So they're rallying back a little bit. The nuclear stocks, they are up. Oklo. Oh, they were. It was up. It was up this morning. But it's down now because you can see.
It was up this morning.
It was up, yeah. So it was up as high as 170. Now it's 158.
I know that because I looked at the prices of these when I sent it to the kid. So hopefully.
I need it to close this week 165.
Why are you?
Why
were you meditating?
165.
What's happening over there? I can't see, but I think she's.
I put through I wanted to close at 165. I threw so many 190, 165 put spreads on top of my stock. So thinking, and they expire this week. So if we could close at 165 this week, and I guarantee you those are nowhere near full profit. Nowhere near. 4 days to go. Let's see. I bet you, so 190. They're $25 wide. What do you think a $25 wide put spread is trading for?
$25 wide put spread to buy it back. Did you sell it or
to
buy
close? Well, what's a $25 wide put spread that's all in the money that's going to expire in 4 days?
Oh, I don't think it's anywhere near even 50%. I think it's probably 40%.
See, it's you know what I thought I was going to open this up and it's going to be trading $16. It's trading $19.50.
$19.50?
Yeah, it's not bad.
It's not bad.
It's not bad. No, it's not bad. It's not bad. I thought it was going to be trading $14, $15. But that 165, that's where I want it this week. So that's down. Is SMR down? No, SMR is unchanged. And Southern is my other. Southern's my sleeper. Southern's my sleeper nuclear.
And that's down too.
Yeah.
A little bit.
Yeah. Okay. Do you want to sell puts in?
So I did get this. Oklo and SMR are entirely different industry. The crossover between RE nuclear is uranium mining, which I believe is UUUU. So let's take a look at that. That's the crossover between the rare earth and the nuclear.
Now UUUU says Energy Fuels Canada.
So he said that's a crossover between nuclear and the rare earth.
And that is up today. They all had their massive rallies and they fell a little bit. I have a question for you. If somebody that you know and calls you, someone who's not a trader but they trade a little bit or they invest, they call you and you like this person and they say, I think I'm going to buy gold. I think I'm going to get long gold. What do you think?
I say go for it. I know you've told people.
No, I'm just curious what you would. I'm just. They haven't been in it yet.
No, I would say I don't mind. Just make it small. I don't mind. Make it small. But I'm a gold bug, right? So I don't think this is the bottom. I don't know if this is the top. Do I think it could have some two-way action? I don't expect gold to fall out of bed, barring any unusual circumstances. Could it stay right here? Yeah, I would be like, go for it. Buy it.
I just said it's at highs that we've never seen before in gold history.
Yeah.
It's at all-time highs.
So is the market though.
Right.
So it's choose your poison. Which all-time high do you want to buy?
I should have said call Liz. That's what I should have said. When they called me and said, what do you think? I'm thinking of buying gold.
It doesn't matter because you can
call
have a different opinion than me. But I have no problem. If somebody, the difference is if it's somebody that I like, that's should I put my entire account in gold? My answer would be no. But take a little bits and buy gold. You don't know. We don't know.
I don't know. I don't know where it's going.
No one knows where it's going.
Nobody knows where it's going.
Today.
No one knows where it's going.
Yeah, so if they called you Friday, they would have done better by buying gold today.
No, Friday it was higher. Friday got as high as 43.92.
Okay.
It's 43.70.
But it's still
Friday was all-time high.
You're still okay buying gold.
No, I just it was a painful question. If someone's going to call me and they wanted to ask me some kind of trading related question, it's probably the worst question they could ask me.
But I personally don't think that you or I, given what we do for a living, should tell people what is going up or what is going down because we don't know.
Here's what I said.
So we don't know. What we can do if somebody said, hey, I think if they give you your assumption, we can overlay a complex option trading strategy on top of it. Hey, and that's why I'm looking at the camera, which leads us to believe that I believe Tim Knight's going to come on our last call on Wednesday.
I can't wait.
He's going to give us the direction and we're going to put a complex option trading strategy over it.
Love it. Yeah. Love it. There's nothing I love more than having Tim Knight on.
Yes.
All I said was, we're at highs we've never seen before in history. I know people who are long gold and who want to be long gold. I also know people who are short gold. So I had no, and I have no position. I said, I have no position in gold. So
that's what I'm saying. If somebody asks me a different question, so I was at a wedding this weekend, and I have a lot of new viewers. Hello.
Hi, everybody from Atlanta.
So I believe the bride's father is watching today.
Oh.
Yeah. So, and he's a very smart man, but that's what I said. I was like, I will never give you a direction. You're
so easy for people who know options and understand options to have a long portfolio and then be able to protect it or add layers on top of it. And so that's another thing this person said. Well, what are you doing? Like the market has been at all-time highs. What are you doing? Are you taking positions off? And I said, no, I'm just some option positions on top of them. And if people don't know how to do that, they either just like stay and hold their longs or they sell them.
The bride's dad knows exactly what he's doing. He's like, I'm retired. He's like, I was trying to get more bang for my buck. I'm buying just out of the money calls, and I don't like the extrinsic value. I was like, hey, it's your daughter's wedding. Call me on Monday, but we're going to talk about zebra options.
He's never seen our show?
No. Mm-mm.
Good for him.
So he was great. He wanted to talk about it. I was like, no. Daughter's wedding. Get to the dance floor.
Yeah. Oh my gosh, that's good.
Yeah, it was fun.
Nice.
He was smart though. Like he knew. He said verbs. Extrinsic. He said our verbiage.
Yeah.
Extrinsic value. Long calls. I want more bang for my buck. I'm retired. Said I got you.
Nice. Nice. Welcome. What's his name? Father of the bride.
Father of the bride.
Father of the bride. Yeah. All right. So what else were people talking about at the wedding? Anything? Like, were they talking about, even my mother-in-law, I saw her yesterday. She asked me if she should buy Bitcoin.
And I say, yeah, go for it.
Like you said, we're not professional direction pickers. Nobody is. Nobody knows.
I would say if we say buy it, do the opposite of what we do. And that's what we used to do. Every time Tom would do something, we would take the opposite. Just because no one knows direction. And I mean, Dr. Jim does a great job being like, no one knows direction. If they say they know direction, they're probably wrong.
That's why you have to learn options, to give yourself a better chance. Give yourself a better chance than 50-50. You have to learn options. Okay, what...
We do you want to pop into Twitter real quick?
Sure.
Okay, so we've got tweets coming in, which are fantastic. We've got Jack Tucker coming in out of the gates.
Oh my gosh! And Jack Tucker, he posted his final numbers on Friday because Friday was a wild day, and he posted his final numbers on Friday. I think he walked away with like 17,000 after he took some losses on some of his positions because he was like rolling up puts, and then took some losses on the puts. But I think he walked away with maybe 17,000.
Take a look at this MGC scalp idea.
Ooh,
that is MGC's mini gold.
Wait, thanks for the MGC scalp idea. This made quick 1,700, and he said at Trader Nick. So that must have been an idea from Nick.
Yeah, that's a good idea.
Yeah.
Jack Tucker usually does his tranches. I wonder if he did today.
Look at him now. He's in, besides SPX, he's got the MGC.
Wow.
So MGC must be pretty big.
It's the mini gold future.
Yeah.
No, but I mean, look at how many in and outs.
Oh, yeah. He's got a lot.
I think it seems pretty small. How much notional is that?
Here, let me... you
don't have to go to the platform. She'll just tell
I'll look it up. MGC... If I want to buy it or sell it, it's going to use $2,600 in buying power.
Oh, so it is smaller. I mean, regular gold is a big animal.
Yeah.
Okay, then Bob on Fire, he comes in every with our earnings, which I love. Thank you so much. Here's the good morning, ladies. Here's this week's potential earnings plays, and you can see there's a lot on.
Oh yeah.
GE, LMT, Philip Morris, RTX. Is that
So
Raytheon?
you've got Lockheed Martin, Raytheon. You've got a few of the defense companies today.
Yeah, you do have defense coming.
And GE. I mean, is GE? I don't know if GE and GE Aerospace, if they're their own companies now. Maybe. I don't know.
Yeah, I think they did spin off. And then GM as well. So we're on deck. I mean, you got some big ones tomorrow. You've got Netflix. Look at this. We've got Tesla and IBM on Wednesday.
It's a busy week. So, all right, keep that. You keep those up. Let's start looking at some. 3M is something I have traded quite a bit. Selling puts in 3M, but it's $155 now, 35 rank. Let's take a look at some of these.
Okay.
We're not on last call today.
No, let's pop in the platform.
So 3M, $154. Let's see what the expected move is. $8 expected move. It's strange because 3M stayed in the 100 level for, I feel like it was all year last year. It was, look at this. we had it in the 80 to 90, 80 to, 85 to 100 range for most of last year. And then one day, one earnings had a breakout, and now it's been, I haven't traded it since this one breakout day. I don't know what to think.
I mean, 35 rank is not that much for 3M.
No. All right, let's take a look at some of those.
So Coke, you want to look at GE? Let's see if GE is
it is GE. So look, we've got GE Aerospace, Raytheon, and Lockheed, 3 defense companies.
Are you surprised that it's $300? Because I am.
Well, what's their market cap? I mean, $318 billion.
What's the regular GE?
I don't know. GE. I don't know what the symbol is.
I don't either.
Like, let me type General Electric.
We bring good things to life.
I don't know. General Electric? Does it even come up?
I guess it doesn't.
Maybe, I have no idea.
I don't know. We'll look into that later. There was a...
So, I didn't know that the, light bulb company disappeared and now GE is just GE Aerospace.
I didn't either.
I don't know.
Okay. So
all right.
Lockheed Martin, Philip Morris, RTX, but all those are high. Aren't all the aerospace and defense companies?
So, yeah, we've got $15 expected move on GE, and it's $300.
Hey, Jenny, can you show people, just because I have people in my head, can you show them how you got to the expected move for the cycle?
Sure.
Let's highlight that.
Okay. Here's GE. Here's the weekly. We've got a 15 right here. You can see my arrow.
The things that's in the parameters on the 4DTE, if you follow that over, it's done for you. That's exactly telling you what the expected move for the week is.
For the week, $15 expected move. So we know if it's trading 303, I could go about $15 lower. So here's the 290. 287.5, and you are getting a decent credit, $280.
And visually, if you look at that green bar, the brown bar is the visual representation of the expected move for the cycle. It's all kind of done for you.
Right.
Just assume that everybody knows what it is.
So that is GE, but it's expensive for us. Those puts were $4,000.
Yeah, that's expensive.
Okay, so that's GE. I'm going to go to...
I think GM's going to be the only one we can afford.
Yeah, then because Lockheed Martin, that's $500.
If you didn't like it at 3, you don't like it at 4.
I know, they're just expensive. There's high-priced products are hard for us to trade. They use a lot of buying power. And then RTX is Raytheon. I don't think that's as high, $160.
That's not bad. So let me ask you this. Raytheon's got a $6.42 expected move. Same thing, you're looking at that cycle for that. If you're going to sell it, you're using $2,600. So would you ever want to do a calendar in this instead of a iron condor?
On some products, I will. On some, I will. Sure.
So not iron condors, but strangles and iron condors. And so if you did an at-the-money calendar, it's pretty much the same thing as saying it's going to stay within its expected move.
Yeah, but I think it depends on the product. If I'm doing the calendar, it's at 160 and it's got to stay right around. And I don't think this is that liquid. If we've got a liquid product that we don't think is going to move that much, maybe some of the banks on earnings, that might have been a good idea. But Raytheon, look at the markets aren't that tight. The market, it's not.
Ooh, that's wide, 137 at 152.
I'm surprised it gets 3 stars.
Yeah.
Excuse me. So, okay, you said Coke?
Coke, KO. Knockout.
$68, $1.30 expected move. Now here's one. This would be a prime candidate for a calendar.
Yeah, because you've got a $1.38 expected move. Now you got to use the at the money, so you can go to 68 or 69.
Yeah, so let's just say I sell that 4-day put. These are easy trades for earnings that are very low commitment, and if it doesn't move, you'll get paid because you'll get this weekly decay.
Do you ever put them in? No, I think 68 and 69 are the same strikes. Doesn't matter.
I could do one of each.
Yeah, let's do one of each. Because one will be closed, and then if you get some movement in the right direction.
I'll throw in a 68 put calendar, and then I'll throw in a 69 call calendar. Very inexpensive way to make an earnings play.
Let me tell you our thought process. Instead of doubling down, we're only spending $25. So instead of doubling down and doing 2 68s, they all trade wrapped around the same price. One was $26, one was $24, doesn't matter. So by separating them, you can see if one goes in the right direction. You might have a long.
Yeah. By the end of the week. We might not be able to take them off till the end of the week, but...
No, I think we're going to sit on them till the end of the week.
End of the week? You know what? Neither of us are here on Friday.
Neither of us are here on Friday.
Where are you going to be? Oh, I know. You'll be touring Miami with my son.
Yes. I'm going to Lexington, Kentucky.
Mm-hmm. Yeah, Friday morning during the show, you'll be on a tour.
I will. True story. With a car full of beer.
Just heading down to Lexington for the biggest tailgate. The biggest tailgate this side of the Mississippi. Which side of the Mississippi are they? If I say like the biggest tailgate this side of the Mississippi, I don't.
I think they're bigger down there. This side of the Mississippi, they're smaller. We asked Logan tours me, I'm gonna be like, "Thank you for the tour. Here's a case of beer."
Do not give him a case of beer. He does not need a case of beer. He doesn't. Those kids, he doesn't need anything. Okay, so those are pushed out. Our little Coke earnings trades.
Perfect.
Our little calendars. What else was on Bob's list?
So you've got Coke, GE, LMT, Philip Morris, Raytheon. I mean, I don't think we need to do anything else. PHM, don't know what that is. And then GM, which I think we can afford too. But there are quite a few other tweets. So if you want to pop back into Twitter. All
right, sure.
So GM's only, that's $57. I know we can afford that.
$3 expected move. It's not a bad Jade Lizard.
Sure.
You get the 55 put, 60-61, getting $1 using $900. This is GM, but I don't want the risk of the put. I can find a better way to make $100.
I know. I kind of agree with you.
Yeah, back to Twitter.
We're looking at fringe players. Okay, let's pop back into Twitter if we can. So then under Bob's list, we've got Eric Blue Wackadoo coming in. We'll go to Twitter in a second. I will just describe it to you if you'd like.
Yeah, tell me what's up with Blue Wackadoo.
Blue Wackadoo looks amazing in his picture, and he says, "Happy Monday. Missed my entry this morning while poking around with different ideas. Then vol went away quickly with the grapes."
Yeah, let's pull up Twitter if we can, if possible.
So we will just balance delta and see what.
Here we go.
There we go. I read this already. So this is Blue Wackadoo. He is usually doing. He missed his entry this morning. He's usually doing those 0 to TE.
And vol went away quickly, so he's looking, he's watching, and so since vol came in, he didn't do what he would usually do.
Yeah.
So we'll just balance delta, see what happens. Oh, so now he's got a lot of his positions up. Instead of just showing what he's doing in SPX, he's got a lot of his positions. So I like to see what other people are in, and if we're not in it, take a look at it. Like, he's in Microsoft, he's in GLD, he's in Costco, he's in, what's NNE?
The only thing I don't know on here is NNE, and I would argue I'm in every single one that he's in as well. I've got Microsoft, he's got GLD.
Oh, nanonuclear.
There you go.
Meta, Tesla, GC, Google, Target, NVIDIA, Apple, Palantir. Yeah, this could be Liz's account.
It's going to be me. The only thing I don't have is NNE, but Blue Wackadoo, I'm going to jump in with you because if you have it, I want it.
But here in this account, we don't have Google, we don't have Microsoft, but those are going to be like earnings on deck.
And they are earnings on deck, and they're very expensive.
Yeah.
They are all this stuff is earnings on deck, so we will trade those. Those are the big ones on earnings.
Now, just glancing at that and seeing the up move, you've got the biggest mover, Meta, $14. Well, and GC, $129. Whenever he took this snapshot, but
I mean, $25 is a lot, Meta, but it's a $731 product. And I know this because I'm in.
Yeah, now all time. Look at come here. Well, you don't have stay in Twitter because I don't want to bounce back and forth. But gold now GLD up $11 from when he posted this. GLD was up $9. Now it's up $11.
All-time highs.
Should have told that guy to buy.
I know.
Jenny, should I get long gold? I was like,
yeah. Okay, Frank.
Oh, look at that handsome guy.
I know. Well, hold on. Frank Walsh comes in, and we appreciate that. Frank, the man that's watching our YouTube. And then look at this. This is my favorite. When Grandma catches Grandpa trying to sneak Mia a sip of beer.
Look at her face. So cute. What a cutie, Mike.
I love it.
So sweet.
I love it. That's adorable. Okay, I wanted to get to. Oh, we did this because we weren't. This is from the 17th, so that's good.
Yeah, but you could see if you go down a little bit.
Where am I going to?
To Jack Tucker's recap. Finally, Friday with work let up. So I'm on platform 3 tranches of 0DT for Explanation Friday. Collected. Oh, maybe it was on his. I did share it on ours, but
You didn't put the hashtag?
But it just talked about how his day wrapped up on Friday.
You want me to try to go to it?
Yeah, you can go to our homepage.
Hold on.
You can go to our homepage, right?
No, that wouldn't be our homepage. I got to go to our profile.
Well, you can click on home and then click on our picture.
Profile.
Oh, there you go. So
I reposted a bunch of stuff just while we were doing this. There we go.
Okay, so yeah.
Yes, you just reposted it without the hashtag.
Okay, so Friday recap. Rolled up the put spreads. Last two were aggressive to add the money to collect more premium, and then we had a little dip down. So he collected 25,000 and then took a $7,900 loss on some of the puts, leaving a total profit of $17,000.
It's pretty good.
Yeah. Now, we were teaming back and forth with Jacob this weekend about what we're looking for from Jacob this week.
Take a look at this. This is the study. If you didn't see this one, click on this button, watch the YouTube from last week. We're going to springboard off something.
Yes, and Jacob said this was I don't know, you were busy at the wedding. I don't know if you saw my teams back and forth with Jacob.
I saw things happening. I did not. I'm not going to lie to you. I was dancing and drinking so much. I took one picture at the wedding. I never had my phone with me. Never. I never had my phone with me.
You were busy.
We were having so much fun.
Yeah.
My body still hurts. I'm too old.
Oh, that's nice. That's nice. Don't worry about it. Jacob and I were busy working on this Wednesday's.
Sorry.
So
I missed all of it.
Okay, so here's what Jacob said. On the heels of Jack Tucker and Blue Wackadoo and all these people having such success with the zero DTEs and Jacob doing these studies, we're having him just focus on put spreads right now. And he said he's doing these put spread studies for us because we're requesting them, but we are coming off such a bull market. He's like, we're coming off such a bull market. Of course, they have good results, but it's each one is on in the morning and off in the day. There are days. I don't know that it matters that we're in such a bull market. It's on in the morning and off that day.
But the reason, and I think Jacob's probably not watching us, but the reason we're asking for the put spread studies is we look at what he did with the iron condors, where he broke it down. We're like, if you're not getting anything out of the calls,
if the calls are losing,
yes,
you don't use them. And I get what he's saying. We're coming off a bull market, but again, it's not. Those are on in the morning and off that day. So
but we're not in a bull market still.
Whether we are or not, you just need to get in and out in the day. And if you're just selling one side, you need just a quick pop to get out.
And that's all we were looking for. This kind of springboards off of our original Jajun trade. So Jajun was a researcher that was here a while ago, and he did a study saying that there are more 5-minute up bars than there are 5-minute down bars at a certain percentage in the day, and that's all we're looking for.
So I included that in this week. So this week, I hope. Here's what I asked for, because he said, I'm nervous if he doesn't want, and again, our trades we're just giving you the research, we're giving you our ideas, we're not giving trade recommendations. He's worried about the big drawdowns if you take a hit on the $25 wide or the wider ones. He's worried about taking those hits. So I said, you know what, this week, don't use those trades. Don't do the wide ones. Do a $5 wide and a $10 wide.
Yeah. That's all I am.
I knew you'd like it. I knew
you'd. Small fry, Jacob. I'm in. I can't wait.
I said, do $5 wide and $10 wide and have a very little drawdown. So if you have multiple losers in a row, you've got a very little small drawdown.
Yeah. Good job, Jenny. Good job.
I figured you'd like it.
I do have my son's account in my mind when I do these.
Yeah.
I'm a small fry in these. From my small brain, when I look at these, I would rather not ladder up, but increase my size in the smaller ones.
The small ones.
Then go wider. But that's me. So they're a menu.
So I think that's what's coming this week on Wednesday for us, the narrower, $5 wide and $10 wide.
Great.
But I said taking more. Let's test taking more than 10% or 25%. Let's test taking 30% to 50%. Because if you're doing a $5 wide for $2 and you want $1, you're taking 50%.
50%. Now, they have to put the percentages around there. They do. Percentages are where they have to put this in. I literally will put them on and be like, I want $1. Whatever the percentage is.
I know.
Say I sell it for $3.50, I'm buying it back for $2.50.
So, but if you're selling a $5 wide for $2, you got to take 50% to get $1. That's why I gave them that range of 30 to 50%. Yeah. If you're only doing one side, let's see. I don't know what the results are going to be.
Now I won't sleep for 2 days. I'm so excited for it.
It's Christmas in October.
It is. I'm very excited. We're going to have a special guest on the floor on Wednesday. I'm going to get the research that I've always wanted.
Yes, it's going to be a good day. It's going to be a good day. Okay, so back to...
So that being said, I'm going to go to it again because I know we posted it. Scrolling down.
What are you looking for?
I'm looking for a thing that you posted about... Here we go. I'm going to retweet it again. Because I want people to watch it to springboard off into the next one.
So here's all I want. Here's all I'm asking. Well, the crew...
wear a zebra outfit again?
While the crew is listening, all I'm asking is that we took new pictures. We came in and took new pictures. Can we just get them? No. Can we get the new pictures? Can I get my referee outfit off the what do we call them?
Off the board?
Off the clips?
I'm just going to get you a whistle because then in that other one, you're wearing a black and white stripe. I'm getting you a whistle.
I think maybe I was only in there for the zebra, for the sole purposes of
I wore my zebra dress. It's just a black and white stripe.
To the wedding?
On the plane. No, he had to be way fancier than that. On the plane, because I had to go straight from the plane to activities. People love it. I should have had a whistle with me.
Oh.
Okay. But here is a beautiful sunset in Rhinelanders. This is Frank.
Oh, Frank. At least he's back home in look how beautiful that is.
Oh, it's gorgeous.
At least he's in Rhinelander. And there was some nice weather, honestly. Friday. I know we had rain Saturday and Sunday, but I think Friday was nice. Thursday was nice.
Was it?
Yeah, because my brother was in Michigan City and they were on the beach on Friday.
Oh, nice.
Yeah, on Friday.
I mean, it feels, when you travel, it feels like Friday seems like a million years
ago. A million years ago.
Yeah, it does.
Hey, I'm getting ready. I'm going to Disney World Thursday. Maybe I'll wear my ears this week. Maybe I'll bring my ears to the floor.
Don't bring them to the floor. Let's do it Thursday.
I'm kidding. I'm not going to.
Let's do it Thursday. I'll wear ears with you.
I don't even know if I have ears, but.
Oh, I've got them all. Do you want to?
I know. It's Liz, it's how Liz doesn't do her hair in Disney. She just puts on ears.
It is the greatest place ever. Let's talk about why Disney is my favorite place. Number one, you don't have to do your hair because you just wear ears and socially acceptable.
I think that's why I've been wearing my hair curly, getting ready for Florida.
Yeah. It's socially acceptable.
My Florida hair, starting early.
Number two, I have a total Disney uniform, which is like a cute little athletic dress and ears. I'm like a teeny bopper.
And it's 80s and sunny every day.
You wear a nice little hookah gym shoes, a cute little dress, and ears. Call it a day.
All right, what do we want to do? I'm going to go into our account. We do have a lot of positions.
Let's
do
jump
we
into Twitter.
think?
I'm not Twitter. I'm sorry, the platform.
Do we think this rally is going to last? Do we think it's not going to last?
If last week is any, we don't know. We don't know. So here, I said this last week. I'm saying it again today. I put on some bullish positions. I took profits in a lot of stuff today, right? So I did. I'm taking all my bearish trades were off on the down days yesterday. I took profits on some bullish stuff today. I think we might get some two-way action. So the VIX is still, last week was crazy. The VIX is still almost 19, 1890. So that's high for the VIX. The average is what?
Yeah, but it's down huge since Friday.
It was like the precursor. Do you remember you would see it?
Right.
Whatever day we dropped, I was like, don't you think it's odd that the VIX is up 5%? And
it was up crazy.
And then we dropped.
Right, you're right. It was a precursor. I was just looking at the Tasty Fast Movers to see if anything on here was having a big move, but I want to see. So there's nothing on the Fast Movers. So I'm going to just go to Tasty Default and see what is moving the most here. Apple up $11. That's big for Apple.
It's huge. Well, and Apple
and Baba.
Apple has not participated in the rally. I mean, it has, but
not as much.
Not as much as the other tech stocks.
Yeah.
But then you've got gold miner.
Neo. Finally, Nikki Batista. I think one day, like 2 years ago, Nikki said, buy Neo, and I did. And I've been waiting and waiting and waiting.
No,
it did have quite a run. I probably don't even have it anymore.
She was about to go out there and give Nikki Batista a knuckle sandwich.
I don't know. I must have gotten rid of it. Because it did have, look at this little run from 3 to 8. I probably got out here. 5.
Oh, I'm sorry. Dr. Jim, you've probably been waiting this entire time.
Oh, have you been communicating with Dr. Jim too?
Because I sent him a text, because at the airport, we went to Bojangles.
Oh, did he have the Bowberry biscuits?
I've got a giant child who you need to feed. So I was like, he was getting on another plane. We were getting on this plane. We only had a little bit to eat. He's like, I found this chicken place. And I forget what he called it. He's like, because you know how it's like. I was like, Bojangles? He's like, yeah, I want the chicken sandwich. So we went there and
does he have those in Kentucky?
No.
At his school?
No, but all he saw was a fried chicken place in the airport.
Okay.
Airport. So we're in the Atlanta airport. He got 3 chicken sandwiches and 2 Bowberry biscuits. And Dr. Jim's like, do not lie, tell the truth on air. It was given 2 thumbs up.
I've tried a Bowberry biscuit. It was good.
The chicken sandwich was rivaling a lot of the chicken sandwiches.
Really?
It was so good. It's a spicy chicken sandwich on a biscuit.
Huh.
Chef's kiss. I only had 1. I actually had a half because my son ordered 3 and 2 biscuits. I gave him the other half of mine.
Well, and so you texted Dr. Jim.
Oh, yeah. Yeah. He's like, don't lie on air. Make sure you tell the truth.
Dr. Jim loved Bojangles or Bowberry biscuits. But how did that story, what was his story on the road about it?
I don't remember. All I know is there's something about Bowberry biscuits. So I texted him and he responded.
He's going to have to bring back the Bowberry biscuit story.
Yeah.
Yeah.
Yeah, you got to see him Friday night, didn't you?
Oh, yeah, I did.
Yeah.
Yeah. Yeah, he had his show was in Detroit yesterday, right?
Oh, yeah.
Beth, anyone, how was the Detroit show?
And I was like, why isn't he responding? He was probably on stage.
It was amazing.
It was what?
Amazing. Best show ever.
Amazing. Honestly, I mean, Beth, you're not on the road with us much, but Jim is and like no shade to Tom, but I think Jim is the best.
There's gonna be shade.
Jim is the best presenter on stage of all of us.
I agree.
Of all of us, like hands down, he is. It's like that's where Jim shines.
I agree.
He's really good.
It's because Jim. It's because you're watching right now, and she knows.
No, he is. He is. When we would be on the road, we would sit in the green screen for everybody else, and then I would say, "I gotta go see Jim." Yeah.
I stay in the green room. I'm just kidding.
He's good.
Oh, he is good.
So, but he's got a lot of. I mean, he became a professor, and he's got a lot of years on a stage in front of students.
Oh, and he keeps everything engaging. I agree.
Yeah, his stories are great.
It's funny. All right, let's pop back in the platform. Let's take a look at a couple. That's what I said. I had to. I know you're watching. You're waiting all show. That's why I wanted to do it 47 minutes in, so you had to watch the first 47.
You know, it was probably like 8 years ago we heard the Bowberry Biscuit story, and we still remember it, kind of.
You don't remember the story. We just remember Bowberry Biscuits.
Well, I remember it was a good story.
I was surprised that the chicken sandwiches were as good as they were.
Yeah.
I was starving. It was after the wedding.
All right, so I was back.
And speaking of, and then I woke up, because I had my son with me. I woke up and I had a purse and I had like a bag with a bunch of stuff in it that came with the wedding. So I had a second set of shoes. There was 4 hamburgers in it when I woke up in the morning.
In your purse?
In my bag that I brought home from the wedding. I was like, what? JD's like, oh, sorry, I put those in there.
That's crazy. 4 hamburgers in your purse.
Yeah.
Okay, so just going to IVR, yeah, it's just gold. It's gold. It's gold, Jerry. Gold. Gold. GC, GLD, GDXJ, GDX, silver, and then Chipotle Mexican Grill.
So, but you got to keep this in mind. So all the metals, when they go up, they also get a jump in their implied volatility.
Yeah.
So it's a very unique product in my mind. It's not like your S&P 500 or your, I'm going to use for the public people, the Dow Jones Industrial. As the market goes up, the implied volatility comes down with normal things. But gold, the pendulum swings in both directions.
Are we still in our MCL? Yeah. Oh, yeah, look, it's down again today. 56.
Yeah, it's down.
Ooh. Do we want to do any adjustments to this?
We probably should. What do we have, the 61 put?
61 put.
Close the 62, 65, and let's roll the 61 put out.
So
there's nothing wrong with rolling we're We have 28 days.
We must have already rolled this down.
No, just close it. Close that.
I know. We probably already rolled it down. We'll close that.
It's $3 wide, so it's fine. That's what I'm saying. Like that was.
Jeez.
It was more of a $3 wide. We've got a lot of credit, Jenny. If you pop out the side, because it was a $3 wide call spread.
Oh yeah, we do have a lot of credit. You're right.
It looks harsher than it is because we have a lot of. We had $3.25 in credit.
So and that's why. So it's okay. So $3.25 in credit. So we'll spend this 26 cents. So we'll have $3.
It's not a $1 wide. It's a $3 wide. So it looks just because we're used to a Jade Lizard.
Yeah.
$3. So where's our put? We add $3 onto that. So
61, 58. So our break even's 58.
Yes. Buy that back and let's ship this thing out in time.
Well, I don't know because. Well, then we're going to a different future. We're going from Z to F. Would you ever, okay, we have this put that's like in the money here. Would we ever do something like throw in
another put spread?
Like a
round numbers. I don't like that 25s.
I know, but where am I going to go? I was going to
56, 54.
Yeah, would we ever just throw in a downside ratio spread? Like sometimes when I want to protect my stock or when you want to protect your stock, we'll just do a downside ratio spread for even or nothing.
Just move it from I don't like the 25.
But then we're either gonna get taken a credit or pay.
No, taking a credit. I want the 56.54. I just don't like your 56.25, the one you're buying.
Oh, okay, there.
That's all I wanted. Because then you're taking in a 40-cent credit. I like the rounder numbers. I do.
Or can I do 56.53?
That's a debit. That's fine. It's 12 cents.
It's 12 cents.
This is if it continues to fall.
If it continues to fall, so then here I'll go to what it will do for us. So we need it up, but if it's going to level us off. So if I didn't do that, we would keep losing 1 for 1 to the downside. What this is going to do is level off our losses.
Level 186. That's not bad.
Level off our losses here until 53. And so then max loss is 186 until we get to 53. And then the loss would pick back up. So
you want to just do it for a small credit? Because once again, either way.
No, I agree. So then I would do 54.
Yeah, 41 cents. That's great. You're doing
per view. So then you could see.
I mean, I just like to have a little bit of a credit on it. So we have $3.70 in credit on that put, if that's the case.
Well, we just paid 20 cents, so we have now $3.40.
$3.40.
Yeah, because we paid to buy back the calls.
Did we?
No, we didn't close it.
Yeah, close it.
Trying to close this call spread. I keep penning it up and I'm not getting filled.
Spoons are up 70. You know what I can't wait for tomorrow? I already got it in our inbox. What the expected move cycle is. Kai's going to give it.
I'm sure you could see. I think it was on Option Drive today.
It was. That's what we do tomorrow.
I mean, if you can't wait for it, you could have tuned into Option Drive today.
I like to get it. Like to get it live with you because it was 166 last week.
So here we could take a look, and I'm working that ratio spread. We could take a look at SPX and go to the end of the week, which would be Friday, and this expected move 85 right now.
Right now.
85. So that'll be a comparison. Where was it on the study?
Well, and that's why that was
would from Fridays.
The week before was 85 and then 166. And then it's going to be 166, and I'm going to guess it's going to say 100.
It's going to be higher if they took it from Friday because VIX was still pretty high on Friday.
Say 100.
All right, let me push these out. So today, what was the last thing out? The Coke calendars?
The last thing out
yes.
was Coke calendars. That's correct.
All right, so we made these adjustments to our crude oil position, bought back our call spread, and added on a downside ratio spread. Now, that downside ratio spread will level off our losing for a little bit, but then it can get us double long if crude oil keeps falling.
It can. But it's a mini crude, so just keep that in mind.
Yeah, it's a mini crude. It's a micro crude.
Both pushed. So
Micro crude. Okay.
We've only got about a minute left. Let's keep.
I know.
Is there anything else that we can let's take a look at ZS for a second. I know we're not going to take it off. It's 36% profit, but this has been these have
32 days to go. Yeah, we can take 30%, $50. Sure. I thought I hit replace. So, what's every tick? 56.25, 625 is every tick. So
yeah, put it in for mid market. We might get filled.
And that's working.
Okay.
But it's probably right where it was when we put this trade on.
This was also this has been in the news a lot too.
So yeah, the soybean 17 days have passed. So just time's passed.
Yeah.
And I don't mind. Yeah, so $59. If I lower this by a tick, we'll still get $50. That's fine.
You can lower it by 2 ticks if
you
want.
Increase it. So here's the fees, right? 9 plus 5, so 14. So this is the problem. Like, this is why you need to collect more. If we're paying $14 to get out, and this is the soybeans. This is soybeans. Yeah. So we're paying $14 to get it out, and we probably pay $14 to get in. That's $28 if we're only making $50. It's like not worth the risk.
So put a GTC in.
But that's kind of a lesson. Like maybe we don't need to focus on soybeans.
Oh, yeah. Okay.
Unless we're doing one side.
Agreed.
Those are hefty fees in soybeans.
Okay, push that one out.
Okay, and then I think that is almost it. We're almost out of time.
Still can't wait. We have to blow through tomorrow. We'll see the expected move. Then Wednesday, I cannot wait for the study.
Oh, I know. I'm glad that he was teasing me, and I'm glad he was worried about the big drawdowns. And I said, hey, then don't test anything with a big drawdown. Let me tell you, Jacob, you worried about the big drawdowns? Don't put a trade in with a big drawdown.
Small fries do. Like my son does a $5 wide every day, a $5 wide, and he's happy as a clam.
Yeah. I missed mine today because I was driving. Did you put yours on the train?
Oh, I got off the train at 8:30.
Oh.
We had a meeting, so I didn't put mine on today.
I know. I know. Okay, we're done. Liz, have a wonderful day.
Very anticlimactic. We're done.
Good. I'll see you tomorrow. I'm not going to see you today. We're not on last call today.
Oh, yeah, we're not. I mean, I didn't mean to sound so excited, but we're not. We are not on last call. We'll see you tomorrow I'll see you tomorrow on the trading floor.
Yeah, I will see you bright and early on the train. And everybody out there, have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
Bye.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode. Smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Upstate and cooling down, pulling over to
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. It is Crypto Monday. I'm here with Jamal and, of course, Ryan Grace. Bitcoin mooning. Love to see it. Bears win. Love to see it.
Yeah.
How was everyone's weekend? Everyone's smiling.
I mean, I'm smiling for exactly that reason. That was really nice for the weekend. The party, too. We had a great time. I mean, it was a little tasty party. That was fun. Good times. Good vibes all around.
It teetered on the old school.
I was just going to say, yeah, it had kind of old school, tasty, trade, party vibes.
Yeah.
Like it, yeah.
It's the age-old question of like, when did you leave? When did you leave? It's like, having too much fun. Couldn't tell you.
Exactly.
Never left.
Never left.
I don't know, yeah.
But yeah, big moves in the market today.
Oh my God, yeah.
E-minis up 63, NASDAQ up 300 and change, Bitcoin up 4,300, Ethereum up 100 points as well. Both Bitcoin's over 4%, Ethereum's 3.5%. Huge moves there. And the train that will not be stopped, gold up 150 points, 3.5%. Silver also mooning up 2.5%. A lot of products in the future space that are moving in a pretty big way. You only have a couple of things to the downside on this fine Monday. Only things over 1% to the downside in the CME watch list are crude oil and BZ Brent crude. But everything else, I mean, natty gas up 10%, Bitcoin up 4%, Ethereum up 3.5%, gold up 3.5%. It's crazy. It's a crazy risk-on type of day, and you have that paired with a huge vol crush in the vol futures. We are now well into contango from more of a flat vol curve on Friday. We were in backwardation last week, and that has quickly come out of the market. If you look at the VIX itself, we are down almost 10%, down almost 2 points, back into the high teens. What do we make of this? Is this the end of the fear that we had, or do we expect some more chop here?
I think this is what makes this market so great. Is this current state of this market is that all the things that you mentioned, all the different things that are moving, there's really not a story that kind of defines it all. I mean, it's so wild. As soon as you think that you figured out the relationship between, I don't know, gold and the dollar or whatever, it completely changes. And it's just, I don't know, it's phenomenal. I love it right now.
Yeah, I mean, I think when you look at the volatility crush, right, last week there was a lot of fear around whether or not you were going to see additional regional banks talk about bad debt on their balance sheet, if we were going to see some of these bad loans kind of come to the surface. So a little bit of concern when you look at high yield credit. You saw spreads widen a little bit there. I think that's where some of the fear has been recently. So you saw the spike in the VIX there. Obviously, we have the ongoing kind of trade tensions with the U.S. and China. Government is still shut down. But again, I think you're in an environment where, I mean, look at what's going on with rates. We talked about this for a second before the show. It seems, and you're kind of getting that inflation impulse taken out of it when you look at crude oil, at least as the input there. It seems like the Fed is cutting into an environment which is pretty robust economically. We don't have a ton of data out of the government given the shutdown. Labor market has kind of been somewhat shaky, at least going into this. That was the read. But generally speaking, economic growth seems to be there, and the Fed is cutting into this, which isn't typically something you see. So the move in rates, is certainly supportive of gold. Not surprised to see metals moving higher there. And so I think coming into this weekend, you didn't see anything blow up. There's no surprises in the credit space, in the regional bank space. Look at KRE; it's up about 1.5%. It's a regional bank ETF. Seeing vol come out of it ahead of that VIX futures rollover.
Yeah, KRE was a big mover last week, speaking to the concerns that you mentioned. But yeah, seeing a swift reversal from the lows and these kind of huge bars that are being reversed are, of course, what are going to bring volatility down in something like KRE. But seeing a similar thing in crypto, I mean, what were you thinking heading into this huge sell-off? Were you just frothing at the mouth, just like, give me more, give me in?
Nervous, honestly, given the speed of liquidations going back a couple of weeks. So yeah, a couple things there. I mean, look, if we go back to the volatility and just the massive moves that we saw into Friday 2 weeks ago, a lot of that was driven by auto liquidation. A ton of leverage was taken out of the system in the perpetual futures market, which we talked about. But you got to bounce off of those lows. You haven't quite seen that recovery yet. I think a lot of people are looking for Bitcoin to catch up with gold here. We'll see, but it's still been short-term pretty bearish. Same thing with ETH. To get me feeling a little bit more positive about it, I think you definitely want to see Bitcoin over 115. You want to see ETH retake 4250. That would get you back into kind of a short-term bullish trend. Now, the longer-term, intermediate-term trend is still intact. I think we're still in a bull market. But with limited capital, it's like, where do you go? You know, there have definitely been other pockets to be in, whether that's metals, pretty much metals, equities. The Russell has been a decent trade. The NASDAQ, you know, buying dips in there has worked a little bit better than what we've seen in crypto right now. So you are getting a bounce, but you haven't gotten back to those levels where I would feel a little bit better about it. That said, the levels that have held, where if they didn't, I would probably be on here talking about, you know what, maybe we rethink this. Maybe there's some time to take some profits here if you've been in this for a little while. You know, that 108 level, kind of 108 down to 105 in Bitcoin. You know, certainly if you break 100, I think everybody will lose it. Yep. And in ETH, 3,800 is that other number that I'm watching there. And so they've held up. You're getting a bounce off of those levels. Let's see if this has legs or not. But I wrote about this over the weekend too. If you zoom out a few months here beyond this volatility, let's say that things do get worse. And you've seen a little bit of stress in the repo market. You certainly have concerns over regional banks. You look at what the Fed could do next. Should those things get worse, I think ultimately those actions out of the Fed would be very bullish for not only gold, but also crypto. So if you look ahead, right? We've seen this before. We saw this in March of 2023 when we had a regional bank crisis, and then we created the Bank Term Funding Program. So the Fed is not going to sit by and watch. I think we've discussed this on the show last time. But that said, I don't think that's what you play for here. I think generally speaking, you want to be long risk assets. I think that you do see a recovery in crypto. I do believe that we eventually get onto new all-time highs in ETH here. But yeah, a little bit of nerves given how this is traded recently, and it's definitely been a lot more bearish than what we've seen in things like gold.
Yeah, for sure, and I think for the longer term traders, I mean, you've been waiting for something like this, especially if you've been trying to add more to a long term position, because you don't get these consistent moves to the downside all too often. I mean, you've had two-sided action for sure, but yeah, I think it's been a volatile period of time. If you want to read about what Ryan was referencing, I've got the link to the Tasty Crypto newsletter pinned to the top of the YouTube chat. If you want to join us on YouTube, just go to the Tasty Live channel. You'll see this video streaming live, and you can click that link, sign up for free. But yeah, crazy market. I agree with you. I think when you think of if you just look at volatility and you use volatility as your gospel of what may happen in the market, we've gone from a pretty steep backwardation that we've seen in recent terms. It was like a 2-point backwardation, which isn't crazy, but it's not nothing. And now that's back into a 50-cent, 60-cent contango. And we know that when we're in contango, and the steeper contango we are, the market drifts up and to the right. So if this market environment stays the way it is, I would not be surprised to see Bitcoin continue a rally. How quickly we get back to the levels you're looking at, I mean, we'll see. But implied volatility is still decent in here, and you're seeing a little bit of an uptick over the last 5 days, especially in Ethereum, 4.5% IV increase over the last 5 days. So plenty of opportunities out there to be sure. Should we pop over the slides and walk through a little crypto update here?
Sounds good.
Yeah, and Mike, your point around the curve there, that is an environment which should then re-invite vol sellers back into the market, especially around this roll here. It's a lot easier to keep that trade going when you have that contango.
Yeah, absolutely.
All right, crypto update, October 20th. Let's take a look here, guys. Not much of a change week over week, but a little bit of a bounce here today. Cool. So this is our performance dashboard. Bitcoin hanging around 111, which is nice to see the move off of the lows. Nice as well to see ETH retake 4,000. And for my Solana bulls out there, you want to see 200 and higher. Not quite there, but catching a bounce off of those lows. As we mentioned last week, the story here is the pickup in volatility. Now you are back in plus 100 territory for a lot of coins. Big swings to the upside, massive pullbacks when you get it. That said, price momentum is still bearish short term. If you only followed that, it is still an environment until those signals change in which you would be selling rallies. Now, I'm not short, I'm not selling rallies, but it's also one in which I'm a little bit more hesitant to just immediately buy any and all dips in there. This is going to chop, and until we really kind of retake some of those levels that I mentioned earlier, you're going to have these bearish momentum signals just given how the exponential moving averages are calculated. So I like to take a little bit of a wait and see approach. All that said, we know this stuff moves really quickly, so it could have a big candle to the upside. You could get that blast off move, and very quickly everybody gets excited again. It goes, just the pendulum just swings from one end of the spectrum to the other. We're max bearish, max bullish. You don't spend much time in between. A vol for Bitcoin at 45%. That's an implied ETH 72%, and then the rest of these are realized vol. And you'll see a theme here as we run through the performance dashboard. Larger market cap, let's call them the majors, Bitcoin, ETH, Solana. Momentum still pretty bullish when we look out over those weekly and monthly timeframes. As we go through the list and we get to some of the smaller market cap tokens, you're going to see that it looks a lot different. And so again, I think this is an environment in which you still want to stay long some of the bigger market cap stuff, primarily Bitcoin, primarily ETH. At least that's how I'm positioning. You can try to chase some of the smaller caps, but they just haven't traded very well and certainly haven't traded well versus Bitcoin on a relative basis. There might be a strategy, though, where you just load the boat with all of the things that have been pretty trashy. And if, in fact, we do get blast-off mode, it all goes up. So you're kind of buying the bottom in some of this stuff. But that's something that takes some time. So I prefer to stick with Bitcoin and ETH here when you look at the momentum. Doge is a good proxy for memes. You can see it's down 55%. Year to date versus Bitcoin. Bitcoin's still up about almost 20% year to date. ETH outperforming as of right now. If we jump to the next couple of slides here, you'll see exactly what I'm talking about. Red everywhere you look, with the exception of a big bounce in Chainlink here today. That's definitely one that I think you keep on the radar from the DeFi perspective. So a few of those would be things like Aave, Compound, Link, Uniswap. Have traded pretty poorly, can change in an instant, but is what it is right now. Chainlink, though, up closer to $19 here today. You can see volatility exploding across the board. But again, you're starting to see more of that bearish momentum that I mentioned. And you'll see even more of that if we go to the next slide here, where this is going to encompass a lot smaller market cap stuff, as well as memes like Pepe. And you can see just pretty disastrous performance relative to Bitcoin. It doesn't mean that there aren't trades or opportunities in these things at times. It's just if you have limited capital, which we all do, and you're looking to put it to work in the crypto space, have some of your portfolio in that, I think you probably want to stick with Bitcoin and ETH at this stage in the cycle. And certainly from that momentum perspective, it's traded a little bit better. So that's our market update in terms of performance. If we jump to the next slide, we've got an update on relative performance here. So starting with Bitcoin market cap dominance, we look at BTC spot D, and that's looking at the total market cap of crypto and what percentage the Bitcoin market cap is. So right about 60% of the whole space is Bitcoin. And when that rolls over, what we obviously see is, that subsequent rise in the prices of a lot of the other tokens that make up the market. Quite often, that's just ETH versus BTC, ETH versus or Solana versus BTC. So, looking at Bitcoin market cap dominance, not quite at the highs, multi-year highs, but close to it. 60%. ETH BTC trading a little bit better here recently. We did go from bearish to neutral on that daily in terms of how we track that momentum. So something to keep an eye on. As I mentioned earlier, ETH outperforming year to date by about 2% against Bitcoin. Solana also bouncing here, relatively speaking, against Bitcoin. And also Solana trading a little bit better versus ETH, but the trend in there has been, ETH over Solana, Bitcoin over Solana. So again, larger market cap stuff is just doing a little bit better here. And Doge momentum is negative, but as that whips around quite a bit, given the bounce, you've seen a little bit of a jump there. So that's relative performance. The one I watch most closely there is ETH BTC. That ratio at 300s or 400s is near a multi-year low. So in this cycle, if we do eventually see everything take off, the all-time high in the ETH Bitcoin ratio is closer to 800s. Maybe we could get to a tenth of a Bitcoin. That would imply an ETH price of 10,000 or more. Who knows? That said, in some of these prior cycles, at the end of the cycles, the later stages, you've seen just monster rallies. Things where you had the trade for 6 weeks maybe, and then it completely collapsed. But some very crazy moves have occurred in Bitcoin, in ETH. If you go back, especially if you look at kind of that 2017 period, I don't think that's the best analog today. But again, this stuff you might think it's over and then it runs. Same thing in the NASDAQ. If we go back to the tech bubble, you get a little bit of a pullback and then boom, I think, huge moves, not quite 50%, but it wasn't over just yet. So we're going to keep an eye on it. But again, ETH BTC is something I'd look at, and I would simply just look at the price ratio there and knowing that historically maybe 1/10 of a Bitcoin is where we could get to. We'll see. You want to take profits at some point.
It's because of that last week that I ended up putting on a trade in ETH A, the ETF, and I got long a zebra in there. It's working out.
Nice. Love to see it.
Yeah.
Yeah, Ethereum has been, we've talked about this for a long time, and really the ratio kept going down and down and down, but this is when Ethereum was around 1,500, and then you saw the rotation from Bitcoin dominance being much higher to more of a lower level, but that was, like you said, ultimately a ton of that liquidity was going into Ethereum, which is, it's always nice to weigh them against each other, because Ethereum, given the current price range this year, all the way down to 1,500 up to 4,750, it's how do you put a price target on something that's been so volatile, and weighing it against the Bitcoin dominance, I think, is a good barometer of okay, what is my realistic outcome here, given where we've been before and what that price would mean today.
Yeah, you almost want to trade it like you would anything else from the chart perspective, right? Have certain levels in mind. If you get there, that should catalyze an action. I think it's tough in crypto. It's easy to be really greedy. It's tough to be robotic and profitable at times because of how quickly this stuff can move. You see your P&L go from X to Y, it's up huge, and you think therefore it's going to just keep going. But if you look at some of these things this way, that might make it a little bit easier. Because to your point, if you've been in this at 1,500, it's at 38, it's at 4, maybe you should take some off the table. But then at the same time, you're thinking, oh, it's going to go to 5. The all-time high in there is 49. Ryan says, 1/10 of a Bitcoin, 10,000, right? So I think it's definitely prudent to take some profits, and I'm not necessarily saying they should do that here. But on the downside, if this does get out of control, becomes more volatile, and we see larger losses in here, look at possibly locking in some of those profits so you don't just continuously ride these to the bottom and back. But ETH BTC is, again, what I would key in on there. That said, it's also helpful to use implied volatility to get some idea of what price could do. So if we go to the next slide, we've got our expected moves here where we're looking at volatility, implied volatility for both Bitcoin and ETH at the top. So we're looking at the implied versus the realized, which is going to be your 30-day look back. A little bit of a premium in Bitcoin. Quite often we've seen a discount in vol terms in ETH. So that means that the actual moves that we're experiencing are greater than what the market is pricing in at times. You could argue that maybe these options markets aren't super liquid. They're not that deep. I think as they mature, you get a little bit of a different view in there. But ETH's been a bit more volatile than what the market has priced in on a 30-day basis, at least, quite often. You look at the ranks in the same way that we rank vol for any other asset. And recently here, I've seen a move to the upside in that Bitcoin volatility, as well as ETH kind of on a 3-month basis trading towards the top of the range here. That said, expected moves: Bitcoin $7,000, ETH 400, Solana about $30, SUI 40 cents, and XRP about 30 cents in here. The Bitcoin range takes you above that 115 level if you were to get there, that I was mentioning, and the same thing in ETH. So I think that's kind of encouraging, I guess. But you do have relatively new lows in there too at 36.21 versus kind of where we've been hanging out at 103.6 for Bitcoin. $7,000 expected move is a little bit larger than what we've seen, which, again, granted, the increase in implied volatility is what you're going to get through the calculation. The SUI move is about twice what we've seen over the last few weeks. So prior to that big drop a couple of weeks ago, the moves in there were closer to 20-some cents. So now back up to 43 cents, takes you back to $3 on the upside. So those are the expected moves, and then one more for you guys here to tie it all together. As I've mentioned earlier on Tasty Live with Nick and Bat, it's all kind of the same thing. It's all being driven by the same thing at this point. So no surprise when we look at our short-term correlations between Bitcoin and the S&P, the NASDAQ, the Russell, all very strong positive correlations here. On the flip side, strong inverse correlations with the VIX and with rates. And then, a little bit more of a correlation, which you're also seeing in gold here too, right? Gold up, dollar up. You're seeing Bitcoin up, dollar up. Not all the time, but 0.39 is a little bit stronger than what we typically observe in there. I don't read too much into that, though I think what is important to take away from this here is that those short-term correlations, looking at the last few weeks or so, if we were to get a continued move higher in equities, I would expect, I think there's a high probability, let's say, that crypto follows, and on the downside too, right? If something again pops up where you have concerns over regional banks, you have concerns over the credit markets, there's more volatility as a result, I don't think crypto necessarily goes higher unless it gets that read through that the solution to the problems is more money printing. And I guess to that point, one thing I would key in on that we don't have a definite timeline just yet, but if you listen to Chair Powell's comments recently, we're getting to the end of quantitative tightening. And that's interesting because that ultimately should add to more liquidity in the system, and we know there tends to be a positive correlation between crypto prices, asset prices, and the money supply. So if the Fed's balance sheet today is rolling off and they're not reinvesting those bonds as they mature, and we've seen the balance sheet come down from, let's say, about 8 trillion to 6 point something here today. Maybe that's where it lands. Now, what that means then is that the Fed will be back in the market, right? And so on the other side of that, you don't have to look for the private market or for the banks to kind of fill that hole as much in terms of treasury issuance. So if the Fed is buying debt again, that could free up capital into the system, more liquidity in the system. Quite often that finds its way into financial assets, and on the margin, crypto tends to do really well as a result of that. So QT, not quite QE, but ending the balance sheet roll-off, which is a bit of a little bit of a constraint, I think you could argue. Lower interest rates, right? We look at the probability for this month as well as the December meeting, and you're looking at another 50 basis points into an environment that I think is relatively conducive to risk assets. Those things, in addition to if you were to get short-term volatility because something blew up in the credit market, the Fed would plug that hole very quickly. We know they have a playbook for that. Those things, I think, are all on the margin, intermediate term, bullish for crypto, bullish for gold, bullish for risk assets. You would get a dip in the meantime, though.
Yeah, speaking of the interest rate cuts, I don't remember a time where it's been so clear that the market is pricing in a 25 basis point cut in 9 days here, 98.9%, but also in December 10th, long way away, 98.3% chance we get another 25 basis point cut. So to your point, it seems like the market has made the decision, and this is kind of the environment where even though you might think like, oh, we're at all-time highs, we have to chop around here, we have to sell off, like everything else is telling us that this might be just the beginning of the next cycle to the upside.
Yeah, I mean, look, there's a lot of debt that the U.S. government has to roll over. Preferably, that would be at lower rates. You could argue that there's Fed independence, but look at what Trump has said about who he would like to see as a Federal Reserve chairman, right? They're pushing for lower rates. He wants a dove in there, wants Powell out. He's been somewhat independent, I suppose. But the message seems to be loud and clear, and the market right now is pricing in more cuts. If you get anything that would cause the market to think a little bit differently about the economic outlook, you might see more cuts priced in even faster than where we are right here. That's not necessarily short-term bullish, but you read through this and look at what really drives some of this stuff, crypto in particular. It is that liquidity dynamic. It is that monetary policy, that loose policy, loose financial conditions dynamic. And if that's what you get at the end of this, you could get much, much higher prices. You get kind of a repricing of it almost. I mean, there is a reason why, relative to what we're seeing with rates, why gold's going higher. It's not random.
Mm-hmm. True.
Insane move in gold.
I mean, it's wild. It is.
This is the first time I've ever thought in my life, like, do I have any gold just like sitting around? Like, bring it straight to the pawn shop? Like, is this the time?
I don't know if I ever told you guys this, or maybe I did. I can't remember. But I remember when I was at a prop firm, and it's 08, and things are crazy. And one guy leaves the desk. He goes downstairs, goes to the bank, comes back, and he has these like gold coins. He's like, "Yeah, man, I got some gold recently." He's like, "Oh, okay." It was so funny. This is the biggest swinging contest. So then the next day, another dude on our desk, a little more senior, he goes and he gets these other like Indian head coins, which are like 0.999 and 0.999 or whatever purity. Comes back and he's got like, $5,000 of those. He's like, "Dude, I got these coins. We're all touching. Oh, cool. Maybe about 3 days after that, the head dude on the desk comes in with a goddamn gold bar.
Just a quick one up.
I couldn't. It was amazing. I'm just like touched. I'm like, wow. We're all like feeling the weight and all that, passing it around. It was like the funniest thing, man. It was pretty cool though. And when I think back to what they bought those for at the time, and this was 08, you can look at the price and what those cost now. It's insane.
Yeah.
Were we under 1,000 at the time?
I'm pretty sure. I feel like. I mean, it might have been like $600-700. I don't remember. Maybe $800 a troy ounce at the time. I don't remember exactly. Yeah.
Yeah. 2008 GLD was at, let's call it 80.
There you go. Around there. Probably $800. Yeah.
It's a fun chart.
Yeah. Yeah.
It's insane. Beautiful stuff. Thank you for that.
Look at the pop after you got the emergency policy that was in place for the better part of a decade. But I mean, we topped out close to 1,900 or so that time around.
Mm-hmm.
It's craziness.
So do you guys think that this is a sign of the top then, right? You're seeing the reports on the news, on Twitter, people lining up outside bullion dealers globally. So. Is that a sign?
Look, it's a fool's errand, as they say, to call tops, but yeah, I do kind of think so. I mean, yes. And again, it's by top, I mean like it's a little bit elevated right now in price and probably could use a pullback. I'm not saying it's overinflated. I'm not saying it's a tulip craze. I'm just saying it's a little bit far and fast, and probably needs a sustained pullback, not the ones that we've gotten on the last two previous Fridays.
If you're a simple man like me and you use RSI, it appears to be the most overbought on a monthly basis of almost all time.
Yeah.
Weekly and daily, relatively overbought conditions there too.
Yeah. I mean, it's been an insane move, and what's I think the most interesting thing for me is just looking at how completely mispriced implied volatility remains to be. Like this move in GLD, if you look at just the last couple of, from the bottom at 300 all the way to 400 over a 2-month period, even with Ivy rank at 90, you look at the actual implied volatility of 30%, it's like, it feels still very low. Like you don't even have a 100-point move priced in for the next 2 years. More than 2 years, 823 days, Ivy at 94 points. And we've already seen that in the last 2 months. So it's like, I think it's a very interesting, that speaks to the overbought notion. It's just like, the implied volatility is trying to catch up, but it's still into this move here.
Would you guys consider like a 2-by-1 call spread in here? Like I'm just curious how you guys think about it. but I'm looking at the November expiration for GLD, so 32 days out, right? You can buy at the money or go out of the money, I guess, depending on how you want to structure this, and then you can sell to quite a ways away and cover the majority of that, right? Your risk is some massive monster move, and it seems like those are the kind of conditions that we're looking at here where you get that big squeeze. But if you do just grind higher, I mean, it seems like the market has taken vol up to 30-ish% on a per strike basis all the way out, at least when I'm looking at, or all the way up when I look at November. Like, I mean, is there, like, what kind of trades are you guys thinking about that could benefit from this?
So I've been placing just like straight up diagonal spreads and calendars to try and take advantage of the near term higher IV relative to the back month. But it hasn't really like been a great trade, obviously, because I've been playing them to the downside. But I have a calendar spread here. It's basically flat, but like a 370, where you're buying December for $640, selling November for $440, covering a massive chunk of that cost basis. And if you actually get a sell-off, it's going to be a nice trade. But even into this rally, like, it's not really moving all that much because the short option reduces cost basis so much on here. This is a hilarious diagonal spread I put on a month ago. 345, 335. When I thought the top might have been in, I was trying to play for a little downside move. But yeah, I mean, I think defined risk for me and just keeping it super small and trying to take advantage of at least the near term IV. Even if you want to play it to the upside, like, these options are still cheap relative to other products that are moving to the same degree. Like, we're seeing 3% moves every day, it feels like, in GLD. You still have a 30% IV, which of course you're not going to see it go too crazy high because it's an ETF, but at the same time, it's moving. And like, even right now, if you wanted to play it to the upside, paying $1,500 for a long option, selling a option with half the time for 70-80% of the value, like, there's a big divergence in implied volatility in the near term cycle versus the long term. So this is how I'm playing it. I just need it to be red for like one day. And it actually was working.
2 days more than anything, honestly.
Yeah, it was fun. Like, that the calendar and the diagonal are actually picking up decent value on this big sell-off day, but it wasn't enough for me to be like, I'm going to close this now. You know. But yeah, I mean, we'll see what happens. I think there's opportunity however you want to play it. But yeah, I think for me, it's going to be diagonal and calendar spreads where I'm buying December, selling November, just because you have so much more IV in November than you do December or even further out expirations like January. But yeah, this has been an insane move. Absolutely nuts. But yeah, thank you for the crypto update. Again, I've got the Tasty Crypto newsletter pinned at the top of the YouTube chat if you want to sign up for that for free. Question for Ryan. How about Solana or Solana futures or the ETF? What are you trading specifically? Are you trading spot?
Spot, there are the CME Solana futures. I do trade at times the Coinbase perps. So Coinbase offers perpetual futures across, I want to say, 4 or 5 different tokens. One perp gives you exposure to 5 SOL. So there's some decent leverage in there. It can get big quick as well, as everybody knows. But I'll trade those. I buy and hold spot Solana, stake Solana as well. So sometimes the yield in there is going to be between 6-7% annualized on a variable basis. In terms of the ETFs, I'm not sure of many ways to get exposure there, but to that point, prior to the government shutdown, we were expecting to get an announcement around ETF approvals from the SEC. SEC, as you know, has kicked the can and quite often will extend those deadlines until the very last minute. And so that is for October, and a handful of different ETFs government shut down. So we're not quite sure, what that timeline looks like, but that's a potential catalyst. And then additionally, we could get some news around the crypto market structure bill this year should the government reopen. this year. I think it will, but that will be a big catalyst. And now that's going to determine who's in charge. SEC, CFTC, and over what? What's security? What's a commodity? How do we think about these things? As you look at the future, largely involving tokenization, and you look at the direction that things are going in here, you look at the opportunities in DeFi, that's a huge catalyst. Just the clarity that should come from it should invite capital into different parts of the space. And so a couple things to call out that just thought of as we mentioned ETFs. Not quite sure the best way to get exposure to Solana via ETFs. Spot is how I do it, as well as futures or perpetual futures. You can trade those both kind of listed in that sense, as well as on-chain through DEX. But ETFs could be coming soon, and then ultimately you could see options on those ETFs. There are some treasury companies that have been spun up in the same way that we've seen these Bitcoin treasury companies, Strategy being the biggest. Seen some of these ETH companies have a Solana company I saw today, and this also should speak volumes about where we are in the market, right? I don't think it's a lot of people will point at this and say, oh, bubble, bubble, bubble. We love to do that. But at the same time, if companies didn't think that the conditions were conducive, you wouldn't see a lot of IPOs, you wouldn't see a lot of these SPACs. What you're starting to see more of are these SPACs in the digital asset space. And today another was announced with the goal of being the biggest XRP treasury fund. So there's a bid for a lot of this stuff still. I digress. Solana, I think there's a couple treasury companies out there, but I just buy the spot.
Yeah, I mean, there's a couple of them like SOLZ. There's also a 2X Bull, but like these are not the same as like an IBIT. When you look at volume or liquidity in the options, like for SOLZ, you're looking at 800K just on the shares. Hard to borrow as it is, but like IBIT, 30 million shares. It's basically a household name product when it comes to crypto these days. So I think if you're trying to trade ETFs rather than spot or a different product, I want to wait and see for a bigger product to have an offering where the liquidity is just that much better. Pepe being down is a leading indicator. I would agree. But it makes sense, like when you think about how, like if I have a portfolio of 15 different products and the market's selling off and I'm fearful of continuation, like I'm getting out of the fringe products first and I'm holding the line.
Yeah, I wouldn't look at it as a leading indicator for crypto, no. But in terms of volatility, yeah. You're going to degross, delever, and take down your more volatile positions when vol spikes.
Totally. Let's see. Someone asking to see liquidity pools again.
We can do that next week if you guys want.
Yeah, we can do that.
Oh,
yeah.
Nice. Okay, sweet.
See that? Yeah, we'll do that next week.
That takes us to an entirely different planet.
Yeah.
We leave planet Earth here and the financial system and the traditional markets that we're all familiar with, and we go somewhere else in the universe.
Put the 3D goggles on and look on the interior.
And I think, once you get on this other planet, sometimes you don't want to return to your home planet.
I mean, yeah.
That happened to me, guys. That's what I do the most in. Provide liquidity to automated market makers across different decentralized exchanges. And there's a lot that we can talk about around hedging that and how to think about it, but it should be eye-opening. We'll do that. Let's do that next week.
Cool. Amazing. Any other crypto questions in here? I've got some more people talking about Solana.
Yeah, we can look into, it might just be a matter of lighting it up. I'll talk to the trade desk and to the team. Couldn't tell you why we don't have that. If it's available through the CME, then as long as presumably there's liquidity, we could look to light that up.
For the Solana futures,
Yeah. Big Brain Joe, we're talking about the DeFi planet.
The DeFi planet.
The DeFi planet.
Oh boy.
Planet DeFi.
What's the expected move on the market for the rest of the day and tomorrow? So SPX, if you have the Tasty platform, you can just
Not
look.
enough.
Yeah, not enough. Feels right. Only 34 points for tomorrow. Only 13 points for the rest of the day. I don't believe that for a second. I think we get over 13 points. I think we see maybe a little pullback here.
And so, yeah,
it feels wrong to say.
They're asking about SPY. So just so you know, so that's 1/10 of the move that Mikey said for SPY. But like he said, he showed you.
This is a regular thing we do just to get a gauge on what the market is projecting. And sometimes you'll see pops here where you'll then know that there's some kind of market event or announcement that may move the market, which is why implied volatility is higher. But we're seeing lower implied volatility simply because the government has nothing to report. Yeah. There you have it. It's actually hilarious when you go to like the economic calendar of events and it's like there's a little star next to like the CPI, PPI, and you go read the star and it's like delayed in all caps.
And they keep moving it out too. It's like they're optimistic that I think I saw one of the things that I think they have it listed for Friday. Yeah, they have it listed. Like, really? You guys are really optimistic about that, huh?
It's crazy.
In terms of the reopening?
I guess so, yeah. I mean,
what does Polymarket say?
That's
well, again, this is just the economic calendar. I looked at Polymarket last night. I think 44%, I believe, and you could probably check me out on that. I thought I looked at last night and it said 44% of the people think that it's going to be November 16 or later of the opening of the.
Wow.
Thing, right?
Yeah.
Then you have to wonder, does any of the economic data even matter? I mean, if the market has a read through anyways, there's probably private sources for some of this stuff. I know there is with ADP and labor data.
Yeah.
So yeah, the market that I was looking at is basically closed. October 15th or later. When I was looking at it, it was like 40%.
Yeah.
Thought it was going to be that. Now there's other ones that you can find, but when will it end? Right now, probability has it at after November 30th or around November 30th. Like there's a huge probability of betting that it will be into November, halfway into November, which is kind of wild.
When will it end?
But yeah, never. About 2/3 with 30 days plus, which we're basically at. But yeah, it's been crazy. It's been wild.
I think this is the best market on Polymarket, and I guess, as you look for alternative sources of yield, if rates continue to move lower here, will the U.S. confirm that aliens exist in 2025 market is yielding 4.2%. If we look at yes is 4.2 and no is 96 cents, and you're going to bet that no, you are going to make your 4 cents, right? As long as we don't announce that aliens exist.
Well, we have that documentary coming out, I think like tomorrow, or is it next month?
What documentary?
There's a documentary. It's like a release. It's a documentary about the release of information and how.
I'm like Roswell or whatever?
I'm not sure exactly, but there's a number of people that are basically testifying in this documentary that there is a species that exists that's non-human.
Jeez.
This is selling vol. I mean, maybe, but the fact that people are paying 4 cents on a yes bet here, I guess you want to have that tail covered, but also just seems like free money.
Yeah.
These are the markets we should be trading.
I know. Yeah.
Yeah.
I'm here for it. Quick question on the Netflix trade. I think we placed this trade, the short-term Netflix calendar. I actually closed mine.
Yeah.
It was like a $100 winner, so I just got out of it pre-earnings. But question is, how do you choose your strikes for calendar spreads? Why not the 1250 to give you some downside range? What's the purpose of a diagonal iron condor if a calendar can be directional or neutral? So calendar is just a way, and this applies to IBIT. It applies to crypto products if you're trying to capture near-term implied volatility. But a calendar spread just gives you a staggered exposure to implied volatility. So if you just look at Netflix that has earnings tomorrow after close, there is a ton of implied volatility priced into the weekly cycle because there is a binary event this week. If you look at 4 days, and this is an easy way to do it, just look at a 4-day cycle and then look at a 40-day cycle. If these implied volatilities were the same, it would reflect a 10 times increase in implied volatility. That is absolutely not the case. So what I mean by that is, if 4-day implied volatility was the same as the 39-day, you would have an 800-point move priced into 39-day. But you don't. You have an 80-point move priced into the 4-day and a 118-point move priced into the 40-day. So you can see that in the next 4 days, it is accounting for the current implied volatility, almost all of it, in the 40-day cycle. So when you sell a 4-day option and buy a longer-term option, you're really just taking a slightly directional stance, but you're reducing cost basis in a really aggressive way. We just showed that in GLD as well. But I went to 1,300, likely because it was just the expected move at the time. Netflix is up a little bit, and now we're inside. So yeah, going to the expected move and then selling the same strike in the near-term cycle. We were talking about how Netflix is just so expensive that it makes sense to consider doing a shorter-term one, which is what we did. So we bought the 11-day, sold the 4-day, and as you can see, it's the same story. Like you're reducing cost basis on your long option by 80%.
Yep.
And you have the ability to own this long option 11 days out. This is going to experience a vol crush too. But really all you need to happen here is you need this long option to be worth $400 or more by the end of the week. And with a $1,300 product, $1,200 product, there's a lot of different ways that can happen. But the whole idea is just taking advantage of near-term implied volatility like we looked at in GLD. But again, you can do this in ETH-A, IBIT, whatever you want to do. It's just an interesting way to give yourself that short-term exposure to IV. And Iron Condor doesn't do that. And Iron Condor, you're just basically betting on the range and you have no exposure to IV or very little exposure to IV because both your long and short options are going to get crushed at the same time.
Yeah, I mean, it's just a cheap way to get sort of upside call exposure, right? I mean, you could, if you just bought that $1,300 call around the expected move, like in the Oct 31 cycle, that's expensive, man. I mean, just looking today. And so ideally, like, you know what's funny is that the original idea of calendar spreads were things that happened a lot during like Tony and Tom's time trading on the floor. And I experienced a little bit of it when I first started trading too. All of the information wasn't necessarily known sometimes. And you could look at volatility in one cycle and it was a lot higher than another and it just didn't seem to make sense. Or you'd have situations where the earnings date wasn't exactly known and it could flip from one expiration to another. And you would see people like, oh, this is wrong. And they find out the idea that it's wrong. And then they go and sell that Oct 24 expiration and get long the Oct 31 and boom, you immediately make money on that spread. That doesn't really happen anymore. But this is kind of a way to manipulate that by getting around a upside higher move so that that Oct 31 1,300 call is always going to be worth more than the Oct 24 1,300 call. And it's just kind of a way to play that move. If it does move to the upside, as long as it doesn't completely blow through strike, it's really nice.
Yeah. And the nice thing about a trade like this is because these options are so expensive by themselves and your net cost is way lower, like Netflix can open up at 1,400 and this would still be a profitable trade, most likely. Like it's just because, again, you just need extrinsic value in your long option if your short option is in the money too, to exceed $4. So when you look at the P&L Theo, especially if you push this to Friday or you push this out in time, you can see how wide this gets. And that's just because if you push this short option to expiration, now you have a really wide range to be profitable here because you just need the long option to be worth $400 or more. Same kind of thing in IBIT. I have a perpetual strangle on in here, which has been beautiful. But if you wanted to do, like, let's say you're playing for short-term moves in either direction, same story applies. Like if you want to place an upside 65 strike, like you're collecting less relative to the cost of the long option, but that's because IBIT doesn't have a binary event like we looked at Netflix this week. So still possible, interesting ways to do stuff, but yeah, that's really the reason. It's just to give yourself exposure to the near-term IV. A couple of crypto questions here related to the SPX and SPY expected move. Do you look at Bitcoin's expected move relative to SPX and place a trade there given the correlation, or are you just straight up trading crypto in isolation?
Yeah, no to the first part of the question. I mean, we want to run the same analysis and can quantify these things using the same approach. I'm just noting that at this point in time, there's a fairly strong short-term positive correlation, right? 0.72 when we look at the SPY, 0.71 when we look at the NASDAQ. If we look back historically, there's typically a positive correlation, right? They're risk assets. One's a little bit longer duration. If you look at it that way, I would argue that you're going to see over time stronger positive correlation between the NASDAQ and Bitcoin, given a function of what they are. But when we look at the SPY, the S&P 500 is around 0.4. 40% of the time, they move in the same direction. So majority of the time, they don't. So I'm not so much looking at that other than, again, I've got this dashboard, right? And I've used this analogy where you're trying to get from point A to point B. You're not trying to crash. You need to be aware of the conditions and all these other variables that go into it. So just something to make note of. In terms of trying to apply the same approach, we will take the Bitcoin spot price of, let's call it 110,700 this morning and a 40-some% volatility, and we can run that same calculation, get a one-day expected move, get a 1 week expected move. What's that expected move? It's a 1 standard deviation. So assuming that the options are priced correctly, I suppose, efficiently is probably the better word there, this gives us a probable range. Now, are we going to trade within that range all the time? No. But statistically, we should about 2/3 of the time. So it gives you some kind of framework. So that's how I use that, if that's helpful.
Love it. Specific one for Ryan. Why do you think gold prices are going up? You spoke about this earlier, but what is your longer form answer to that?
Yeah, a couple parts to this. I guess it just depends on the time frame. So if we take today, I don't know. It seems like it's just a continuation of the trend, momentum, squeeze, you name it, right? There's gamma dynamics, there's derivatives, it's a big market, and there's a lot of money that flows into this. So really hard to explain. Why is it up 3% today versus 1%, or why did it go down Friday? Maybe it went down Friday because of the move in rates. And these things, right, they're stochastic and they ebb and flow, and they're not going to be just one way all the time. So you kind of you extend, right? Whether it's interest rates or it's gold prices or S&P, you get to kind of one end of the range. There's less buyers there than there are at the other end of the range, even within that trend. So short term, I don't know, because that's the trend. But why are gold prices trending higher is really the question. And in my opinion, that's just simply largely driven by interest rates. If you look at when yields peaked here recently, at least year to date, believe that was in January. If I look at the last year, so yields probably 2-year, 10-year, everything across the curve for the most part, peaked right around then. Well, when did gold bottom over that same period of time? And has it been trending higher since then? Yes and yes. And then you look at, well, what accelerated this move? Well, this move really started to accelerate post-September FOMC when we got the repricing of the probabilities and the clarity from Powell that there's more cuts on the table. Ahead of that, as you guys recall, it was kind of up in the air. Are we going to see more cuts this year? Are we going to see 2? What's the dot plot look like, the forward outlook, et cetera? And that all became known. So you had the press conference, you had a bit of volatility, and that honestly was like the last time you could have really bought a serious dip. I think silver might have slipped to like 41 or so, above 50 today. So it's not just gold. It's silver, it's platinum, it's copper even. And there's industrial kind of economic reasons more so for some of those things. But I think this is largely rates driven. And towards the end of that, as you get to these overbought conditions, it's very hard to predict. Like how much more is it going to go up? Well, how much lower is the market going to price forward rates? And when you have something like gold, as you guys know, which is non-yielding, it's largely driven by real yields, by inflation expectations, and by interest rates. And so if we continue to see the range in which the market is starting to price in short-term rates, and then you also kind of price in what might be coming at some point if you get through, some of this volatility. If we're getting an end to quantitative tightening, if we're getting more liquidity, generally speaking, and not just here in the U.S. but globally, as this is certainly a global asset, this could go higher, could go a lot higher possibly. But I think that kind of explains it. And also think like big picture, and this is not the driver of why it's up or down on a day-to-day or even week-to-week basis. But if you go back to when we kind of weaponized the dollar as the U.S. within the financial system, it's largely around 2022. You go back to the seizure, the freezing of Russian central bank assets, I think to the tune of $600 billion. That was a signal to the market that this pristine collateral that is the US dollar is maybe not as safe as you might think, which doesn't cause anything to change overnight. I just think that like once you have those cracks that emerge in the system, we've talked about this, you are going to very, very slowly see a shift in flow and a rethink of things at times. And I mean, look at, maybe it's just simply a coincidence, possible, but look at the performance of Bitcoin. Look at the performance of gold since then. Again, it's not that the Japanese government is going to dump its treasury holdings immediately, but you might look at, when you think about the size of these flows, you might look at a repositioning or reallocation. And the same thing is true of Bitcoin. It won't take much. We're talking about let's just assume Bitcoin's the whole thing. It's 60% market cap dominance, but let's just say it's the whole thing. So now we're talking about what, a $4 trillion, maybe $5 trillion asset? If flows in terms of how all of these institutions and sovereign states, nations think about what they do in terms of reserves or how they position at times, if even a small percentage of that goes into something like Bitcoin, I'm not saying it goes into Pepe or any other thing that's farther out on the curve, but you could see gold and Bitcoin at similar market caps. I'm not saying that Bitcoin's going to be at the same market cap as gold, but could it go from 4 to 8? 10 maybe. I mean, it's still very, very small relative to the size of most other assets, currencies, commodities, fixed income, equities, right? And so that's what's kind of interesting to me about this trade. And that's, again, my long-winded tangents per usual. But that's what I think is behind this, right? The same structural forces that have been in play for years now, and it's starting to accelerate. And a lot of that acceleration has been catalyzed by just the recent interest rate decision and kind of the forward outlook.
Well said.
Yeah, very well said.
Yeah, I think especially when and this is just like what we talked about with weighing Ethereum against Bitcoin, weighing Bitcoin's potential market cap against something like gold, that's the way that you get to the number that people are projecting, whether it's 200K, 300K over a period of time. It's like, what does the market cap look like at that period, at that point in time? And is it feasible? And I think that's a great way to put things into perspective into this thing where there's still such divergence of people like, oh, this is Bitcoin's. I literally read 2 articles back to back. One of them was like, Bitcoin's going to 70,000. And the other one was like, Bitcoin's going to bounce so aggressively from here. It's going to 150 like tomorrow. It's just like, there's still a divergence in opinion. But if you just break down the numbers and the scarcity of Bitcoin, like that is what gives you that upside.
Yeah, I think, the other way to look at this is not so much what's the dollar price of Bitcoin, but arguably how much does your dollar buy? Do you think that the purchasing power of the dollar, of fiat currencies globally, is going to strengthen or weaken over time? Do we think that ultimately central bank balance sheets are going to expand or contract over time? Is the money supply going to expand or contract over time, right? I mean, when you look at it that way, and you have to have obviously a much longer term outlook, the argument seems pretty sensible that you'd want some sort of monetary hard assets, right? Like, let's just remove gold and Bitcoin from the equation. Does that make anything that's scarce, whether it's property, real estate, to some extent? Obviously, it's not extremely scarce, but land, like anything that there's a finite amount of, or you just don't have a great substitute for, right? That should go up in the dollar or the currency that you're pricing it in if we're debasing at the same time the currency, right? Like ultimately, the question is, does everyone think that the U.S. debt is going to increase or decrease on a forward basis? And that should help to drive some of your decisions around whether you want to be in this stuff or not long term.
Yep.
Love it.
That'd be it.
With that, it is 12 o'clock. Someone in the YouTube chat was asking about buying crypto on Tasty. I put in a Help Center article near the bottom of the chat. If you want to click on that, you can check it out. But you can always reach out to us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Ryan is at Ryan Fred Grace. Give Tasty Crypto a follow as well. I've got the Tasty Crypto newsletter pinned to the top of the YouTube chat. Go sign up for that for free. But yeah, wild move today. We'll see if it continues throughout the week. But stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
This is Breadwinner Trivia here at Tasty Live. I'm here with Nick Batista. We're going to present him 4 questions. If he gets all 4 correct, I have to make him a peanut butter and jelly sandwich. Let's dive right into it.
And I'm hungry. I want 2 of those.
Which commodity is often considered to be a safe haven asset?
Gold.
Gold is the correct answer.
The shiny rocks. Boomer shiny rocks.
What does the Sharpe ratio measure?
Return relative to risk.
That is correct. What is a credit default swap?
It's a credit that originates somewhere else, and it's traded for different amounts across many different parties.
That is correct. That's not gonna exactly match what they have on screen here.
No, come on. I'm not the smartest guy here.
For all the marbles, for the PB&J, what is the national animal of Scotland?
It's the Highland cow.
It is a unicorn.
What? That's a trick question. I hope nobody heard that, because I want to see a peanut butter and jelly sandwich get made.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
This is Breadwinner Trivia here at Tasty Live. I'm here with Nick Batista. We're going to present him 4 questions. If he gets all 4 correct, I have to make him a peanut butter and jelly sandwich. Let's dive right into it.
And I'm hungry. I want 2 of those.
Which commodity is often considered to be a safe haven asset?
Gold.
Gold is the correct answer.
The shiny rocks. Boomer shiny rocks.
What does the Sharpe ratio measure?
Return relative to risk.
That is correct. What is a credit default swap?
It's a credit that originates somewhere else, and it's traded for different amounts across many different parties.
That is correct. That's not gonna exactly match what they have on screen here.
No, come on. I'm not the smartest guy here.
For all the marbles, for the PB&J, what is the national animal of Scotland?
It's the Highland cow.
It is a unicorn.
What? That's a trick question. I hope nobody heard that, because I want to see a peanut butter and jelly sandwich get made.
What is going on, everybody, and welcome back to another always wonderful installment of Risk and Reward. It's a new week. We seem to be back to our regularly scheduled programming in the market, and by that I mean headed to the upside with no regard for the downside whatsoever. I'm joined as always by my amazing co-host, Errol. Errol, how are we feeling? What's going on?
No regard for human life at all, but I will say, I got to start it off by saying, I know we watched the Broncos game last night, so I'm feeling good. I'm feeling great. Of course, the market has to keep making higher highs. We might take a new all-time highs. We'll see, but I'm still off the high from the win from yesterday. I mean, 25 points within like 5 minutes. I mean, an NFL record, I'll take it. All right, did you get to tune into that one?
Yes, I was intimately tuned into that one. I have a lot of Broncos exposure in all of my fantasy leagues, and particularly in my most expensive league, I have Bo Nix, Cortland Sutton, Marvin Mims stack. And so yesterday I was losing the entire day, and then I took a nap from the middle of the third quarter to the middle of the fourth quarter of the Broncos game, and I woke up and Bo Nix had 40 points. So I was a happy camper. It all turned over really quick there.
No, I love that. I'm glad it worked out well for both of us. You know, anybody that knows, I'm born and raised in Colorado, so no matter where I'm at, I lived in Florida for a little bit. Now I'm living in Chicago. I'm not a fair weather fan. I don't do it Dr. Jim style over here. I stick with the Broncos through and through. So that was really dope to see Bo Nix and a young guy like him pull through for the team. Jackson Dart, I thought he was him last night. Came up short. That's tough.
Yeah, not his fault. I mean, he's still
not his fault.
He's still that good.
He's that guy.
And that defense and coaching fell apart on him. He got the full New York Giants experience.
He did. I think that really put a highlight on his game last night. He snapped. He went crazy.
Absolutely.
But anyways, it was a good weekend. How was your weekend overall?
It was good. Relaxing. Saturday, Sunday, just a lot of football, recovering. We went out Friday night.
That was good.
Fun time. This is what I wanted to address right away. Theta Trader, which one of you was risk and which one of you is reward?
That's good.
It's good. I think I'm risk.
That's
probably.
good. Yeah.
I think, which would make you reward, which I guess is the better one.
I think it depends on the day.
I guess so.
100%.
It does.
That's good. I've never seen it like that. I think when Tom and them were building like their first servers, I think their first servers they built back in like 2001 was called Itchy and Scratchy. That's what it reminds me of. Like who's itchy, who's scratchy, who's risk, who's reward. Which one is which?
For real. What's going on, everybody? Big deal, Wolf. Happy to see you. Ranch, happy to see you. I think it's Rancher. Actually, I don't mean to give the misnomer now that YouTube has so rudely changed your name back to its original. Gus selling vol was another solid play again. Heck yeah, it was. I did the same thing, Jared. Happy we're both panning out on that front. My Chiefs shutting out the Raiders was also amazing. Yeah, that was when in the NFL you have quarterbacks or entire starting units getting pulled by the end of the third quarter. That's pretty significant. Anyway, we're going to talk a little bit of earnings today. I mentioned last Monday that every Monday I'm just going to give a quick run through of earnings in the current week and the following week so that everybody can stay up to date throughout this earnings season. As I mentioned last Monday, this is as much of an exercise for me as it is for anybody else. It's really hard with all of the earnings calls that go off in these peak earnings months to keep up with what's going on, what's coming up, and especially thinking out ahead to next week. So first of all, we will cover everything going on this week, which was also covered last week in the next week's section. We have Netflix, GE, Coca-Cola, Philip Morris, Texas Instruments, Capital One, Lockheed Martin, all going off tomorrow, Tuesday the 21st. And then on Wednesday, we have Tesla, IBM, AT&T, and GE Vernova. So we're really starting to get into the thick of it now. Last week was kind of the hors d'oeuvres, and they are now serving the main course of earnings season. So you excited about any of these looking to play?
I'm excited about it. I think Tesla is going to be more of a higher watch for me. I think Tesla's always a fun one. Get a lot of volatility there. And then I think Netflix too. Coca-Cola's kind of on the back burner. Netflix was one of those positions that I experienced. You can get some outlier volatility that you might not expect in a name like that. So that's going to be exciting. No, I think Tesla, maybe a post earnings decision or maybe trade on Tesla is probably going to be the move. But I'm looking forward to Tesla. I'm not off the topic of EVs in general, even though those steam has died down on those names a lot. I'm looking forward to Tesla. What about you, out of these three at least?
Yeah, I mean, I'm most excited for Tesla, I would say. I mean, I just think that that's where the most volatility is going to come from. I'm also looking forward to IBM to see if they can continue the good run that they've been on for the last 3 years now. And then, yeah, I mean, Netflix obviously might influence the broader market. That's a little bit interesting. Interested to get a peek behind the curtain at Lockheed Martin, see what their numbers are doing in these turbulent times. I'm sure that they are selling lots of bombs to lots of people. They don't care who buys their bombs. No. They'll sell bombs to whoever.
Right.
So yeah, some interesting ones in there, but Tesla definitely the shining star of this page.
Yeah, I mean, I'm looking forward to it.
Rolling ahead into the rest of this week, gets a little quieter. We have T-Mobile, Intel, Honeywell, Blackstone, not to be confused with BlackRock, which went off last week. UPS, all going off on Thursday. And then Friday, we rounded out with Procter & Gamble and HCA Healthcare being the two biggest going off on that day. Anything catching your eye here?
Not too much. Maybe T-Mobile a little bit. I think Intel for sure. INTC. Maybe those two. UPS is interesting. Blackstone is interesting. I want to look at the IVRs on them too, but Intel, no doubt.
Yeah, Intel is what jumps out at me as well. They've gotten a lot of investments from other companies as of late, and they should have some good free cash flow right now. I'm very interested to see what they're doing and how they're allocating these billions and billions of dollars that people have thrown at them. So we'll get some specifics on that. Moving into next week, which is really kind of the main event of the entire earnings season. We have Waste Management on Monday. That is the first time we've mentioned a Monday in this segment at all, but Waste Management is going to report on a Monday. On Tuesday, things really start to heat up. Visa, United Healthcare, Booking.com, which is actually more formally Booking Holdings. They also own Priceline and some other similar sites. Sherwin-Williams and PayPal, that's all Tuesday. And then Wednesday, we start to get into the big dogs. Microsoft, Meta, Caterpillar, Verizon, Boeing all go off on Wednesday. So, yeah, this is like the first one where it's actually pretty tough to choose, which is what I'm most excited about here. What are your thoughts?
This is going to be a difficult one. I mean, Visa, Microsoft, Meta. When I seen Meta right off the bat, I'm still just curious about the whole metaverse in general. Like, I feel like that's going to be their big play. Like, they're probably focused on other things right now, but I think like their big play is going to be that. So I'm curious to ask you again, how has that experience been on the Meta Quest 3 over the last couple weeks?
Yeah, I mean, I still think it's awesome. I mean, that's still my sentiment that I gave and when I originally spoke on this, I think last Wednesday, absolutely still holds. I'm blown away. It's still definitely like early stages, and I think there's a long way to go, but I am bought into the longer term metaverse thesis.
Is it
I do think that it could work.
Is it the hardware, software, or the social connection on there, or is it a little bit all the above?
It's a little bit of everything. I mean, if anything, I would say that the hardware and software are lacking a little bit still, and that's kind of why I say I think there's still a little ways to go, especially in the metaverse concept. And when you go into the Horizon worlds and do all those things, it's still just a little clunky. I mean, like just the graphics aren't quite all the way there. The battery life on the thing leaves much to be desired. I will say, it's like probably 3 hours on a full charge, 3-4 hours. Does not charge crazy fast either. So there's little nuanced things like that I think will just clearly get better. But the social connection element is what is absolutely all the way there right now, and that's what makes me the most excited about it, is that you can bridge these online connections into the real world like way easier than you ever have before. But yeah, I mean, I think we're still, I don't know, easily 5 years away from like wide scale adoption on that. There is still a long way to go, but I'm very bullish. I'm the Matrix on that a little better now.
I got you. You ever get the chance to pull up like a computer, anything like that?
Oh, sure. Yeah. I mean, it's really nice because you can just, anytime you're like playing a game, whatever, you can also just impose things directly into the game, like computer screens and whatnot. So like yesterday I was watching the 3 p.m. NFL games. Like I had NFL Red Zone pulled up like a floating TV while I was playing golf with one of my friends. So like we're on the golf course, like messing around and talking. And then I also just have.
Isn't the golf so fun with friends though?
Oh yeah.
It's like, I don't even know how to describe it again. It's like that. I'm over here talking like I go to the golf course. I don't go to the golf course, but I could imagine that like, I don't know, just doing something at the same time, something social, doing something kind of physical. I don't know. I'm not a golfer, but I almost got that same vibe as if I was going to the golf course, just hanging out with somebody, having a conversation for a little bit.
Well, yeah, it's neat too how just much more real it feels. Like me and my friends have always played golf video games together, and we enjoy that. But like, yeah, actually, even though it still looks a little cartoonish and funky, it's like just being able to see the actual body of my friend that I'm playing with.
And the
like,
score.
He's standing behind me while I hit, and his score, and we're like standing on the green, giving the other person reads and stuff like that. It's fun. It just feels a lot more real.
Dang, we do not have a unique experience at all. Like just me and my boys, same thing to it. No unique experiences. But,
no, yeah.
But then that was on the older one too, so I could just imagine how it's gotten a little bit better even now.
Sherwin-Williams might be benefiting from the current trend away from white and gray and move over to more colorful walls. I can't say that I'm particularly plugged into household paint trends, but if that's true, I would think that that's good. I mean, I think that Sherwin-Williams stands to benefit anytime the broader paint trends switch. I mean, because everybody has to buy some additional paint. So I'll tell you what, their advertising has not been as good as Behr. Anytime I watch anything, I feel like I see a Behr paint advertisement. Anywho, rounding out the earnings next week to keep it moving, we have Thursday Apple, Amazon, Eli Lilly, MasterCard, Merck. That might be that, or next Wednesday, one of those two is like the single largest, most pivotal earnings day that we have this entire season. And then Friday, rounding it out the week, is ExxonMobil, AbbVie. Is it AbbVie? Is that right? I've never said this word out loud before until right now.
AbbVie.
I trade it, but like AbbVie? Is that?
AbbVie.
I don't know. Somebody correct me if I'm wrong.
Yeah, let us know.
And then we got Chevron, Colgate-Palmolive, and Dominion Energy. So we can kind of see energy sector starts to pick up. So yeah, quickly recap. This week we have kind of just a good mix of everything: some tech, some industrial, some consumer discretionary, all that good stuff. And then into next week, it becomes a lot more pointed with tech midweek into energy end of week. So that's where we're at there. Keep your eyes on those sectors. Be careful if you are trading earnings, any of these earnings. They are all so very scary, and I am going to touch none of them. I may have some post-earnings trades, but I'm not a through earnings type of guy. Too much to try to figure out. But yeah.
I'm looking forward to them. I think Amazon is going to be a fun one. Amazon's always going to be a fun one. Eli Lilly will probably, I think that one could be a sleeper.
Yeah, shout out to AWS for going down today and making all of our competitors unable to trade on their platform. Tasty Trade users, they've been able to trade all day. Sorry if you're a Schwab or Robinhood guy and you couldn't enter your positions this morning because they hate you.
That's tough.
You should switch to Tasty Trade.
Yeah, no, that's tough. I actually did see a lot of comments like that out online today too. A lot of sarcastic comments.
We did have some run in with our streaming. I know some people had some issues accessing the stream because of AWS, but your money has been safe. You've been able to trade this entire time, and some of our competitors cannot say it.
I just can never get over the fact when Robinhood pulled the plug on the buy button. I'll just never get over that fact. It's like only having the ability to sell during the Robinhood saga.
Oh yeah,
with the GameStop and AMC and all that kind of stuff. But anyways, you'll be able to buy and sell whatever you want over here, especially during trading hours.
Yeah,
no one's gonna pull the plug.
Yeah, we ain't. Yeah, it's true. All right, what do we got here? What earnings are we excited about in chat? I know there was a lot of chat I was missing. Server names. We used to name servers after The Simpsons. Till a woman named Marge joined the IT group. Seems reasonable. I like playing ping pong while listening to Spotify. Rancher, let me know what ping pong game you have found that works.
Okay, thank you. I was gonna say.
Yeah. Because that was like, I don't know if you were here when I was talking about this the other day, but me and my friend actually were pointedly trying to play ping pong, and we could not find one that would get like the ball bouncing physics right. It was always a little messed up.
Have you guys tried a paid version of the ping pong yet?
No, okay. have not tried to pay it. We were just trying the worlds, which were very effective for a lot of other things. We found darts that was a lot of fun.
Sounds fire.
It was like imposed into your real room too. It wasn't like full virtual.
Oh, that's fire.
It was nifty. What else? Oh, is red coming back? I was like, is red, you mean like in the market? No, you guys are talking paint. I see. Owner made a giant red accent wall in my living room and part of the kitchen. It's fine, but I'll probably need to paint before moving. My house is 100% white walls. Without the change in trend, I would not be buying new paint. Now we're buying new paint. All right, guys, so maybe paint is turning over a little bit. I remember my mom wanting to, and we did, repaint our walls in our basement in Ohio when I was young. We repainted them from a white to, I believe, butter cookie was the name of it.
Okay, what is a butter cookie like? Like a cream?
Like a less aggressive, yeah, sort of like a cream. I mean, it wasn't like, like where people would be like, oh, I made them eggshell white instead of regular white.
Off-white?
Like it was like
ivory.
Yeah, I mean, yeah, I guess ivory is like a good way to describe it. Like, I don't know, I don't got anything on this wall I can point at as a quick reference, but yeah, just like a tan, basically. But yeah, it's the last time I ever did any painting though. I haven't done any painting in some time.
I got you. I love me some painting.
You ever paint the house when you were a kid? Do you ever have to?
I remember liking to get a few licks in before they paint over the actual thing.
Oh,
it was always cool to at least like, let me see if I can put some paint on the wall first.
Well, yeah,
it was always intriguing.
You could like mess around. Yeah, I'd like write my name on the wall and stuff, and
it's usually
paint over it.
Yeah, exactly.
Anthony, I grew up in Cincinnati area, Westchester, more specifically, Southwest Ohio. Reds, Bengals. It's called 11 table tennis. It's paid. It works all right.
I think I used one table tennis one. Oh, also, do you call it? And we can jump over here to the TradingView platform. We'll check out NASDAQ, see what's been going on over there, do a quick recap. But do you call it ping pong or table tennis? Because I just heard it called table tennis, and then I heard you refer it to as table tennis, but I heard you say ping pong too, and this is usually a little debacle.
Oh, I kind of say ping pong. I mean, like formally it's table tennis for sure. Like I think that if you're talking about like the correct government name for ping pong, it's table tennis.
I didn't even know that was the correct government name.
I say ping pong though, like more often than not.
Yeah.
I guess if I'm playing it, I would say I would never say to my friends, you want to play some table tennis on the table tennis table?
Yeah.
I saw they got a table tennis table downstairs. You want to go play some table tennis? That would never leave my mouth.
Yeah.
I would say ping pong. But like formally, it is definitely table tennis. I mean, like that's what they call it in the Olympics and everything.
Oh, okay. Yeah. No, I actually never actually did the research for that. I just always thought my dad is from Jamaica, so I was like, they call it table tennis over there.
Yeah, and you never seen pro table tennis, like a clip or anything?
I've seen the clips for sure. They're going crazy.
They're crazy.
Yeah,
it's insane.
It's insane.
I don't understand.
I love me some table tennis, though. I recognized over there on the other side they have a table tennis board.
Yeah,
I was like,
they do. I got a ping pong table.
Never seen that before.
Yeah, they got a ping pong table. They got a pop
I was
shot.
like, no way.
We should just be using those things. They're right there. Let us know if you guys want to live stream the Errol and I playing table tennis.
That would be fun.
we could do that on TikTok.
That would be fun. As for today, we have our levels in for the day. We'll just go over some of the levels. And we had taken a couple trades today. They were to the short side. We broke even on 2 of them and cut the other one. Market's been extremely strong. Didn't even offer any forms of a pullback to get long off of our levels of value. So that's where we've been at so far. But let's go ahead, zoom out a little bit, and recognize some of the levels of value that we're going to be looking off of for this week. Because if we take the all-time highs, we don't really have any other levels to even trade off of, because at all-time highs, there's no previous established levels of value. So we're either going to have to wait for the market to turn around to a previous level of value, or if we take the all-time highs, we're going to have to wait for the market to create a new level of value. And you're not going to be able to see that until after it's done. So it's going to be a little bit more hindsight to know where that level of value is at if we trade to a new all-time high, because we never traded at these levels before, right? There's nothing to go off of. There's no levels of value to go off of. There's no data to lean on there. So that being said, let's go to the 30-minute. Zoom out a little bit here. We have 2 levels of value that we're looking at. You can kind of see where price was breaking out from. You're going to see that even in a lot of my executions, even over the next couple weeks, over the next month, whatever it is, you're going to see that I have a tendency to prefer mean reversion strategies. A lot of the times, I'll trade the breakouts. I have a tendency to go for the mean reversion and just manage the risk very tightly on those. But I prefer those. There's going to be 2 common movements in the market, typically that mean reversion move or that directional move like we talked about. And we'll get into the weeds of that in a minute. But this is our main value area for the week. Our value area high being 25,110. Our value area low being 24,687. Now the point of control is going to be sitting at 24,917. And this point of control is going to be the price level that had the most trading activity from all of last week. So the data set that I'm using is all the trading activity from the last 5 trading days. And that's going to be static going on through the rest of this week. Let's zoom into a 5-minute now, bring it in a little bit closer. Because I took a few trades today, but it was tough, you know. This market is extremely resilient. And if you don't manage that risk, it's going to run you all the way over. So let me pull up these executions and look at the first 2 trades that we took. So over here, we got a breakout right in the morning. The market just rips right out of the gate. So I'm thinking, okay, I was potentially hoping we might get some type of reversal. Maybe if I could find this tool. Sorry about that. Was hopefully maybe we can get a reversal maybe right around here when the market opens up. Maybe the market fails here. Then we can use this as a level to get short off of. But no, market opens up and goes ballistic. We trade right to our next level of value. Now, once we start trading at our next level of value, we're thinking, okay, are we going to accept inside this level of value, or are we going to reject off of this level of value? So that's the decision that we have to make right there. I was looking to get short, manage my risk, and we started trading through that level of value. We tried that short a couple times here. This was an area where whenever you recognize that the market is acknowledging this price level, this right here is where you can get short or you can get long. And you're going to find out real quick whether you're on the right or wrong side of the trade. Clearly, I took the short opportunity. I got stopped out instantly, and it clearly showed me I was on the wrong side of the trade. But at the same time, that's kind of nice. It's kind of nice when the market can let you know right away when you're on the wrong side of the trade so that you can just manage your risk very quickly, go about your day, wait for the next trade opportunity. So if you took the long there, you probably got a pretty decent move. In hindsight, with the market being so bullish, my own bias led me to take another short, when in hindsight, I think the long would have been a little bit more favorable, right? It's hindsight, of course, but that window of opportunity allows us to get short or long. It's not like when that window of opportunity shows itself, we have to get short or we have to get long. I just have a tendency to have a bias to the downside sometimes. So I just got to manage that risk very quickly. But if you took the longs at that value area low, you got a pretty decent run on the market. After we traded through this level of value, our mindset is now, okay, are we going to reject at this other end of value, or are we going to pause and continue through that level of value? Because we now know at this value area high, let me clean this up. We now know at this value area high, one of two things is going to happen. And that's why we took another opportunity, because we're not looking to be right directionally on every single trade. We just want the market to give us that opportunity. So it gave us this window of opportunity right here. Again, I took the short, right? If you would have taken the long, this would have played out beautifully for you, but you can see that the market is acknowledging those levels. And that's like one of the best feelings, not getting the trade right, the direction right every single time, but just seeing the market at least acknowledge that your level is there gives you some level of confidence to trade off of them into the future. So we consolidated on top of our value area high for about 10, 15 minutes, and then we pushed to new levels, been consolidating for a lot throughout this day. Looking to take the all-time highs, and it's looking like the market wants to do that, brother. Don't really have many other levels to trade off of. The last stop is the all-time high, sitting at 25,394 on my chart over here. But that's all I've seen so far today. I was hoping we'd get some pullbacks back down to that level of value, but it didn't even offer that. And because it didn't offer the pullbacks, it felt like you were chasing the moves in the market without them. So the market's been extremely bullish. I don't know what's going on. Maybe you're just buying everything up, Gus, pushing this market to all-time highs. I don't know what's going on, but it's been resilient, forcing me to be even more patient.
Yeah,
which I don't like, but I'll do it. I'll be patient. I don't like it though.
Yeah, I haven't done any buying today. I was incredibly long through the down move and sustained pretty much everything last week. I cut very little. There was some serious pain days last week, but
yeah.
Now that we're getting the recovery, I'm long enough that I don't feel like I need to add anything new. But yeah, good contraction on the VIX as well. My VIX shorts are looking
doing really well.
Yeah, looking like they're going to pan out. Ideally, need VIX below 18 by October 29th for max profit. It's at 18.55 right now. It does seem to be kind of consolidating at that range a little bit. So if we hang in that 18-19 range, that would be less than ideal, but I would still be able to find a profitable exit in there. They are profitable right now.
Right.
But yeah, no new longs for me. Just the existing lots and lots and lots of longs. The existing 92 portfolio beta adjusted delta of longs. But yeah, I mean, this is just kind of what I was waiting on. As we got down day after down day, I basically just spammed this prediction over and over. And then, yeah, it finally came to fruition one of these times. When I saw we were going to open higher today, my first instinct was actually that we were going to go lower. I'm happy I didn't trade on that conviction in pre-market, but that was the way that it seemed to me.
Yeah.
I saw this from Kevin Judkins up here. Good way to short GLD. Bought 400 put 9 DTE. Sold 389 put 32 DTE for a small credit. 389.
Gold's insane.
I don't know if I just said 39. Yes, yeah. Gold is insane. That seems like an interesting strategy. I mean, you're just posting up a lot of risk should it land above. Well, I don't know. I mean, that's interesting. I'm confused by your thesis. Unless you're planning on exiting all of those at the same time, 9 days from now, then that's one thing. But if your plan is to, the 400 put 9 DTE obviously makes sense being long that's just being short right now. But then the short 389 put 32 DTE is kind of what's confusing me about this position, because that is almost, that's like reminiscent of a Mike Butler double doink, as though you want it to go down and then go up. Because the short put being further out, that would be an inherently bullish position if you wind up with just that on. But if you're saying you're going to hold them both for the 9 DTE and then get out, exiting same time, then then yes, I can totally see the validity to that. And I think that now is as good a time as any to get short gold. Although I've been saying that my silver shorts are not panning out. Maybe I should double down with some gold shorts. But I don't know. This is really scary. But if your thesis is short, then yes, I think that's the sound way to attack it.
I haven't put on too much risk to the short side in gold yet, so I'm not too opposed to getting on a little bit more short delta here, just because I haven't oversized into my short position on gold.
Yeah, I have nothing, and it's like, I don't know. Yeah, with gold, I just think that there's going to be so much downside to be had for gold whenever it finally comes. Right. So I'm not exactly worried about trying to perfectly time whenever that top comes through. If I miss out on the 400 to 390 move in GLD, but I can catch the 390 to 350, I would be just fine with that. So that's sort of where I'm at. Just using short delta for no risk. Yeah. Then absolutely. I think that's a well structured. Some good risk management.
Even if we get back down to our moon, I mean, our moon was 4,200, where we were near 4,400 at one point last week.
Wolf, Gus just saw your commercial, Uncrusted PB&J sandwich. Forgot how good they are. Yeah, I eat like 2 Uncrustables a day. Still, I love Uncrustables, and yeah, good old handmade PB&J is actually a little better in my opinion. I'm obviously fresher, but the Uncrustables are such low hanging fruit that I can just grab really easy and eat. I'm a big PB&J guy. More of those PB&J commercials coming whenever I get them edited. My dearest apologies to our wonderful producer, Ryan Sullivan, who has been waiting for me to edit the other 2 for like months now. And I it will be posted. What else? Oh, ETHA. Yes. Goodness gracious. I am long ETHA and IBIT both. Definitely recovery, like larger bigger picture recovery from the lows. But yeah, we have kind of started channeling now. It is a bit frustrating. You got any crypto exposure?
Not too much. Not trading IBIT or BITO or anything like that right now. Outside of long term, not directly trading these products. Ethereum's been pretty volatile. I know Bitcoin has started to pull back a little bit more here now. It started to feel like all assets were correlated at one point here.
Yeah, ETH opened way higher this morning. I mean, I thought, they've been largely correlated, as you just said. I was expecting these to recover with the broader market, but that hasn't seemed to be the case either.
No, not at all.
And the metals just did.
Yeah. I mean, this Bitcoin and crypto as a whole has been extremely volatile too. Pulling back, people thinking it's the top, putting in a new high, pulling back, consolidating for a little while, and that's where we're at right now on Bitcoin, 110. I think things get a little bit dicey if we're trading below 100,000, especially if we stay below there for any significant amount of time on something like Bitcoin.
Theta Trader, what's a good fall scent? If you mean like a candle for your house, then I like apple or pumpkin. If you mean a scent to put on your body, oak and warm vanilla, I would recommend Mercedes-Benz Club Black. So there you go.
Some apple cinnamon would be pretty fire too.
Yeah, a little apple cinnamon. Yeah, it's just that's not really like a body scent.
No, not
it's
for
like
the body scent.
Cinnamon, you can get away with the cinnamon, but apple is like, I don't know. I've never met a dude and been like, oh, you smell like apples.
You smell like apple pie, bro.
I guess that wouldn't be bad. Yeah. It's a fresh scent. But anyway, yes, crypto. getting. Yeah, I didn't realize how low Bitcoin was actually. The 110.
Yeah, point of control on Bitcoin right now sitting at 97,000. That's where most of that concentration and trading activity is sitting at.
Yeah, that's shocking to me. I mean, I didn't look at the spot price of Bitcoin in a little while. I had in my mind that it would be like a 120, maybe 115 type of level, but 110 is low.
Yeah. No, it is. I mean, last week there was a lot of fear in the market. I mean, earlier.
Yes, and 100 IVR on ETH.
Crypto feels like one of those assets where if it's not constantly making progress, people are very fearful.
Yeah.
So I'm like, how long can we really just continue to make all-time highs on something like crypto?
Well, yeah, I've always thought that's so funny, and I'm not even like a crazy staunch crypto defender. I mean, I guess I'm a believer, but like I couldn't tell you what the blockchain is or how it works. Like I'm not incredibly involved. But yes, crypto gets penalized more than anything else for stagnation. Like people refuse, like, and the standards, I mean, the goalposts are just so crazy for crypto because, yeah, I mean, if Bitcoin is not literally 10xing every year, people start to get wary about it.
Sentiment shifts.
Yeah, and it's like, that's just such a different
sustainable,
sentiment. Right? Yeah, because exactly. Were we ever thinking that would be sustainable? Right. Like because I know that there are people that are. How are you going to be bullish on Palantir and simultaneously, but like only care about Bitcoin when it's mooning? It doesn't compute. I mean, you can make an overvalued argument if you want. Right. You could say Bitcoin's overvalued, and I just don't. I think that it's too much right now. If that's going to be your thesis, but yeah, to reject crypto just because it has a poor performance for a few months, I've never understood that logic. And it's because we don't hold any other stock to that type of
that standard.
Scrutiny. Yeah, no other asset class in general. Right. Yeah, if something runs down 20% in 3 months. Most things, if they're stable, people will say, oh, this is a great dip. It's time to buy. I mean, it's happening with UNH right now, and their CEO got shot in the head.
100%.
So, yeah, it's strange how the goalposts move for crypto.
I mean, it does. And I mean, I think last week was a pretty good case to show how gold was still ripping to all-time highs whenever the market did pull back and shed a little fear into the market. It showed that gold seems to still might be a little bit more resilient than our new digital gold, Bitcoin. So I thought that was an interesting move. That crypto had in the market
as Chad said last week, man, how much is Bitcoin worth if the power goes out? I guess that's true.
Good point. Elon Musk made such a good case. And sometimes it's the way people word certain things. Sometimes that give you a whole new perspective. One thing he did say about the blockchain and crypto and those type of energies is the fact that it takes energy to produce it. And you can't fake energy. You can fake so many things, but you can't fake energy.
You mean like actual electrical current energy?
100%.
Or you mean like energy among people?
So blockchains take a specific amount of energy.
Sure,
right?
yes.
So it's just the fact that you can't hide additional energy. So I think that with social media and just the technology that we're using nowadays, things can get really confusing. And with the blockchain, the fact that it produces energy itself can be like its own data point on if something is real or not.
Sure.
If that makes sense.
I guess
because we went to the
what you're saying.
fiat currency.
I feel like I'm missing a piece here. I feel like I'm missing the connection. I just don't.
No, we'll circle back around to it, and I'll find the exact context of it. It'll make
sure.
More sense.
Yeah.
I appreciate you trying to latch onto there.
No, I'm looking. I'm missing a piece. I fake energy every day. Women at work was trying to figure out crypto. I was like, all you need to know is that people want to buy it. That's pretty much exactly right. I mean, but that's always my equivalency is that such is true with literally anything that has value. Such is true with gold. Such is true with Nike shoes. I mean, pick anything. It has the value that it has because that's what people are willing to pay for it at large. Except concert tickets. Just saying.
Except concert tickets.
Except concert tickets. Those things are underpriced. Gouge the masses. Consumes energy via proof of work. I'm understanding that part. Am I the stupid one? Chat, do you guys follow what Errol just said? Am I the stupid one?
No. I don't think either. I just wasn't able to articulate this correctly. Hold on.
I'm sorry. If I'm the one who missed the point, let me know. And I'll try to get on the boat. I thought it was broadly not clear, but if it's just Gus not clear, that's a different story. No.
I didn't get very specific on that. Hold on.
UNH also recovering nicely today. Always gotta shout that one out. We're taking the stairs up on UNH for sure. Quite literally just exact stairs on this recovery, but we seem to be making another one right now. So
there we go. Took the highs today on the day as well on Nasdaq. I mean, this market's extremely bullish.
Nasdaq just went?
Yeah.
Yeah, S&P's still not quite there. SPX. We're like 20 points off on SPX. This might be all-time highs just as we're about to get off. Let the record show, Harold, that we're chasing highs right now on this show. We always say that we get on the show and suddenly we're chasing lows somehow. We're chasing highs right now.
Man, I don't think I've seen a justified pullback in the overall market in some time now. And whenever we do, we get a pullback like April.
Everybody's gaslighting me that they did understand.
Let me see what Nasdaq.
Where's Tesla at? If we're talking a little Elon.
We can talk a little bit of Elon right now. So Tesla trading
$20 every time I look at it. Yep, $20 higher than the last time I looked at it. Sometimes
$444 right now. Tesla was on the no trade list, right? Or just one that you weren't ready to find?
Now, always, forever.
Oh, it's on there.
Hell yeah.
My bad.
I want nothing to do with this company. There's other no trade lists that have gotten lifted over the years, like Delta Airlines and Boeing. Those used to both be on the no trade list, and I trade them freely now. But Tesla, no.
IB ranked 25.5 on Tesla. It's been a little quiet over the last month, something Tesla is probably not used to. Let's look at this options chain. I know we got earnings here soon.
Yeah, if it stays quiet, maybe I'll start trading it. Yeah. The issue is these days like September 11th and 12th here, where it just moves from 350 up into 410 in 2 days, and Gus is short. That's what
happens. Tesla, October 22nd. That is, I believe that's Sahil's birthday, October 22nd. So
that's a good one.
Keep that in mind.
Kava mentioned?
I'll pull up Kava. Still not a big fan. I'm Kava'd out, bro. I went to Kava maybe twice 1 week down in Florida, and after a month of maybe having Kava 3 times in 1 month, I was good off of it.
Kava is definitely
it's I like it. It's good food.
Yeah, it's just it's bowl slop epidemic. I mean that's like a big thing that I know people have been pushing as of late is this the Chipotle Subway ordering style with bowls. It's getting a little bit played out. I do think Kava was early enough to market, and I don't hate the fundamentals of this company.
Can something like that get played out? I feel, let's say
we have cupcakes. It came and went. Froyo. It came and went.
So, for example,
things get trendy in food.
You're right, 100%. McDonald's, Wednesday, that fast food kind of, style business doesn't feel like fast food gets old, right?
Well, I mean,
because I see what you're saying. Because one thing that I
I just think that those are staples. I think that we've established at this point that fast food works, but this bowls concept is a little bit new. Like Chipotle notwithstanding, they've been around forever, but like beyond Chipotle, this buffet style, cafeteria style, make a bowl type of deal. It has become saturated.
What is it? More convenient for the business side, maybe that style of.
I think the people like it. I think it's just I think businesses were just initially trying to fill demand in the market for that style, and now we've just maybe gone a little bit too far. I don't know that Kava is necessarily going to fall victim to that thesis. I just think that market in general is become very saturated. There's a lot more options.
You're right. I mean, now that I think about it, even poke bowls.
Sure, yeah.
Almost the last 2 poke bowls I went to, it's the same exact style.
Yeah, I've mentioned we had a place in College Station, Piata, and it was Italian food. But it's the same thing. You walk along.
Italian too?
Yeah, you walk along and build your Italian bowl, which is a good concept. Like in a vacuum, they're all good concepts. We can only do so many walk along the line and put things in a bowl places, in my opinion. But I mean, clearly the market rejects that. They're all doing well. I saw something I wanted to respond to here. Let's see an earnings trade for tomorrow. That was what I saw. I'll put on a small earnings trade. It's going to be just for fun. I want that to be like very well stated.
Yeah, this earnings trade that I'm going to put on is not for fun, guys. I did all the homework.
I'm going to do something.
All the research.
I'm going to do something very tiny. Let's see what the most attractive option is. Netflix is kind of flying. I want something where my sentiment about their earnings is opposite what they're doing today. And at large, everything's going to be moving up today. So I'm kind of looking for something where I'm bearish on. Actually, no. You know what I'm going to do? I'll trade Philip Morris earnings. This is actually just something I want to get long on more broadly.
What is the ticker for that one?
PM.
PM.
Yes. Philip Morris, like largest tobacco company in the world. They own Zyn. They own is it IQOS? IQOS? I don't know how you say that out loud, but they own those little vape systems that are really popular in Europe. They own a bunch of tobacco. Philip Morris is everywhere. Okay, so let's do something specific to earnings, and then we can also do something a little broader. So for earnings specific, I think I am bullish. I just read an article about this the other day, so I'm kind of very in tune with everything that needs to happen here. I think I'm bullish off this 157 level. So let's do something very short term. I'm going to go, how funny aggressive can we get here? What's like a naked, what's it at? 157?
What expiration are you looking at in there?
Well, I was thinking 4 DTE. That seems a little too aggressive, so I'm going to go 11 DTE.
Could be worse.
These premiums are kind of juiced, though. All right, let's go back to the 4 DTE, and we will do a put vertical, a short put vertical to the upside, and we'll sell the 160, buy the 155. Yeah, that's reasonable. 245 buying power for 255 in credit. Please give me a fill. Positions always run directly away from me the second I place orders on this show. Maybe 5 cents below the mid. You know what? I'll just go one to one. If it's going to give me 1 to 1, I'll take 1 to 1. Boom. All right. 243 BP, 243 credit, 1 to 1 risk profile on that. That's PM. And that positions me to need it over 60 by the end of the week. 160. by the end of the week. So that's where we're at on that. And then I also have longer term theses about Philip Morris. I've re-upped on buying power because I had some nice profitable expirations last week. So yeah, let's go Philip Morris longer dated. What about something like, what about something like a bearish, no, like a bullish, what about a long call 2x1, something like that in the end of next year, December 26. Call a vertical. We can get a little speculative with this one. 180, 175.
Branch's long cinnamon flavor zins for the holiday.
Long cinnamon flavor for the holidays. I'm a cinnamon guy. Cinnamon's a divisive flavor, but I am an enjoyer myself. The coffee ones are good too. People sleep on the coffee ones. They got some vanilla in there.
Do they put any caffeine in those at all?
What?
Can you do something like that?
There are companies that do that.
Okay.
Yes. Like I believe Grounds is the one that I've used in the past. Okay. It's called. But Zyn themselves do not.
Yeah, I've had some of the caffeine mints. They just have an off taste to them. Have you had those before?
Yeah, I've used those.
They're not bad. It just has it's an off taste.
Yeah, and
I get used to it.
I tried the caffeine pouches, but I came to find that across the board, they all have to be too large. Is the thing.
What do you mean by that?
Like just physically, they are a large thing to have in your mouth. Mm-hmm. Like it looks like you got a whole freaking lip a dip in.
Yeah.
And it's just for some, like, I don't know. I tried it, but I was like, man, I got caffeine pills. I got coffee. It's just I don't really need this type of. If I need quick caffeine, I can take a pill. If I want to have a nice, enjoyed, sustained release of caffeine that tastes like coffee, I can just drink coffee.
Right.
Don't need the pouches.
I hear you on that.
But yeah, okay. One more longer Philip Morris. These are kind of
cinnamon. That's pretty good.
Find something that works here.
What's going on, Lone? What's going on, guys? Pullback in the evening, agreed. Yeah, hopefully we get some type of pullback. After recognizing being on the wrong side of the trades this morning, I was hoping for a pullback because then the long, to take that all-time highs was just right there. It was like such a low-hanging fruit, except I wasn't able to get the risk reward that I wanted, so I decided to not pull the trigger. But hopefully we get some type of pullback. We still got a couple hours left until the market closes today. And to answer your question, I believe it was
I'm buying a naked leap.
You said, Errol, are your levels of value support and resistance with confirmed high trading volumes? Kind of, yes. I don't necessarily use them as a level of support and resistance. Sometimes they kind of just end up being that, if that makes sense. It's more so the idea and the logic behind using levels of value is the fact that those levels of value are the price points in the market where liquidity providers, banks, institutions, whoever's providing the liquidity has the ability to execute the bulk of their orders, right? Like actually there's constraints outside of the areas in the market where there's not enough liquidity. So those pockets of heavy trading activity provide the perfect environment for tons of limit orders to be filled. So that's one of the reasons why you'll notice the market acknowledge those levels. You can use them as a support or resistance. I don't really view them that way, but I can see how they can be viewed that way when we're speaking about it. But in my head, I'm not necessarily looking at it as a support or a resistance. It's more so, okay, whenever the price gets to these levels of value, you can use whatever tools you want to use to determine that buying pressure, but then you make the decision if you want to get long or short. So it ends up being used as a support or resistance, but inside your head, it's not really a support or resistance, if that makes sense. It's just one of those levels in the market that you understand important and bigger decisions could be made here. Whether that's the market's about to rip to the upside or the market's going to rip to the downside, or we're going to stay here for the next 30 minutes. We just know that important decisions are going to be made, and we want to be taking part of the market when those important decisions are being made. And that's the entire idea behind it.
Finally got filled. 210 call.
210, baby.
210. December 18th, 2026.
December 18th, Errol's birthday. Let's go.
Yeah, it is your birthday.
2026.
Yeah, Errol's birthday, 2026.
Let's go.
It's like Errol's, 41st birthday?
42nd, brother. 42nd. Get with the program.
But yeah, so we'll be moving up on that one. So yes, to reiterate, I have a bullish put vertical, a short put vertical, if you will, for the October 24th expiration cycle, which is this Friday on Philip Morris, who reports earnings tomorrow. That is short the 160, long the 155 puts. You need it over 160 by EOW. And then beyond that, I have grabbed a 210 strike 424 DTE leap in Philip Morris.
They have they have a documentary on Zach Morris.
Oh, I don't know who that is.
Zach Morris was like one of the most prolific pumpers and dumpers on Twitter in like 2021, 2022, 2023. Like a lot of high profile individuals would even like engage with him online, and he turned this kind of a joke into like a massive pump and dump scheme, and he literally got by the SEC. And this is like just a few years ago on Twitter, on broad daylight on Twitter, like telling everybody, yo, buy this, and it was just a whole thing. And I didn't know there was an entire documentary, like a well-produced documentaries out on the whole situation. So I don't know if anybody else in chat remembers the entire fiasco with Zach Morris and them doing all those shenanigans, but they got a movie on it. They got a movie on everything nowadays. Like Zach Morris and Kelly Kapowski.
Is that
I'm not
partner in crime or something?
Is that the partner in crime? I'm not sure. Kelly Kapowski. I feel like I would remember a Kapowski.
That is quite the name.
Saved by the Bell reference.
Saved by the Bell. Yes.
Okay.
Everybody's coming through with Saved by the Bell.
Everybody at the same time. Everybody at the same time.
Chat and production at the same time. Thank you, James. But yeah, that's very interesting. I don't know. Philip Morris. They're allowed to addict their people to their product. How many companies can you name that's true for? Like, that's the design of the product. Like, I know, alcohol companies, your the ABIs of the world, like, sure, they some people get addicted, but that's not the point. But like with every product that Philip Morris puts out, the point is that people cannot quit it. So, yeah, I'm a fan.
There was more to Zach than I realized. Yeah, me too. When I seen a whole documentary, I was like, there's got to be more to this guy than I realized.
Yeah, somebody executively decided there's more to him than we realize if there's a doc.
There's enough content of this man's life to produce a documentary. What was he up to? And not just his Twitter profile. He was always a hustler. Yeah, no, I recognize that too. I believe he had a girlfriend at the time, and he was doing all these crazy stuff. And like, I was like, what? You really don't know somebody sometimes. Anyways.
Well, yeah, we're about to hit our time. You got anything else?
And allow the market to frustrate us, and we'll be patient whenever we get any type of pullbacks in the market.
Let me unpack this one. This is a good question, I think. What are your thoughts on a direction earnings play using a risk reversal style trade? Example: Intel bearish, buy at the money put spread, sell call spread with a short at the expected move. Can you set that up? Can we set that up quickly?
Let's go.
I'm not sure. I need to see the curve on this one. There's too many moving parts there for me to see this curve.
Directional earnings play, use a risk reversal style trade. INTC bearish, buy at the money. Okay, let's see what we got here. What's your thoughts? Expiration.
You gonna calendarize that somehow? I assume there's different expirations.
Yeah, I wouldn't be sure what the expirations on something like that might look like. So we might have to circle back around to that one. Legal team then muted Arrow for a sec before they get sued by Mark here. INTC, you're looking at INTC though. Expected move, playing risk reversal style. Buy at the money spread, sell call spread or short at the money.
Buy at the money, put spread.
We'll circle back around to this one and let us know. Were you looking at the weekly expiration and the instant pain, instant gain in October 24th?
We generally do more technical high-level stuff like this on Tuesdays and Thursdays anyhow, so this is actually a great thing we could just pick up.
Saved by the Bell.
Tomorrow, first thing. But like my lean when I'm reading this on paper is that I think this would work, but I would need more specifics. I would need to actually like take a minute and see this and visualize this. Because I'm not entirely sure. But yeah, if you let us know expirations, we can absolutely pick it up tomorrow. We can throw together a whole little slide for it.
We got Mike Jones, Mike Evans, Saved by the Bell.
Mike Jones.
No, I know we only got a few more minutes here. Anything else top of mind?
Yeah, no, nothing top of mind. I just more green, please.
Same.
That's what I say.
I think that's my last remarks too. I think more green. If we get some pullbacks, we'll see how the market responds to those levels. But we'll be back here with the same exact levels tomorrow at noon. We'll be back here. The levels that we use on Monday and we talk about together is the same exact levels that we use through all 5 days of the trading week. So nothing's changing. They're very static levels. So it's no hindsight BS. We're not going to move things around. We're going to use the same analysis that we're using from the beginning of the week, and we'll continue that through the other 5 days.
Yep, absolutely. Cool. And Macro Brewski, I'm following that trade now that we're talking about that. But yeah, we'll definitely touch on that first thing tomorrow morning. We like to do more TA focused stuff and broader, technical things. I don't even mean technical analysis, just trading technical things on Tuesdays and Thursdays. So that'll be a great one to pick up and hit the ground running with tomorrow. Yeah, as Errol said, we will be right back here, 12 p.m. Central Standard Time, sharp tomorrow. Be sure to come hang out. Stay tuned for Dr. Jim coming on next. And that's all we got for you guys today. As always, thank you so much for watching. We love all of you, and we'll see you guys tomorrow.
Peace.
Starbucks, Amazon, Apple, Netflix, Tesla, and Circle. 6 of the most popular stocks in the market today. 6 stocks that are probably in many of your portfolios right now. Some old and some new. But what if you had to find the best stock to trade to fit a $30,000 account today? How would you do that? Well, I'm Dr. Jim, and after having traded for nearly 20 years now and having been on the Tasty Network for the last 10, we've created a 5-step checklist that's going to help us walk through exactly how to find your next trade. As we work through each step on the checklist, we're going to use market metrics, strategic choices to help us narrow down the list. And one by one, we're going to eliminate a ticker from the list until we're left with one ticker, one strategy, and we execute the trade. So let's get started with step number 1, liquidity. So the first step in finding a new trade and a new trade's journey is without question liquidity. You need to make sure that you are trading a very, very liquid stock, because I can say from personal experience, there is nothing worse than getting exactly what you wanted. You get the move that you want, the perfect position is on, the strategy checks out, and then the next thing you know, you can't get out. You can't get out for a good price because you're trapped in a very, very low liquidity stock. You're stuck. So in this situation where the liquidity in the stock is really, really poor, you essentially have 2 choices. You either A, stay in the position a bit longer and wait for the price that you've been targeting all along, or B, you get out at a worse price essentially and take a fill on a price that isn't necessarily near the mid price or the mark price at that time. Neither one of these options is good for you. So to avoid essentially any and all problems associated with liquidity, you want to do 2 things, both of which are pretty simple. Number 1, check the liquidity star ranking in the Tasty Trade platform. And then number 2, cross-reference that with the bid-ask spread differential that's in the market at that time. Doing these 2 things will keep you on the right side of liquidity pretty much every single time. So let's dive in. All right, so we already have our list of 6 stocks, so we're going to work mostly from that list. But if you didn't have a list already, just go into Tasty Trade, click on the watch lists. You can use Tom's watch list, or you can use the Tasty default watch list as a great starting point. Okay, but with our stocks, I want to begin by checking the liquidity star ranking for each one. So here's Starbucks. Let's go over to the overview tab, and then you can see the liquidity star ranking, 4 stars. So Starbucks looks good. Here's Apple. We go to the overview again right here. You can see also 4 stars in the liquidity ranking. So Apple is good. Tesla, overview, liquidity ranking, also 4 stars. So Tesla is good. Netflix, overview, liquidity ranking, only 2 stars. Okay, so a big question mark by Netflix. Amazon, overview, liquidity ranking, 4 stars. So Amazon is good. And lastly, Circle, overview, liquidity, only 3 stars. So it appears it's going to be between Circle and Netflix for which one gets the chopping block. Now, again, to cross-reference the liquidity, now we're going to turn to the bid-ask spread differentials. So with Circle still loaded up, let's open up the October cycle with 44 days to go, because that's closest to that 45 marker where we like to enter our positions. And let's just simply look at the at-the-money strike. You've got Circle at 120. Let's look at the 120 strike. You can see that the bid-ask spread differentials are about 60 to 70 cents. I mean, they're moving around as the market moves, but about 60 to 70 cents on the put side and also on the call side. Now, generally speaking, for the most liquid names in the world, like SPY, like QQQ, you're going to see 1 penny wide markets. You're going to see 3 penny wide markets. You're going to see really, really tight bid-ask spread differentials. Now, with a lower liquidity name, we might be willing to accept slightly wider markets, but Circle at 60 to 65 cents for a $100 stock, I would much prefer to see that at maybe 10 cents or 15 cents. But let's now take a look at Netflix. If we look at Netflix with 44 days to go, same thing, right? But this is a $1,200 stock. So if I look at the bid-ask spread differential for the at-the-money strike, look at what we see. We see at the 12.15 strike, you can see that you're only about $1 wide on the put side. You're a lot wider on the call side, $2 wide. But you have to keep in mind, this is a $1,200 stock. So on a relative basis, I would argue that Circle is a lot less liquid than Netflix because the bid-ask spread differentials are going to scale with the stock price. So Circle is gone off the list. The liquidity is just not good enough. The next market metric that we want to turn to is volatility. At Tasty, we feel the most opportunity as an active trader is with a focus on volatility. It's not directional. It's not trying to get bullish for the next leg higher or get bearish for the next leg lower. It's actually trading volatility and specifically elevated volatility and trying to sell that volatility to take advantage of its natural tendency to contract over time. Now, we already have an entire crash course dedicated to volatility, so definitely check that out when you have a chance. But simply put, our foundation is short premium, so selling options. By selling options, we're able to essentially put probabilities in our favor, put the passage of time in our favor, and then also position ourselves to take advantage of any volatility contraction over time. So we really like the short side of the option contract when it comes to the strategic choices that we make. But we don't want to just sell volatility willy-nilly. We want to be strategic and we want to be patient. So that is why we prefer to sell volatility when it is indeed elevated. Volatility is a unique characteristic in that it has been shown to demonstrate a mean reverting property. This is something that can be shown both empirically and also mathematically. Now, of course, you never know exactly when volatility is going to contract. It's never going to be that easy. But by selling elevated volatility, we are stacking the probabilities in our favor to eventually ride the volatility contraction later on down the road. Okay, so let's take our 5 remaining stocks, take a look at volatility, and see if we can't narrow down the list even more. So to begin looking at volatility, it's always kind of best practice just to get a gauge of where is market-wide volatility. And the best ways to do that are to look at the VIX or the /VX futures. So if I scroll down here on the Tasty default watch list and it's in alphabetical order, you can see the VIX right now is at almost 17. That's right around the historical average, maybe slightly over a historical average of around 16. Similarly, volatility futures are right around 17 or just over 17. So this tells me that volatility is around historical average, maybe slightly elevated in an overall market sense. But really, I'm not interested in market-wide volatility. I want to get laser focused with individual stock volatility. So similar to what we did with liquidity, let's just go through our stocks one by one, starting with Netflix. And the metric I want to look at is the IV rank. An IV rank shows me where volatility ranks on a percentile basis relative to where it's been over the last 12 months. So obviously a 9.6, like what I see here in Netflix, is telling me that it is essentially on the lower end of the distribution of all volatilities for Netflix for the last 12 months. So Netflix, 9.6. Okay, Starbucks, 20.6. So much, much better candidate for selling volatility because remember, I want to sell elevated volatility. So Starbucks certainly looks better than Netflix. Apple, IV rank of 14. So also looking relatively okay, at least in relation to what we saw with Netflix. And then Tesla also at 9.6. So very similar to what we saw there with Netflix. And then lastly, Amazon, only 6.2. So of the 5 remaining stocks, Amazon clearly has the lowest IV rank. So it essentially presents us with the least amount of opportunity as premium sellers. So Amazon is gone. Our list is indeed narrowing, and the time has come to finally choose direction here in step number 3. Are we going to play the stock higher? Are we going to play the stock lower? I mean, in my estimation, this is the age-old question. This is what everybody wants to know. And in my humble professional opinion, nobody knows where any stock or any market is going next. The markets are far too random and unpredictable. And so when it comes to picking direction, that honestly takes a lot of pressure off. I mean, by all means, use the technicals, use the fundamentals, use volume profiles, use order flow. Hey, you could even use your portfolio metrics to guide you. Quick little shout out to another crash course that is already on the YouTube channel all about portfolio management. But perhaps an even simpler method, and one that we generally deploy here at Tasty, is to kind of adopt a short-term contrarian mindset. So when something is down, we like to buy it, and when something is up, we like to sell it. All right, so let's take a look at Starbucks, Apple, Netflix, and Tesla and see if anything jumps out at us. All right, so for the 4 remaining stocks, Apple, Netflix, Tesla, and Starbucks, let's just bring up a daily chart, and we're not even gonna measure any technical levels or moving averages or support resistance or any of that. I mean, you could do all that if you want to, but just very simply, I wanna get a feel for, is something jumping off the page from a short-term contrarian standpoint? So Apple, to me, looks like a pretty obvious short. Now I say obvious jokingly because nobody knows what's going to happen next, of course. The randomness and the unpredictability will indeed take over. But if I had to choose a direction in Apple, it would be bearish. Okay, now Starbucks, conversely, this is a different story. To me, this looks like a bullish opportunity. Not to mention today, Starbucks is even down a couple of dollars. So for Apple, I'd probably want to get bearish. For Starbucks, I'd probably want to get bullish. If we bring up Tesla, this one looks a lot less clear, right? From a short-term contrarian standpoint, I think you could make the case that you could go either way in Tesla, bullish or bearish. And then with Netflix, very similar story to what we just saw in Tesla. I think it's hard to make a case either way. You could probably Tesla or Netflix is probably on the chopping block. So how are we going to determine which one of these we should get rid of? Well, now this is where we can go back to some of the previous steps on this checklist to see if there was a clear winner or loser with liquidity or with volatility. Now, interestingly, remember with Netflix, the IV rank was 9.6. With Tesla, the IV rank was 9.6. I mean, that's quite serendipitous. It is literally a tie. But what about liquidity? This is where it's going to tell a very different story, right? Tesla, remember, we go to the overview tab, liquidity, 4 stars. Very, very liquid. Netflix, if I click on Netflix, liquidity, not so liquid. So only 2 stars on the liquidity meter. So Netflix is gone and Tesla remains. Okay, so direction is always tricky, but for now, Netflix is gone. Let's put that guy on the shelf. That leaves us with Starbucks, Apple, and Tesla. And it is now time here in step number 4 to decide, are we going to do undefined risk or are we going to do defined risk? And the answer here is simple. Defined risk. If you're just starting out, every single one of your trades should be defined risk, 100%. Now, is undefined risk more effective than defined risk? Yes. Is undefined risk going to essentially give you more opportunities than defined risk? Yes, but you're just starting out. We are just getting going. You have to build up your experience and your exposure to the market before you ever consider an undefined risk strategy. Remember, this isn't a race. This isn't a competition. There is plenty of time to grow into the riskier strategies that may be more effective sometime down the road. For right now, let's get laser focused on defined risk only. All right, so Apple, Tesla, and Starbucks, that's what's left. So which direction are we going to play? Well, as you can see, it largely depends on which stock we're going to choose. So let's proceed with the checklist and we'll circle back to direction. And to really drive this point home, that essentially this case could be made with any of the stocks that we have left. Tesla, Apple, Starbucks, it doesn't matter. Defined risk versus undefined risk. Let's compare and contrast like a short strangle versus an iron condor. Short strangle, undefined risk strategy. Iron condor, defined risk strategy. So with Apple pulled up, let's sell a strangle together. So if I sell a 220 put and then I sell a 255 call, this is a classic short strangle. This is a great strategy, a very popular strategy. But when you click over to the curve view and you click on the analysis tab inside of the curve view, you get a nice visual representation of this strategy. And so it's essentially showing you that you have unlimited risk on both sides of the market. Just starting out, this is not something that we want to engage with. So back on the table view, let's buy some wings. let's buy a 215 put and let's buy a 260 call. If you go back to the curve view, you can now see that your risk is indeed defined. Now, this is not the greatest trade because we're only collecting $1.20, but for illustrative purposes only, it does showcase the difference between defined risk and undefined risk. So, with whatever stock we choose, we are definitely going to lean on defined risk because this is the best way to start as a new trader. Okay, but one of these stocks has to go. I mean, those are the rules. One step, one stock gets eliminated. Well, again, let's use the previous steps as a tiebreaker, right? Apple, IV rank 13.9. Starbucks IV rank 20.8. But Tesla IV rank still only 9.6. So we are going to eliminate Tesla, and that leaves us with only 2 remaining stocks. All right, so we've made it to the final 2. Tesla is gone. Tesla is forgotten. It's all about Starbucks or Apple. And so now it's time to select a strategy, pick one of these stocks, and execute the trade. And if you are just starting out, like a pretty brand new trader, the one strategy that I would focus exclusively on in the beginning is a pretty clear choice: the vertical spread. And more specifically, since you want to sell volatility, the short vertical spread. Now, with short vertical spreads, you are going to be directional. If you want to be bullish, you would choose a short put spread. If you want to be bearish, you would choose a short call spread. And remember, with Starbucks, we were leaning to the bullish side. And with Apple, we were leaning to the bearish side. So the strategy that we select is going to kind of go hand in hand with the stock that we end up choosing as well. And so to help us do all that and essentially complete the checklist, we are going to lean on some of the tasty methodology to choose our strategy, select our stock, and execute the trade. Okay, so we've got Starbucks and we've got Apple. If we're going to choose Starbucks, we're going to be bullish. If we're going to choose Apple, we're going to be bearish. So if we're going to choose Starbucks, we're going to choose a short put spread. If we're going to choose Apple, we're going to choose a short call spread. So one of the key rules with short vertical spreads inside of the tasty methodology is we want to make sure that we're collecting enough premium on entry. So with a vertical spread, we want to make sure that we are collecting at least 1/3 the width of the strikes. By doing this, the risk-return relationship is a little bit more balanced in exchange for a high probability trade. So if I go into Apple, October with 44 days to go, and you've got the stock at 237, let's say I just sell a 240, 245 call spread. If I do that, you can see the probability of profit looks good. The credit collected looks really good. I'm collecting 227, so well over 1/3 the width of the strikes. So Apple looks like a pretty good candidate right here and right now. Okay, so let's do the same thing with Starbucks. Starbucks, 44 days to go, October cycle. Let's go just one strike out of the money. Let's sell an 85 put and buy an 80 put for the 85-80 short put spread. Look at the credit collected. It's only $1.33. So it is actually much less than 1/3 the width of the strikes, even with Starbucks having a higher implied volatility rank. So it appears that the winner is indeed Apple. So with Apple at 237, our short call spread is selling for about 230. Let's see if we can get filled. And there you go. We are now bearish on Apple with a short call spread, having worked through the 5-step checklist that we just worked through. And so I hope this helped, and we'll see you guys next time.
It's option jive. We're back, but you know what that means? Time for a little bit of an option jive. Research corner, my man Kai, what's up?
Not much. Happy Monday.
Happy Monday's right.
Made it.
Got the jacket on.
It's cool outside today.
I saw my breath for the first time this year.
Yep.
Sad. I hope we get like a real fall where it stays like this for like another month or
I think you got about 2 weeks of it.
I know that
looming.
I think it's even less than that. From the reports that I see, I think it's like coming.
Oh, your reports? What do you?
I'm deep in the weatherman.
Almanac now. Like
I have people.
Farmer's Almanac.
I have people that are very in tune with the weather forecasting.
Really?
I mean, have you seen some of Westwater's stuff that he puts out?
Is that a sign that people are getting older? You watch more Weather Channel.
I think
thanks,
Kai
Kai.
is calling you out.
Thanks, Kai. You know.
I think
I came up with a joke there. You see that?
Yeah, that was good.
That's pretty good.
Thanks, Kai.
I'm on that road too.
Thanks. I remember.
I never watched the.
You're already there, Kai, okay? I know you look young, but you're already there.
I'm there. I never watch any Weather Channel or like a forecast before 30. Never. I don't even care.
Wow. Shade.
What do you got for us?
Yeah, what do you got here, Guy?
All right, talk about the markets. Yeah.
Let's talk about a market.
Yeah.
So what happened last week? We actually still experience high volatility, historical volatility, and also implied volatility because of a lot of the reasons, trade tensions, and the government still shut down, and also hit the crypto markets. Bitcoin was really low last week, following the week before the action. And the second most important is all major banks pretty much beat the estimate, but some stocks fell. I read some comments say, oh, maybe that's the selling news, but who knows? We had really good earnings week for all the major banks, but some of the performance was weaker than expected.
Regionals kind of put a little bit of a dark cloud on the sector, but I mean, Bank of America, Citigroup, they're all around their highs.
Deja vu with the regional banks.
Say again?
Deja vu.
Yes, deja vu. Yeah.
SBV. That one, remember when that was
away 2 years ago?
Yeah.
Remember KRE we were trading?
Yeah, KRE is getting
for a long time. Went from around 64 down to under 60. Yeah. Hanging out at 59.5, up 50 cents this morning, but tough trading vehicle too.
Yeah. So the regional banks wars, I guess some flavors to Thursday's trading. We actually have much larger intraday swing in the past week, much wider, and also. You cannot miss that gold. Keep going higher. 4,400, like a couple of points near 4,400.
Might be there by the open here. Tuesday, middle of the day. I mean, we're moving 25 handles up.
We are. You're right.
Every 30 minutes.
Right.
It's like a point a minute, basically.
You're right.
Yeah.
Crazy.
But we had a sharp reversal on Friday.
Yes.
That was a pretty big one.
By the dip.
It's all gone away.
Yes.
So this coming week, we have CPI, which is probably the most important economic data coming out this week, this Friday.
Will it come out with the shutdown?
It says the first important one coming out.
Okay.
I didn't read the.
There's like other report, like non-official ones, other, they have.
We got to get on you and the research team, you got to get on your back. You got to have your own report.
That's true.
We can try.
That's actually that could be a huge market for us.
There we go.
Come out with the research team's CPI report. Yeah, we could do that.
Breaking news.
Yeah, with CPI and PPI and everything.
Well, we got to have you guys like man on the street type thing,
Interview
right? Because you got to interview people to ask them if they feel good about their job, like
Wow, when was the last time?
Prices? Yeah, you got to go to the grocery store. You have to go to each grocery store. Figure out where the Campbell soup is more expensive, that sort of thing.
Great. I love talking to people after doing the research for 12 years.
But the White House did just say this from the people in my YouTube chat. The shutdown could end this week.
Really?
It could end.
Really? Yeah, who knows? Who knows?
Yeah.
So this actually leads to my second point. So the government shutdown actually into the fourth week. So it will be the second longest in U.S. history by Tuesday. So the second longest one is 21 days, which is 1995 by Bill Clinton. So tomorrow is going to be 21st day since this shutdown, right?
Okay.
So passing Tuesday, this is going to be the second longest one.
Yeah.
And we have tons of earnings. We're going to see the names in the last slide.
We do have tons of earnings coming, but I know you'll get
a lot.
Yes.
Yeah. All right. So what happened last week? The indices pretty much all green. You see these big numbers around 2 to 3%. It's not like they keep going higher. It's just like a bounce from the dip from the Friday before. So it was actually went up and down in between the weeks. But
the dip was bought, as I would say.
Yeah.
Yes. Again. It was a one-dayer.
Damn, we almost had him.
We almost had him. That's right.
Yeah. For expect move, next slide. Fortunately, we actually landed in the expect move 2.4%. The expect range was 2.5% because of the lifted VIX the week before. It was closed at 22, almost 22 the Friday before. The last Friday, we closed at 20.8. So the expect range of SPX is about 1.9%, which is still much wider than we normally see. Much wider. Normally we see 1 to 1.1%, 0.9 tradable.
So now we'll be taking a look at maybe the 0-day trades again today. You got high implied volatility, market going higher. Volatility, if market continues to go higher, volatility should contract. Should help those trades. We'll take a look at those today. That's what I read from this.
Goes with our VIX and VVIX study from last week.
That's correct.
Like this is a good time where volatility is not super high. You know, it's not on the tail end of volatility, but this is kind of the spot where premium starts to look juicy. Where you don't want to be on the super low or the super high. It's right in the middle. Yep. This is the spot. So.
Yeah.
But in between Friday, the intraday VIX actually almost hit 29 or something.
Yeah.
Right.
Well, that was. I think it was mostly pre-market because you had basically the move was done in the first hour or so.
Yeah.
Yeah.
I mean, like you guys had a 40, 50 point down move and then it was over. So.
Talking about the IVR, because the IVR of the Friday before so high, so actually dwarfed the IVR last week. IV is actually still pretty high right now, but the IVR actually reduced. So the only green ones we saw is the gold and the Bitcoin. Gold actually went up to 94%. It's pretty high.
Yeah, gold price and volatility. You like trading gold? I stink at it. It's the world is your oyster there.
It is so
35% implied volatility in gold, like in the near term.
It's usually in the teens.
15, 16. Like that's your best case.
You're smiling. Did you get?
No, I just remember there are so many articles and tweets that I saw over the weekend, in the past couple of weekends. You actually see more people posting gold trade, gold ETF, gold whatever.
That's what I was saying. But isn't that usually our top mark when everybody starts posting that? Because
everybody's a genius.
There was nobody talking about gold for the last 2 years.
I know.
The market was up 1 billion% and gold went nowhere. Nobody said, I love gold here. And then all of a sudden, gold has a move, and then everybody, is talking about 10, 15, 20% allocation to gold.
There is a ETF or whatever mutual fund says that they actually use a dollar average, like a monthly investment, as a strategy into gold. I don't know. That's this is commodity.
I just sold a micro gold.
Oh, good for you.
Yeah.
Good for you. You were trading it nice on Friday, too.
We had some nice scalps on it. We'll see.
Yes.
We'll see. If usually you don't when you go back for more, that's usually when you give it up. Where they let you get it. You get a couple and you think you're a superstar, and then you go back for more, like I'm going to take some seconds on that, and that's when you really get spanked. So we'll see. But I got a 123-point buffer today versus Friday.
Yes.
Because that's what they're up right now. So I didn't hold through the weekend.
Okay.
So we'll see.
Beautiful.
Yeah.
Very, very nice.
Yeah.
Very nice.
If it doesn't work, I blame you, Kai.
Okay. Did I give you the micro? No, not me. So this is the historical volatility versus the implied volatility in SPX. You can see the implied volatility was high, or like it went higher, but the historical volatility actually hit the highest point since this May. So that's why we experienced the wider swing range, especially for 0DT. We definitely experienced that testing on both sides, right? It was like it went down 50 points on Friday and then keep going up afterwards. It was kind of scary if you trade 0DTs. Even though they give you rich premium, give you wider range, it's still... You gotta be careful.
You know that if you're trading 0 days, you should expect to have some tail events. You should expect to have some max losses.
Well, if you sell something with a 20-ish delta, there's a 40% chance of a touch. Just using round numbers. So I mean, it's in your favor that you won't be touched, but it certainly can happen. I mean, you have to play for that. It's not like a 5 delta option you're selling is a 10% chance of a touch. You don't necessarily feel that that's going to happen to you today because it's so far away. It still can happen, but but it's going to be a lot less. But I think just about every 0-day trade that we've traded, I think we traded 3 or so of the last 5 days, we had a chance to manage them for a profit, which we did. And that intraday, it touched your strike.
Yeah,
I mean, that's volatility there. So.
And that's the next.
I agree with you guys. Friday's quote is it's a trader's market.
Trader's market.
For sure.
Yeah. Yep. You have a lot of opportunities to manage your position, even though you got to test it multiple times.
Yep, totally.
So the daily volatility was actually 1.7% last week, last 5 trading days. The long-term average is 1.1%. If we're looking at a medium number, last week was even higher. So last week was pretty volatile. Okay, so next one is the gold. I just want to try to show you the performance in the past years. You can see that big bar on Friday, right? Nothing too much to talk about, but I just want to show you this crazy.
Up and to the right.
Yeah.
It's just.
Yeah, don't ever show this again. Okay, good job out of you.
I bet there are a lot of people is going to jump into the selling premium camp for gold after see this 94% IVR.
Yeah, listen.
GDX or
keep it small. I mean, you can go into. I mean, listen. I haven't traded GLD in forever. It's certainly a tradable place now. Markets are a little bit wider.
It's too cheap, GLD, right?
No. I mean,
premium.
Almost $400 now. I mean,
No, I mean premium wise before.
It's gotten better.
Now, what's that?
Yeah. No, I mean, volatility is higher now. It makes it more interesting.
Makes it totally more interesting.
It's going to be interesting to see if volatility stays bid.
Yep.
Even if we have a little bit of a pullback, because you typically have that reverse vol skew where as gold goes up, volatility tends to expand.
Exactly.
If it comes down, you usually see volatility contract. I'm wondering if because of the move that we've had, if volatility kind of stays at a little bit of a higher floor for a period of time.
Yeah.
Like we were talking about being 14, 15, 16% implied volatility. What if the new, next year or whatever floor is 25%? I would think that you would see that, but who knows?
Okay, the last chart I want to show is Bitcoin. So Bitcoin and its implied volatility. So Bitcoin actually dropped to the lowest point since May. The implied volatility actually went up. So this gold and Bitcoin are the only major assets we saw the implied volatility or IV rank went up last week.
Well,
traders market,
Bitcoin up $4,000. I mean, but it was a slow march lower. I mean, it just stair-stepped lower and lower and lower. And again, we're up at 111 again. That's where we used to stop and go back up to 125. Got a lot of charts telling me might be some headwind here. So,
are you bullish? Are you guys bullish or bearish or neutral? Or
bullish long term. Bitcoin. October. A little bit of long Bitcoin.
Yeah. If October doesn't pan out, we might have to get rid of our very own Ryan Grace here. Has us all in the October bucket.
Yep.
All right. IV. The next slide. So the best and worst performers in the S&P 500, very liquid ones. AMD, EXP had the earnings last Friday. Starbucks, Airbnb, and Wells Fargo. So the upside move is all lower than 10%. IVR is much higher because of one reason is the overall IV market IV is high, and also the earnings.
If you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! I know Eliminate! You were on Eliminate! Oh my god!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
Did you get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's
don't know.
That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custards and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we pour the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can, because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old, but our primary pleasure was smoking pot because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, like, Sosnoff, grab the drill, and then it's like man work and you got to drill the hole.
Tony is going to counter that and say it's all about catching the fish. For sure.
No. I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
All right, yeah, I'll talk to you.
There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank
Does anybody
you.
ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Kentucky.
Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure. Yeah. Like, I live in Italy. Yeah. Like we drive like. I drove a truck in New York City. I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like, you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Gee. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see.
When IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful. It was beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Having a little problem. Bugs are everywhere from the rain, and I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
No. Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain's seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Hey, what's going on, everybody? Apple shares rally to all-time highs. About time that stock did something, right? Cleveland Cliffs, CLF, now they're talking about getting into the rare earth space. That's how in the zeitgeist right now it is to be a rare earth manufacturer. And then finally, Weight Watchers always tries to find a way to stay relevant. They did a deal with Amazon. We'll talk about that. So those three things and more are at the top of the show here, and then eventually we'll get into the platform and look around at this wonderful market we find ourselves in when you can just do so many different types of trades, anything you want. All the different things are live, whether it's gold, silver, bonds, oil, you name it. You can trade everything right now in this market. Welcome to the most dangerous show on the tastylive network, folks. It's Engineering the Trade. I'm your host, Jamal Chandler. It was a great sports weekend. It really was. I mean, I love sports. I talk about them all the time. Oh, why? Well, it's similar to the market in a way. It's the wins and losses that captivate you, right? It's the ways you win, the ways losses happen, the way you handle those and deal with it. My kids' football team, which was undefeated through the first 6 weeks, we lost 2 games in a row, and they were pretty good teams, honestly. And both of them were pretty. Yesterday was a close game. We went to overtime, as a matter of fact. How often do you see a football kids game go to overtime? But it was overtime. There was like at least 7 fumbles in that game. We only had like 2 of them. The other team had like 5, and they recovered pretty much every fumble except for 1, which we got late in the game. My kid had a nice. He plays defensive end. And he plays offensive guard. Yesterday they were actually moving him around on the defensive line because look, I'm telling you, I mentioned this a couple of times. I mean, he's a big kid, and there's a reason why he's a big, strong kid. A lot of the offseason training we've done, and so a lot of teams have gone away from him. They don't even come to his side. They don't run plays to his side. So we had to try to find a way to get him involved. The guys moved him from outside to inside. He ended up being like a little Aaron Donald, man. And one time he just bust straight through, caused a fumble, recovered it, which was nice. And we had momentum. We were moving the ball with like under 2 minutes. We even got, there was a hold on offense. We got the ball down to the 7, and it was 2nd and 7, and we threw the ball in the end zone. But man, they had a nice little corner. He jumped up and intercepted it with a few seconds left. So then it went to overtime, and you know both teams basically get a chance from the 10 to move the ball, see if you can score. And we oh man, and then like our main center, he got hurt throughout the game, so we started having issues with snapping, of course, because you know the secondary person doesn't snap as much, and we had a couple of issues. One of them happened during the overtime, and we were at first and goal, basically first on the 10. We moved the ball actually like 3 yards. We're at again on the 7, and we had a bad snap that put us back like 8 yards. We missed on the other 2 downs. We went for it on 4th. We missed it. They got it. They scored. Tough loss. The boys have to learn how to deal with that. 2 losses in a row. We got 1 more game before playoffs. 1 more. We got to win that. We need that game. We need that win. We need that momentum heading into playoffs. And so that story right there, a similar thing with market. If you guys watch football, you know anything about football, one of the craziest games yesterday was between the Denver Broncos and the Giants. And the Giants, who, by the way, have a superstar in Jackson Dart, they had that game locked up. They were up 19-0 at one point, and they had it even locked up in the beginning of the 4th quarter. Broncos, just look the story up. You'll see the rest of the history. Broncos scored 32 straight points, I think it was. 33, straight points. Wild game, 33-32. The ups and downs of life happen in sports. and in markets. And I think that's the fascinating thing. Right now, there is no down in gold, though. Holy cow, it just hit a new high. This thing's crazy. Let's pull up the slides and talk about the few things that we're seeing in today's market besides just gold. Apple rallied to all-time highs, if you can believe that. Yeah, the stock has not been deterred by a lot of this tariff talk and the idea of moving their business onshore. They just said, sure, we'll give some investments and everything will be fine. We're not moving all of our manufacturing on shore. There's no way they can. But I tell you what, this new iPhone, again, it doesn't seem often that these new iPhones end up leading to more gains, but in this case it does. Apparently it's done better within the first month than its predecessor did, the iPhone 17, and so stock is jumping big time. Big move in Apple here. You don't even see this type of move on earnings as much anymore. Big move here, and they do have earnings, I guess, coming up soon, right? About 10 days from now. So you could use this opportunity to possibly do like a calendar call spread. I would maybe. I don't know if I care that much to right now, though. Honestly, they don't have as many strikes. If they had further strikes and it was upside bid, if it was a little more convexity, maybe I would. But in this case, I'm not. It's just interesting to see one of the Mag 7 move like this because honestly, they've been fairly quiet throughout a lot of this movement in equities to all-time highs. I've looked at those charts and I've often said they seem to be right on the precipice. Well, this one looks like it just finally broke out here. Cleveland Cliffs, CLF, is a name that I have used to trade a lot when I first started trading. Metals name, they mostly do steel. Now, during their earnings call, they basically said that they're looking to get into the rare earths mining business. They have two mines, one in Minnesota, I think, and one in Michigan, and two facilities, and they're trying to see if they can make those into rare earth mining facilities. Very interesting at a time where the government is focused on rare earth minerals. There's been talk of China. Well, it's not talk. China's actually said they are limiting the amount of exports for rare earth minerals right now, and they have the most mines in the world. And so, obviously, the U.S. has been looking at other places nearby, whether it's locally or whether Canadian mines. Obviously, you've heard them talk about investment into MP materials. I think that's the only mine in the U.S., I believe, rare earth mine, and then they have also talked about Lithium Americas, which I think, also in that same space, talked about doing an investment in there. So there's been a lot of discussion on this topic, and we've seen some of those names move around. I mean, I'm looking at them pretty much every day now, whether it's LAC, whether it's MP, whether it's CRML, whether it's USAR. There's a lot going on in that space more recently, and I think it's just beginning personally. We'll see. I hope I'm right, but we'll see. Finally, Weight Watchers. They're partnering with Amazon to deliver GLP-1 products and other medications. Weight Watchers always seems to find a way to stay relevant, whether sometimes they will use sort of public endorsements from like celebrities or something. You've seen that over years. Of course, they were very different, right? Like, and I don't know if I'm guessing they still have a complement of things, like not only probably shakes and whatever else, but they're adding this part to their repertoire too. I feel like a lot of weight loss type of people are. If Nutrisystem still exists, I wouldn't be surprised to know that they are trying to figure out ways to use GLP-1 drugs. It is clearly the big hot thing, and so the ability to get it delivered to you, it's going to be something. Oh, leftovers. The big three stay ahead in the cloud market. Let's move to the next slide because this one obviously has some bearing today. This is the worldwide share of the leading cloud infrastructure service providers. Obviously, AWS is number one at 30%. Huge outage overnight, as many people have heard, probably been affected by. I think we did a good job here at Tasty keeping everything up and running. How we do it, I don't know. There's people out there smarter than me who are doing it, but AWS has been the number one provider. There's so many different people that use it, and I think if you didn't know that, you're hearing more about that today. Major corporations that use AWS. It's surprising that they're only 30% of it, but they're 30% of the market, but they are obviously a significant part of that market. Microsoft Azure is 20%, Google Cloud 13%, Alibaba Cloud 4%, Oracle 3%. As you can see, it goes on down. So really, those three are the main ones: AWS, Azure, and Google Cloud. But yeah, I bet their phone lines have been really busy today, for real. And interesting. My entire college online, your entire online college is down. Yeah, I'm sure they probably use them for stuff. The kids use things like Power School, right? If you've ever heard of that. Middle schools and high schools and elementary schools use that a lot for kids and grading systems and all that kind of stuff. I heard that was down at one point. Don't know if it still is. So if your kids come home tonight and say they don't have homework, well, maybe they don't. Who knows? Or maybe they're just telling you a story. But yeah, there's a lot of that's been affected by this AWS thing. It's huge. The one thing that's not down as a result of it is Amazon stock. Amazon stock is up today. I'm guessing maybe the Weight Watchers deal has a little bit to do with it. Don't know. You would think that they would have been affected by it. And again, AWS, I can't remember exactly. It's I feel like maybe don't get me wrong. I have to look again. I can't remember how much of their market cap it is. Maybe 50%. How much of Amazon's market cap? Yeah. Wait. What? Yeah. Market cap. It's AWS. Ooh. I forgot. Let's see. Has a market cap of 2.3 trillion. What is the AWS? Yeah, I don't remember. I want to say it's like, I don't know, 30 to 40% of its market cap. I mean, it's a decent amount, but I'd have to look that up. So, but yeah, this is obviously going on today, and they are still they are the top one out of the, and there's 3 top ones, obviously AWS, Azure, and Google Cloud. Let's move to the next slide. Does Tasty use Oracle or Azure? I mean, I'm pretty sure we use AWS, my friend. I'm not sure, though. Again, like I said, there's smarter people out there than me. Yeah, people still buy iPhones, bro. They really do. Who knew? Oh, this is a chart of implied vol versus implied vol rank for all the major ETFs. High volatility is up and to the right, as you can see. And, TLT is obviously one of the lowest things right now. Bonds have been kind of quiet, right? Like we haven't talked about it a lot. When talking about impending rate cuts, you're seeing the 10-year kind of move, 10-year yields move down more recently. But there really hasn't been a whole lot of movement. I'm pretty sure the MOVE index is not as high as it has been in the past. I always put dotted lines at 30 IVR and 30 implied volatility. 30 IVR obviously is a level that we often pay attention to. Anything above 30, for me at least, that's when I'm usually looking to sell vol. There's not many things above 30 IVR right now, honestly. Even though we've had a lot of movement here recently, which obviously leads to higher volatility. XLP is up there, XLB is up there. But the thing about that is they're implied, and this is an important lesson here. Even though XLP is above 40 IVR, the thing about it is that the implied volatility itself is fairly low, as you can see. It's in the teens. So it makes for a, I would say not that great of a sale, because how much lower is it going to go? Maybe 2 ticks you're going to get, maybe. And that, I guess my point is like when you sell that 40 IVR for a product that's 15 implied volatility, it's going to take a while. Even within that 45-day window, right now, November's 30-something days, it's going to take a bit. It's like watching paint dry. Whereas if you sell 40 IVR in a name that, like KRE, for example, perfect example. This has a 40 IVR, and that implied volatility is in the 30s, right? So that one, when you sell that 30-something IVR, it could probably come in like 5 ticks, right? Like right now I'm seeing like a 36 IVR. It could come in 5 ticks to 31. That is nice. Metals is a whole different level. As a lot of you have already know. There's a lot of you who didn't know are probably learning now. Again, similar to XLP, like most of the metals vol, when you talk about GLD, usually that's in the teens now. Right now, though, it's in the 20s, high 20s. And that's really elevated. Typically, we don't talk about selling gold vol that much, but I think right now you can get a lot more bang for your buck because the implied volatility is in the 28, 29 range. When you sell that, if it ever comes in, it comes into teens. It's just going to be a while right now because this thing is super jacked. But you can see those are the highest things right now. Highest on the board. GDXJ, GDX, SLV, XME, and GLD are some of the highest, if not the highest, implied vols across the whole landscape of ETFs. So, yeah, it's something else, man. It's something else. Thanks. AWS is 47.3% of Amazon's market cap. Yeah, I thought it was close to 50. I just wasn't exactly sure. But let's move to the next slide. Thank you. SPX 1 month skew steepens to 1 year highs as we get towards all-time highs. And when a little bit, you have like the last couple of Fridays where we have this big sell-off, nervousness starts to set in a little bit. I think that's when you see skew start to ratchet up. If you notice, when we talk about 1 year highs, you can see the last time it was this high was basically late last year, right? Heading in sort of the aftermath of the election, markets moved to highs really swiftly. And when they move really swiftly to highs, that's when skew starts to jump up, get a lot more bid than calls, et cetera. And that's kind of the environment we're in right now. So you can see they head right back towards 1 year highs. Let's move to the next slide. Skew is basically always just looking at the difference between, a lot of people will look at the difference between a 25 delta put and 25 delta call, right? Look at the difference on those prices. Same delta, but usually the put will trade over, right? That's kind of your cue to looking at skew. Nat gas and crude oil. Crude oil has been down for 3 straight weeks. I think it's headed towards 55. I think it already touched a little bit of 55. I think the low was 55.90 for this Z contract. At least that's what I saw earlier, right? 55.97 was the low. I'm not sure exactly when that happened. Maybe overnight at some point here. No, actually it was earlier this morning. Yeah, earlier this morning it traded to that level. So yeah, crude is looking really weak recently. However, nat gas, man, what a bounce. Nat gas is bounced recently. Of course, you know why nat gas bounced? Because I have a strangle in nat gas, and I recently rolled my upside call that was at the 510 strike to the 460 strike. Of course it's going to bounce now. God. So yeah, I'm losing money on that today. That kind of sucks, but I'm just leaving it. I'm not adjusting anymore on the strangle, but yeah, nat gas is having a bounce. Oil, though, I think, again, this is year to date. Oil's down almost 20% year to date, and it's not looking good. It's not looking good. So it makes it a little bit hard to play it for the bounce. Again, in the past, we've looked at MCL in these situations and said, okay, we're going to buy some MCL here. But right now, I don't know. I think I'm going to wait until 55. I really am. Let's move to the last slide, please. Earnings, we got agencies, Zion, so we're still in the banks realm, and then a bunch of other things. CCK, Crown, what is it, Crown Castle, I think it is? CCK? Yeah, Crown Holdings. It used to be called Crown Castle, I thought. Well, there was a CCK and then a CCI. SCLD has earnings. It'd be interesting. That's another old metals company, Steel Dynamics. It'd be funny if they start saying, yeah, we're going to get into rare earth metals too. It's almost like, when companies sort of start talking about, like back in the day, we would hear a lot of companies sort of say, oh, we're going to jump into the next hot thing. For a while there, it was Bitcoin. Obviously, it's been AI in recent years, so there seems to be more of that. Coke has earnings. GE has earnings. LMT has earnings today. GE, $300 stock. It's so crazy nowadays. They really unlocked potential once they did that spinoff. RTX, 3M, PM, GM, all the M's, that's right. Insert whatever M you want, and they have earnings tonight. And then EFX. The reason why I never pay attention to EFX earnings, but I got to say, a few weeks ago, if you noticed, those stocks, EFX and whatever stocks that are related to credit agencies, remember something happened there with FICO scores and the changing, and those stocks really took it on the chin. So I wonder if they're going to talk about that during their earnings. That's what I would be listening for. September CPI report is going to be released on Friday, apparently. I just saw something like they're actually going to release it. Like they shifted some people around from one job to another, and they said they have to release the report so that they can get some information on Social Security based on if they need to adjust that based on inflation. So I think what I heard correctly is that CPI report is supposed to come out on Friday. We'll see if it actually happens. I'm trying to see if the market is pricing it in. I think it is a little bit, actually. Yeah, that's I saw a little bump in the SPX vol curve, and I was wondering why, but that's it. I think that's it. It's supposed to come out on Friday. And then the next real big catalyst we got is the FOMC rate decision, where at this point I think they're pricing at like a 90% chance of a 25 basis point cut. I haven't looked at that in a while. Looking here real quick. As of right now, they're saying a 98.9% chance of a 25 basis point cut on October 29th. Number of SP 500 stocks above the 50-day moving average, 251. Let's move to the platform. Catterday Night, what's up? How you doing in the chat there, man? Grumpy Mike, what's going on with you, bro? Jared Kramer, how you doing? Anthony Hotboy, Anthony Hoyt, I see you. I see everybody in the chat today. Good to see you guys. Stop with the superstar talk. Dart started 3 games. Don't put him in Hall of Fame yet. I didn't say Hall of Fame. I just said he's a superstar. He is a superstar, I think. He looks pretty good. I mean, look, regardless of what you think, Denver is one of the best defenses in the league. And he had three passing touchdowns, right, and 1 rushing touchdown. If you don't think that's superstar material, I don't know what to tell you, bro. Something's wrong with you. Seriously. Hey, Smack Lovin', regarding your Netflix and iSurge calendars, are you looking to harvest Netflix 1250s and the ISRG 470s? iSurge. I had a calendar. I don't have that one anymore. I closed that out. I don't know if I might have not posted that. So that one was a calendar with iSurge. I mean, didn't they have earnings already? No? Am I tripping on that? I thought they did. Maybe not. But I don't know. That one, yeah, I don't remember what happened there, but I did close that one. I thought they had earnings already. Maybe I'm tripping. Netflix, I am not. So Netflix, I have debated on what to do with this 1250 calendar. I'm not exactly sure, honestly. This one's $4 right now. I've decided, typically I will close, and this is probably one that's worth a close at this point, because basically earnings are around the corner. And if this thing goes that far in the money with the type of move that I'm hoping to the upside, I'm really not going to make any money on the 1250. So yeah, it's probably time to just close the 1250 one. Only a 70 cents gainer. We'll close that. But the 1300, I'm holding on to those through earnings. Only $4.30. We'll see what that thing ends up doing. I don't see any reason to get out. Matter of fact, at this point, I might put on a 1350. Why not? Let's see what happens here. Let's see how cheap or expensive it is. 1350, $3 and change. Yeah, why not? Let's just do that. And let's not even mess around with it. Let's just pay up 30, 40. Oh, come on. Seriously? 345. How about that? Let me in there. There we go. So we'll just do that. We'll just go a little further upside that way, because I think at least this thing might be pricing in 100 point. It's down to 80 now. $90 expected move. Again, these plays are generally very cheap. Even that one is cheap. For a $1,000 name to have upside exposure, that's pretty cheap for $3 and change, you know? And so what I'm essentially trying to do is just play it for the huge move to the upside. Again, what ideally would be great is if it were to run up to 1,300 and just kind of drift higher throughout the week. Obviously, the 1,300 call will be way less than on the OCC 24 cycle than the OCC 31 cycle. And so that's really how I want it to work. But if it gets to a point where it exceeds 1,300 by a little bit, you can actually still win on it too. It's when it goes completely in the money that basically you just lose what you paid for it. You don't lose more than that. And that's why I like those trades. If you look at sort of how this could end up playing out, right? And hold on. Close that. You look at how this ends up possibly playing out. If you go to Friday, what's the 24th, right? Say by the end of the week, you have a situation where, let's just say it gets, see, this is what you want. See the P&L Theo? right? Say all of a sudden it jumps up and it gets to, say it's trading 12.90 after earnings. And matter of fact, forget Friday. So earnings are tomorrow, right? Say after the close. Say on Wednesday when we come in, and it's upwards of 12.80, 12.90. That's the kind of sort of profit you could end up having, right? Like say it even gets to 1,300. Well, we're fine there too. It's when it starts to go above that 1,300 call. And let's just take the 1350s out of here for a little bit. It's when it gets above 1,300 by too much. See the profit there, but say it gets above 1,300 by too much, eventually that profit's going to erode. So say all of a sudden it was trading 1,380. I still have some money, but not quite as much as if it were near the 1,300, right? Because then the October 4th 1,300 still has a lot of value. Now, the next expiration, the 31st, is going to always be worth more, but not as much. And if it gets too far in the money, then I don't make quite as much money, right? And so it's nice to have a little bit more upside having that 1350, because if it does blow through strike, I can still make a decent amount of money just having the 1350 call spread on too. Mind you, just remember, if it goes down, well, then we just lose what we paid, and we can live with that. I mean, that's the whole point of the whole thing. I am not paying a whole ton of money for this, and I can live with losing what I'm paying for this. Let's see. Oh, what's up? GPUS. Don't even know that name. Never seen it before. I don't know what that is. Wow. Never seen that. Let's see. iSurge earnings are tomorrow? Really? Okay. Well, yeah, I screwed up there. Let's see. If iSurge earnings are tomorrow, I might be interested in doing a calendar call in there. When is, let me look this up to see. Monday after the close, iSurge earnings. Are they after? Oh, yeah, they're after the close tomorrow. We need to make sure we have that in our system. We don't have that. Not good. Not good at all. What's the expected move in here? I guess I'll just trade them tomorrow. I can wait. No big deal. $34 expected move, but more importantly, 486 is the 100-day moving average. If it could get to that, it could probably do something, right? If the earnings are good. And so that's what I would put. I'd probably put my if I do calendar calls tomorrow, more than likely I'm going to do it around an expected move that gets me to a nice round number of like 500 or something along those lines, maybe even 485, right? Why not? Because again, like I said, that's basically where that 100-day moving average is. So more than likely I end up putting some of these on. Matter of fact, I might just put them on now anyway. The reason why I usually wait till the night above 4 earnings, because what if it pulls back and from this move today, right? And now all of a sudden it's 440. Well, that's a whole different dynamic. Now if it's trading 440, I'm going to be looking at the 475 strike as opposed to the 485 or 500. So remind me of this one tomorrow when we talk. I will probably put that on for earnings. That'll be another one to do. But yeah, I'm looking at the as of right now, I'm looking at the 485 and the 500 calendar calls. I will wait till tomorrow. Definitely remind me of that, and we'll talk more about it then. So, yeah, guys. Wait. What else? Is there anything else I want to share? Yeah. I mean, today I think the biggest things that I'm watching is obviously gold. How late last week, GLD put spread, which is working. It's been giving me minimal gain against the MGC contract I'm short. I find this a fascinating time, and I find again the relationship between gold in the market and the dollar and all together. There's a lot happening there. I feel like one of them are going to change around soon. So, I guess where does it end? I guess if some nuclear move higher in GLD, which on top of this type of move we're already getting happens, maybe I need to fold up shop. But for now, still holding on to it. And that's just what we're going to do. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, trade them often. I will see you on Last Call and Overtime. Peace.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy. What's that?
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88? So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hey everybody, hope you had a good weekend. Tim Knight here, and we have the following generally speaking as far as the markets go. A couple of Fridays back, we had our big plunge based upon a fleeting idea that there'd be 100% tariffs against China. That turned out to be a complete nothing burger. And the bar representing that plunge has basically been the happy home of the following 6 trading days. All last week and today have been bounded by that one bar. Although we are getting close to its top, which also means that we're getting either near lifetime highs or in some cases at new lifetime highs. So let's jump in and see what's going on, because just about every asset with a ticker is up today. Here's the spider, and we've got our old broken wedge there. And then we had skirting underneath the wedge, and then the big day here, bloink. And then 1, 2, 3, 4, 5, 6 days just banging within the confines of that. But as I say, like another day like today would push us to lifetime highs. So I've marked with this line, which, interestingly enough, that huge plunge on Friday is also the record high for the market for all time. So quite the flip. The cubes are up 1.27%, same idea. And we're also very close to a new high. I didn't see any particular big news, like an announcement about some big new deal or something like that. It's just there's this enormous propensity to buy, and if it's not interrupted by a shocking tweet like a couple of Fridays ago, it just keeps on keeping on. There are very few exceptions. One of note is Oracle. Oracle back here, they had their earnings announcement, and went blasting higher. But as I've mentioned before, it didn't have to do with a great earnings announcement. In fact, the earnings announcement was very bad. It had to do with projections about how great AI would be for the revenue in years to come. And there's some growing doubts about that. So on Friday and today, some pretty big, ugly red bars there. Seems to be kind of working its way toward maybe closing that gap up. Hasn't done so yet. We've stayed way above the pre-gap price point, but some pretty sweeping ranges and some very counter-trend behavior on Oracle's part. Semiconductors continue to be strong, and on an intraday basis, lifetime high, maybe lifetime high close, looking pretty likely on that. We peaked our heads just above this right triangle pattern, but presently a little bit below it. But as I say, in all likelihood, a new closing high for semiconductors. And over in small cap land, IWM, we'll go way back here to the whole schmear. You can see that obviously for many, many years, we've been in this broad uptrend, although a lot rougher than other markets. Small caps have had a rough time of it, comparatively speaking. But in recent times, we've got, and we've talked about this before, this very well-formed and very scary cup with handle pattern like. So it begins right around here, back in near the tippity top of the COVID mania, November 2021. So huge cup and small handle and a breakout. And we zoom in here. And what I've done with a couple of these cases is there have been some instances where, as I put it, they've been jump rope with the trend line, and that gets tiresome after a while and not very useful. So I've simply broadened this trend line to so that all this price point remains above trend, make it a little tougher to break the line, so a little more meaningful if it does. And emerging markets have continued to blast higher. Unlike some of the domestic markets, this is pushed above not only Friday's drop, but the days preceding. So emerging markets being especially strong there, with China not being left out. Although, from a charting perspective, China looks more dangerous than the emerging markets in general. This is the trend line on China, and we've cleanly broken it. And even with all the lift we've had, we're still well below the trend line. How are we doing? I'm just kind of monitoring the time here. I'd love to get through all the symbols today. Now, gold has had a mega rally back in the face of Friday's fall. And I wondered out loud on Friday if this would be just another one-day dip or the start of something bigger. Answer A was the right one, because what happened on Friday was very little different than what happened here. A big sudden out of the blue drop, and a day or two later, everyone's forgotten about it. It actually happened quicker this time. The last time had some little healing to do, and it took another trading day. In this instance, it didn't even look back. New lifetime high. And the front month, about $170 an ounce just in one day. I mean, it wasn't that long ago that gold was about $170 an ounce. So it's just been an astonishing rally, and who knows when this thing will stop. As I've said, long-term, very bullish. And whereas I roll my eyes about, Bitcoin's going to $1 million, there's not much I roll my eyes about when it comes to gold. I think, say, 100,000 would be a little bit out there, but it's not out of the question. And it's doesn't seem to be even taking a break here, except for occasional single days where it just pauses. So GLD naturally is also at a lifetime high, 3.26% gain. Gold is especially strong. Usually gold's just kind of like up 1%, and its friskier friends like silver and palladium are up more than that. Now it's just the opposite. Today, gold is the champion. Gold is up over 4% in the futures, whereas palladium up 1.43%. So like a third as much in terms of the gain. So silver, this has not had gold's performance here. It had a big fall on Friday, and it's still kind of hanging out down here. It's up, to be sure, 2.32%, but it has not healed itself with the instant nature that gold has. And so in turn, SLV, which had been at a lifetime high on Wednesday, remains below this former lifetime high. Like so, and this is this enormous swoop here, which started way back in 2011 and was pierced last week. So as I look at this, I mean, I'll just repeat it. I love precious metals, but can they just fall some? I mean, I just think it'd be healthy for them to take more than a 1 day break. This is just relentless, but maybe the future of fiat is so grim that there's just no holding it back. Of course, miners are enjoying this. GTX is up about 2%. We'll get in tighter here on the daily. But my perception on this is that gold is kind of its own thing, and the miners are kind of feeling their high valuations right now, and I think are quite vulnerable to any whiff of weakness in precious metals land. I have entered a tiny long position on dust. This, of course, has just been slip sliding away forever, and it had a big boost on Friday, naturally. But today it's kind of dead in the middle on that. Like I said, it's just kind of a for fun trade. It's little, but I'm more inclined to think dust will go up tomorrow versus down. Oh yeah, and palladium. We always like to look at that. It is up. The ETF's up 3.59%, and you've seen this chart so many times, but over the long haul, you can see this this base here is quite good. We've had in recent weeks a tremendous blast above that base. Let's just highlight this one as well. I think it's worth noting kind of historically what a similar setup looks like. And it can be rough. There are times when it backtracks and backs and fills, but long-term things looks very good. And like I say, what I would really love to see would be a more substantial diminishment. I toyed with the idea of getting back into this again, but I can't pull the trigger. Gold is so high, silver is so high, that I would feel much more at ease if it could get back toward the that shaded area that I've drawn. So I'm holding off for now on palladium. One sector I mentioned with some astonishment from time to time is quantum computing, which nobody talked about a couple of years ago and has been all the rage. But there's no PE because there's no E. I don't even know if there's revenues. I don't know how far along these companies are, but I am seeing, even with today mega rally, 333 more points in the NQ. These are feeling the heat. I think people are starting to turn cool to this sector. There aren't many stocks, but here's some of the big ones. IonQ down today quite hard, and actually, you can see here it's been really getting smacked. Let me make sure we're in the right time frame here. Yeah, look at that. 5 red bars in a row. That's peculiar. What else? We've got qubits, QBTS, big bearish engulfing pattern today, down over 12%. Another one, QUBT, quantum computing, 4 red bars in a row. And this was interesting too from a charting perspective, because we did have a nice bullish breakout right here, but you can see it failed immediately, and it gave it another go, breakout, and then flop, and then breakout again, and then flop. It ain't working. It's like they're trying to light a fire, and it's just wet. So that is a completely failed attempt at completing that, versus say here, where it didn't even look back. It shot. And one last one of these, RGTI Rigetti, another bearish engulfing pattern on that, and slipped away from last week's peak. Just to keep it not all bearish stuff, I did want to mention that I do continue to like Oscar Health, OSCR, and it's got a really well-formed, quite lengthy bullish setup here, this rounded bottom, which it was preceded by this one right here, this inverted head and shoulders, which had good results. So that is something I think is nicely situated for blast off. By the way, one other specific bearish idea that I did, the XHB home builders. What I like about this is we've got a cute little head and shoulders here and a gap right there. So I've shorted this today with a stop just above the low of this bar here, just where that price gap is. So something to consider. Oh, and one other one. Got another short idea here for those who might be interested. Axon, AXON. This was a beautiful setup here. I was sort of regretting not being in it when I saw this happen last week, but I've entered today a small short position on this, even though we're not quite at the neckline yet, but I can't help myself. But there's the neckline right like so, and so that would be the stop loss on that one. But I think this is a very interesting setup on Axon, and they report November 4, I think. So you know what? It's the bottom of the hour. I think I'll wrap it up right there. So thanks for coming by, and I'll see you here tomorrow when earnings season really gets going. So see you then. Bye-bye.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy. What's that?
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
If you missed the live show, here's our cherry on top weekly recap.
You became Chicago's most eligible bachelor. What year was that? That was the debate we were having earlier while you weren't on the show to defend yourself.
1988.
88? So Vanetta was right. Late 80s, early 90s.
You mean when I was on the Oprah show?
Yeah.
Yeah. Well, 88. I had flowing locks like Tom.
Oprah just made it.
Oh, here it comes.
I mean,
she felt bad. She felt badly for him. You know, you couldn't get a date.
You get a car, you get a car, you get a Scott Sheridan, you get a Scott Sheridan.
I want the car.
That's right.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jamal, my friend, we are back for the closing bell, and as has been the case for many of the past days here, we've got E-mini S&P 500 futures up 74 points. We're about 25 handles off of the all-time highs here. Cancel crash. The 1 week bear market has concluded. You've got the NASDAQ up 333, the Dow up 550, and the Russell up 46. The Russell has been the most volatile to both directions here over the last week or so, but everything up pretty significantly today. Oil has been just a dog, /CL 57 on the dot here, down 14 cents. It is off the lows. It got below 56 earlier in the session. Volatility futures at the bottom of the day, 1920 here. You got the VIX at 1844, an absolute massacring of volatility here today. Bonds up 12 ticks. We're at the high of the session. Gold continues to go absolutely banana land to the upside, up $170. Silver up $1.56, both up 3-4% here. Huge move in the metals. You've got Bitcoin up 4,300 on the futures, the spot up 840. That's from the open of the session, but it has been strong over the weekend. It's been a buy everything, risk on type day here in the market. My Taiwanese sources telling me, and I quote, I will give you my quote from my Taiwanese source, no big volume numbers anywhere and less than 1 million SPUs. That's all they said.
Yeah, I mean, you're kind of seeing it. First of all, peace is restored. I mean, peace has been restored today with markets.
Peace in the market. Is this how we measure the world?
Nah, I just laugh. You know what? My I gotta say, my oldest kid, man, he cracked me up one time. He came home from college. And he like saw, like, we had just gone shopping. He saw the food. He was like, "Oh, peace is restored." And I try to use it in those scenarios quite often. But yeah, you're right. I mean, small bear market, right? On Friday, we bounce right back. Everything bounces back. I'm starting to really just take note of, and I looked at this correlation recently. It really didn't show to be there. But hasn't there been a little bit of a correlation between gold and the market? Like when gold is up, market is up. When gold is down, market's down. Like recently, just real recent. And
you could put bonds in there too. Bonds up,
yeah.
Gold up,
yeah.
Silver up, Bitcoin up,
yeah.
They're all up.
Except, like you said, oil. Oil's been down for I think it's the 4th week in a row. At least as of right now, this would be the 4th week in a row if we stopped here today. And I'm not surprised. We highlighted something on OTCL last week. I mentioned this, where Thomas talked about how the different oil expirations are. All of them are in contango. There's really no demand, and there's no Middle Eastern strife right now.
Yeah.
Although I should say that something did happen over the weekend. I don't follow that as much, but usually that's when oil prices are higher. Right now, there's just no pop to it.
And it's obviously in a Trump basket of lower oil prices, so that's another kind of knock against oil. I am position limit on long oil. So don't try and convince me to put any more on, because I'm not doing it. I'm there.
I'm waiting until 55, dude. I hope you win. I said the same thing to Mikey.
Thank you.
I hope he wins. I hope you win, but if it gets to 55, I'll get more interested in the idea of getting long.
Yeah. I think the other story of the day was just the across the board vol crush that we have seen. Pretty much anything that you put on last week, whether it be just puts or if you did strangles, straddles, iron condors, a lot of those came in pretty significantly. I mean, I spent the day, pretty much the entire day, closing out of positions. I put on a couple new ones, kind of playing into the upside skew that we've seen build in some of these tech names. But I had a strangle on an AMD that I put on Friday. It came in $1. Just over the weekend, on just on the bid and volatility we had into the close on Friday, you get all that coming out today. I had that AMD strangle.
So you close that?
Yeah. So
it's funny you say that, because I'm looking at my MU strangle, same deal. I put that on Friday. It came in $1. I wouldn't be surprised if the same. I don't have an Oracle strangle anymore. I got tired of it. It was moving around too much.
I closed that one today too.
But I bet it came in today too, huh? So it looks like tech balls, these like tech names, particularly the chips. Seems like balls came into those.
Well, you got a little bit more of the bounce too. Yeah, so you probably leaned a little bit long delta because you had the big move lower, and if you had it on prior, so you had a little bit of long delta. But yeah, volatility has come in significantly there. I had an Amazon strangle. I had a SPY strangle. I had a Robinhood position that came in significantly. I mean, UNH, we sold puts in UNH on Friday at the 320 strike. I sold it at $5 and change, I believe. Let me see so I sold that at 581. We opened today at we opened about $6 or $7 higher, which isn't a huge move. UNH is up. It's basically right here today.
Yeah.
And I have it up here on just my the market snapshots tab. You know, stock's up $6 or $7, and that spread moved $160. You know, it's 30% just on that $6 or $7. You don't see these moves that frequently. You know, you don't see something with 30 some odd days left until expiration move 30% over the weekend.
No, this is a really good point, actually. And I just closed my Micron Strangle, came in for $1. I think it behooves us to look, this is not the environment where you're going to get 30 IVR and then it's going to come down to 20 IVR. I don't think that that's going to happen.
In 48
Especially
hours.
if you're trading these names that we just talked about. You need to take some profits quickly, and when they happen, matter of fact, this BE Strangle, this came in, bro. I'm closing this too.
A lot of those stocks. So, wow, it's actually down now. It was up like $4 or $5. But a lot of these stocks, if you've been trading at them with any sort of short premium, INQ is another one, MP, that whole quantum basket, even OKLO, OKLO, down $3 and change here, but volatility has come in pretty significantly there. A lot of those, if you've been playing strangles or even leaning a little bit short delta with your short premium positions, which is basically the only way you could be at this point, given the stock has like quadrupled in about a month, those have come in pretty significantly as well. Good point.
Yeah, I think it's nice to be able, I mean, like I said, the typical way where we talk about things being 30 IVR, they come down to 20. You're able to close it at 50%. I just don't know if that's this market. And I think there's nothing wrong with taking, 15, 20% gains and just taking the money and run right now. And maybe the way that this market has been operating, you just might get the opportunity to put it on again. Who knows?
We've seen that happen all last week. I mean, like last week was when we put on all these strangles because volatility popped. You had a little bit of a downside move. Now it's rinse and repeat. You get volatility getting smashed and you take that position off. I will say there are a couple of earnings. I don't know if they're of any interest to you. They're kind of fringe ones. I mean, after the close today, we have Zion Bank, which is one of the ones that just got whacked. I don't think you want to be in any of these, especially with the opportunities abound in the market here.
Exactly.
Tomorrow morning, you have KO, which is another one, kind of super low volatility there. Not a ton. You got to kind of be directional. GE, LMT, you got RTX, a couple of the defense sector names, NOC, which is Northrop Grumman. GM is in there. You've got Philip Morris is in the morning as well tomorrow. I did a little long trade there just to, get along the Zin movement here. So I did a little diagonal spread up long December, short the October for a $5 or $6.58 debit. Small long trade there, but do any of those speak to you in any way?
No. Like you said, I mean, there's so many other opportunities in
Netflix,
the market right
Tesla.
now. Netflix, of course, yes. That one does. I got a calendar call in there. I actually just adjusted some stuff in there today. I got 2 calendar calls. I got the I got the 1300 and 1350. So I'm looking for a big move to the upside.
We playing for that split?
That would be even better.
Are we going to get it?
I don't know. I don't know. Who knows?
Seems like every earnings.
It seems to do just fine without a split.
That is true.
Who knows?
That is.
So yeah, I'm interested in that one, but some of those other ones, not really as much because, like you said, I'm trying to sort of take these quick gains that I get, or things that just don't work out well. There was another strangle I had closed for a scratch today. I just feel like we're going to get continual opportunities in this market. So I'm trying to take some quick gain. And there's so many other better things to trade right now than many of those names that have earnings. If I'm going to trade the names that have earnings, I will say 3M does kind of interest me, oddly to say, because like IBM, it starts to, again, I like to play earnings for moves. This thing has actually moved more recently in some of its earnings. Same thing with IBM. So those are a little bit fascinating to me, but I'm gonna save the capital, bro, and just trade regular market stuff.
I hear you.
Interesting.
Hopefully, vol comes back after this crush. If we get that two-way action and volatility, you get the volatility. Contraction, you get the pop and volatility. Traction, pop and volatility. Those are markets we like.
I have a KRE Zebra. I got that last week, Thursday or Friday. We've gotten the bounce. I wonder if I should close this.
You played to the upside?
Yeah. After all the drop, I got long that. It's worked out. I wonder if I should close it because Zion's going to come out with earnings and say, yeah, we stand by what we said. This is not a good environment. That was funny last week that they said that. And the other bank CEOs, like JP Morgan also was saying like, well, just be cautious in this environment. So when you got bank people saying it, you wonder. But the market doesn't seem to care about that shit at all.
Yeah, no.
At all.
One little PSA, we still have spots left open for Charlotte. If you want to come see the boys, Tom and Tony, they will be in Charlotte on Friday. That's this week. Show starts at 9 a.m. You can watch Tom sling him. I will say I've heard he's a little rusty. That's all I've heard. Since the last one, I just
a little out of practice.
Yeah, he's a little out of practice. He's not as quick with it. So just be prepared. This is NFA, not financial advice. I certainly cannot guarantee you winning trades. I mean, if you've watched any part of his show, you will know that. But it will be fun. Go see the gang there in Charlotte. A couple more coming up as well. We got the whiteboard tour.
City, QC, Charlotte.
It's a fun one. New spot.
Yeah, it is. I went to high school there. I don't know if I ever tell you that. I graduated.
Really?
Yeah, I graduated high school in Charlotte. So I was there at a time when when we first started.
Before the bachelor parties got there.
That's a big thing?
I think Charlotte is like the big bachelorette. I should say bachelorette.
Because it's like cheap.
It's like Nashville.
Yeah, but not
it's on its way to be like the next Nashville.
Yeah.
From what I understand.
So when I was growing up there, man, like the downtown was really boring. I mean, seriously, like it was just quiet, sleepy city.
Mm-hmm.
And it had all of the makings of being like in Atlanta, but it just wasn't. And then, of course, the Charlotte Hornets came there. That was one big thing, and that was huge, dude. Like, I mean, Muggsy Bogues and all that crew, like they used to sell out that whole arena all the time. They were like leading attendance in the league for like the longest time. Then the Panthers came, and when an NFL team comes, I've seen how that changes a town.
Yeah.
After that, I'd go visit my mom. There's a new big building. There's a new restaurant. There's a new comedy club. There's a new place to go out. Year after, new building, another new big building, new restaurant, new comedy club. It was crazy, like how that changes a city. It's crazy.
So are you a Panthers fan by default?
No.
I kind of like the Panthers. It looked better.
I'm not. No, I grew up in Miami originally, right? You knew that. I grew up in Miami. That's really home, and so I grew up as a Dolphins fan more than anything.
Yeah,
but I'm a Bears fan now. Again, they changed their ownership. It's not the same ownership from when I was growing up. Very different. Very. different.
Who is it? Tepper now?
No, it's Tepper owns Panthers.
Yeah.
Miami. It's the Michigan guy, Ross, right? Ross.
Oh yeah. He's on Shark Tank occasionally.
Yeah, he's got like 3 buildings at Michigan. I mean, that's real money. Real money.
E-mini's chopping around here up 76. Looks like we're just going to get to about 1 million cards traded here for the day. A very low volume day. We actually looked at kind of volume and implied volatility this morning on our market measure. If you're looking for just more interesting information on volume and implied volatility, we have seen that volume typically picks up when volatility increases. When you get these vol crushes, everybody kind of takes their ball and goes home. That's kind of what it seems like here. It was just a buy the dip and then be done for the day or done for the week. Gold up at highs, up 175. I mean, this is nuts. Silver. Do you have the FOMO?
For gold and silver?
Yeah.
No, I do not. I think it's extended. I do.
In general, in all trading, do you still get the FOMO? I feel like my FOMO has gone away a little bit, but I still, when I see stuff moving, I'm like, God, how did I not have some of that?
I get excited about possibilities. So that news today coming out about CLF, did you see that? About how they're going to try to repurpose a couple of mines into rare earth mines?
Okay. That's opportunity. That's
what I get.
Are they going to put blockchain at the end of the name too? Is it going to be Cleveland Cliffs Inc. blockchain?
I don't know.
That would be a good one.
But seeing that stock at $16 and hearing that news, I'm like, why isn't this going to trade $32? So that's what I get. When I see gold where it is right now, I don't want to get long that. At the very least, I either want to be out, or sometimes in certain cases get short, which I did.
Yeah.
Like, no, I don't get excited. I don't get FOMO about gold. I get FOMO about something like a CLF saying we're gonna go into rare earth, and I'm like, well, shit, is this gonna be like MP? Maybe it is, and so that's what I get excited.
Oh yeah, that could be a takeover. What we talked about, Alcoa too, is another name on the list of.
Yeah, look at that stock.
Yeah.
Whoa.
The market's starting to sniff out some of these next spots
CX.
for Trump's acquisition corp.
Yeah.
AKA the U.S. government.
Yeah. 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 You can see it. I mean, like all of those type of names, Alcoa, FCX, CLF, these are names that were really trading heavy during kind of the metals mania in the early 10s and late 2000s. And yeah, that seems to be coming back now because of, like you said, the whole Trump situation.
Any of the currencies sticking out to you? I've pulled up the TastyFX watch list here. I got a number of positions that have kind of gone against me. A lot of long dollar positions that have not yet worked. I'm a little late to the party here. I got a short euro versus Japanese yen here. Are you dabbling in any of these?
I have been actually. In this portfolio, I generally believe in long dollar. But in this thing, and because these are so small, I've done the opposite. So I've actually done short dollar in these, and most of them have been okay. I'm long the euro itself. I am long the pound dollar, and I am short the dollar yen and short dollar CAD.
Okay.
Yeah.
Funny because I was talking to some of the FX boys on Friday, and they were like, man, you guys trade a lot of these products, but we laugh because you put them on so small that you like don't really even care about it. Because like most people trade these FX products on like a 10-minute, 1 hour, 1 day time frame, and we just put them on and we're like, oh yeah, that looks fun. Like that's at a price extreme. I'll put that on small enough to where I can hold it for the next 30 days until I go from down $10 to up $50, and then I'll take it off. And they're like, nobody trades like you guys. They're like, everybody they're all in full margin one way or the other, and they're taking this position off in an hour, and we're sitting here, like, yeah, I got a couple things on, and if they go green, I'll take them off.
I mean, because for us, it's not primary, right? Like we got so many other things we're looking at. You're right. I forget that I have this sometimes.
Yeah. Well, but they're so
nice.
If you stay small. And I have realized as I've started dabbling a little more, I get a little greedy sometimes. And I put, like instead of doing 5 micro lots, I'm going to do 10 micro lots.
Yeah. I know Mikey doing the same thing. He's got like 10 micro lots on a couple of things.
Well, we started with 2. We started 2 micro lots.
That's my max. That's my biggest position is pound dollar, 2 micro lots.
Yeah, and that's perfect. You don't hold that until you get gray hair like the rest of us. But
wait, is a micro lot 0.1 or 0.01?
0.01.
Okay, yeah. Then 2 micro lots is my biggest position.
Yeah,
pound dollar.
Yeah. So one lot is 1.
Oh my God, what's gonna happen?
I know. Well, when you get to 10 micro lots, 15 micro lots, 20 micro lots, then you start seeing $200-$300 moves, and you're like, oh, these are getting a little spicy here.
See, I don't have that strong of opinion in
neither do
those
I.
currencies right now. And I mean, I do have somewhat of a strong opinion in the dollar per se, but I don't have a strong opinion in the currencies to sort of add that much of a position. And honestly, right now, I'm just so absorbed with the actual market, gold, dollar stocks that.
I agree. I feel like there's more juice to squeeze in actual equities than currencies. But the currencies are fun to have.
Fun, yeah.
And I trade them along with.
Wait, how many different ones do you have on?
I have my TCFX positions. So I'm in the New Zealand dollar. So I'm long the New Zealand dollar against the US dollar. So that's one of my other sides of the coin here as a short US dollar position. I'm short the euro against the Japanese yen because that had just a massive move, and it's pseudo long dollar because you're short against the euro, which is the biggest exposure against dollar. I'm short the USD CAD. That one was a Glenn trade. He owes me a couple dollars, but I've got Aussie dollar against the Swiss franc, and I've got US dollar versus Swiss franc. And I've trimmed back the exposure here, so we're not as full bore as we were before. The US dollar has had a nice little bounce over like the last couple weeks, so it's helped a little bit there.
Yeah.
But that US dollar Swiss franc was the one that Ilya was talking about yesterday when we were on for first call. It's bottom barrel. I mean, being long there's not many points where we've been below where we're currently trading at 79 and change here.
You watching any playoff baseball?
No, still can't get into baseball even with the pitch clock, which I appreciate being live at the game, but no. What's the highlight?
It's been fun, man. Well, there's gonna be a game 7 now with Seattle and Toronto in Seattle.
All right,
that's huge. I don't think the Seattle Mariners have ever been to the World Series, and whoever lines up next. Well, I'll tell you what I missed actually on Friday when we were at the party. I don't know if you heard about this. Ohtani had 10 strikeouts, 3 home runs, one game,
incredible,
single game.
Can you parlay that?
That would have been a hell of a parlay. That's actually, I used to do that quite a bit with him, parlay, like the amount of Ks he has in a home run, like when he pitches. But dude, like that was probably the single greatest sports performance, like maybe ever. And so me and some friends were debating it. I don't know over time. I'd love to know baseball people, put in the chat.
We got our Canada folks throwing in their love for the Blue Jays.
The Blue Jays?
Yeah, so we got big contingent of those peeps out there.
Okay, I'm sure.
As we go into the close here, E-minis only up 73. This might be the biggest move we've seen in a couple hours here. Does
I can take my 0 DTE.
There you go.
Short call spread. I did 67.45, 67.50. I could just. No, I'm not going to leave it. I'm going to close this thing.
Yeah, you buy back the short for a nickel, 67.45.
Yeah,
that's a good little trade. Have you been doing a lot of those?
So there's actually it's I snafu'd it today, but we've two things.
Mikey gets you in the 1 day one.
Yes, we did do that one. We did the 67.10. 67.15, 67.20. Call spread, we were short along with the 65.75, 65.80 put spread. That one did not work out.
Okay.
So it's fine. But I've gotten into that. I actually didn't do it today. I should have done it. We didn't do it today on the show. He probably did it. I didn't talk about it. But then I also have been doing a couple of things with shorts recently, and I did one last week. I did one today, but I totally messed it up. But that was actually the trade. The 67.45, 67.50, I sold it for $1.40.
Beautiful.
So, yeah, worked out.
Gotta love it when a plan comes together. Gold just under 4,400. Did we get it here? No, 43.98. What you think we get a down day this week in gold? Do you think it keeps going? I've been saying
maybe Friday.
The media is giving us the gold run around. It's now like the focus.
Have you seen it?
Financial media.
See, I haven't seen it yet. So
you've seen stuff? Middle of last week it started. We're kind of it feels like at the tipping point.
That's exactly where I want to hear. That's what I feel like.
The tweets, all the guests that come on, they're like, yeah, we've had 10% allocated to gold. Now we're trimming back a little bit. Like where you get like the humble brag. I'm trimming here, but still long. Like that's the kind of thing that is starting to come through. So
this is what I want to hear from my MGC shorts.
Yes,
what it needs to hear.
We might be there.
We just went to all-time highs, though, by the way. 43.96, I think, is now a new all-time high in the gold contract.
Incredible. E-minis up 71. You got the NASDAQ up 326. Some of the bigger movers of the day here. Meta was up 15 and change. It really hasn't participated in much of the upside over the last month or so. Netflix, as we mentioned, has earnings middle of this week. It's up $40 and change today. You had Tesla having a strong session here. It too has kind of performed lesser to both directions here. NVIDIA is one that has been kind of perplexing. It's been kind of stuck in the mud relative to the rest of the names? You think it's just kind of a fatigue and a rotation into the other names, your AMDs, Microns, ASML, even just SMH going nuts, that NVIDIA is no longer the belle of the ball?
That's exactly what it is. Honestly, I was a little surprised to see Apple doing what it did today. Obviously came out with some news, whatever, but I mean, they've all been pretty quiet, the Mag 7 for the most part. I will say their charts look like they're on launch pads, and that's what happened with Apple, and
Apple
took
went
off.
Nuts
But
today.
most of them have been kind of quiet.
As we get into the close there, that's our Bell E-minis up 70. You got the NASDAQ up 312, the Dow up 500, and the Russell up 46. Oil down 15 cents. We're at 57 a barrel. You got volatility futures at 19, 18. You got VIX closing at the lows, or just about the lows, down $2.40, a little over 11% here. Bonds up 12 ticks. Gold at highs up 180. You got silver up $1.64, and Bitcoin staying here right at 111 and change here. Been a wild day.
I mean, yeah, I think it does. I don't see why it doesn't.
I think this vol crush tells you everything you need to know. Nobody's scared of the downside. So
yeah.
Very good, my friend. Well, we're going to take a quick little 90-second break, and he's going to come back with the overtime boys, Dylan and Ilya, waiting in the wings. So we're going to take a quick little 90-second break. You're listening to Tasty Live.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time, and I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the four little things as a
four things.
One big...
The four little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
It'd be nice?
The best part.
You need to be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because the reason we need to get there early is because we got to start the tailgating on the balcony early because we're going on the field, most likely before the game.
You're going on the field, most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
So annoying.
Oof,
you guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live after
We're already
this.
out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com. tastylive.com if you would like the chance to share your trading journey and inspire others.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Regulation time may have expired, but the conversation is just getting started. This is over.
I got 'em all shook up for me. I got 'em all shook
And we are back. Apologies for the delay. We had to figure out some technical issues here, but fear not. Overtime will happen. It is upon us here. I'm Ilias Pivac in San Francisco. That's Dylan Radigan in Milan, Jamal Chandler in Chicago. Gentlemen, we were just talking in the green room about the inevitable collapse of gold. When is this going to happen now?
Once it makes it up to 8,000 at this point. I mean, this is like the greatest demonstration of the liabilities of thinking since AI, basically. I mean, look at I mean, I know it looks to get the S&P up here, but I mean, the fool who doesn't think buys gold and makes money. The idiot who does think buys puts and loses money. With all due respect, Jamal.
I mean, I haven't bought puts yet, but I'm mighty close. I'm mighty close to being in this boat.
I mean, come on. This is an irrational. I mean, if this isn't an illustration of a price extreme, this is either a price extreme. What's it up another 4% today?
It just
basically,
about. Yeah, 3.93.
I mean, I don't know. I love your multipolarity explanation, where basically it's sort of neutral currency territory, as nobody knows where the dollar, the China, the bit, whatever it's going to be. So the multipolarity thing makes sense, but I don't know that it makes sense in this level of extremity.
Yeah.
The debasement thing has some validity to it, but it's not like the US dollar is continuing to collapse.
It's not like that at all, as a matter of fact. For a month now.
Yeah, maybe
the trend is up. Higher highs, higher lows.
So you're left with a real ripping price extreme on gold, which is gosh darn tempting to buy a put, sell a call spread, do something.
Moreover, the bonds are up. So whatever debasement is going on, I don't know what it is that we're debasing, but it's not dollar-based assets because the bonds keep going up, the dollar keeps going up. I don't know. I don't know.
The profitable thing to do, because we've been is to buy gold.
Yes.
Right? I don't know what to tell you. Even to
add insult to injury here.
Sorry.
I'm sorry. I interrupted. I just thought immediately looking at this, like, okay, so we're going through these things, right? Debasement, trade. You mentioned the
multipolarity,
the multipolarity idea.
Like that.
None of that works today, because if you look at it, ostensibly,
and none of it justifies the extremity. Sorry to interrupt.
No, and you look at the price action today, and you go, right. So why did stocks go up today? Why is it a risk-on day? And immediately you start to see these headlines. Oh, Trump's going to meet Xi. They're talking down their trade war thing. It's all going to be gravy. Well, if the multipolarity argument is true, then this is a step back from the most extreme version of multipolarity. Shouldn't gold weaken? Gold goes, yeah, I don't care about your cute explanation there. I'm just going to go higher.
Which kind of leaves it with momentum, and just sort of momentum as your final justification.
So this is a 4-hour chart. Is each one of those bars like 4 hours?
Yes.
So gold was down a total of 16 hours at one point in time, and that's about it. Like more recently, is that how I'm reading?
Much. That was the move. Yeah,
that's right.
See, this is exactly what I'm talking about. First of all, I just love listening to you guys talk about what's going on with gold right now. I think it's actually one of the things that's the epicenter of this market. I love that Dylan mentioned AI, because nobody is talking about gold in the way that they were talking about. If almost cursed. If this were NVIDIA, if this chart were NVIDIA 2 years ago, everybody would be like, is it so high? It's so crazy. It's overvalued. I don't really hear anybody saying that about gold. And
no, everybody's just looking at it like,
I'm saying it right now, Jamal. This is fruitcake madness.
But you know what I mean? Like, the masses aren't saying it about gold. You know what I mean? Like, why isn't there a 60 Minutes on gold prices yet? I was actually hoping there was one last night.
Man, if we got that would be the top for sure.
But
if 60 Minutes did a
I'm not
special,
willing to buy. I honestly am not willing to buy puts.
it's a little expensive.
I'm not willing to sell a call spread.
It's a little dangerous.
I like danger.
I mean,
I like
how
danger.
how do you look at this and you go, okay, you know what? Vol is going to contract here.
I mean, it's not even that
It's a tough call.
But I just, how can you not look at this and see a price extreme with a massive down day built into this somewhere in the next few weeks? Massive.
Yes,
Massive.
exactly. Exactly.
Massive.
That's why in the personal account I have GLD puts. And look, if I lose the money on it, I lose the money on it. Again, that's the personal account. But I just think this is one of the most interesting things going on right now in the entire market. And I don't know what the smartest thing is to do. Actually, is what you guys are doing, honestly. And look, it's moving a lot in the aftermarket too. I'm looking at GLD here. It closed at around 402. Now it's down $2, whatever. So that just tells you everything you need to know about the pullback at some point and when things are happening. Although they might buy this pullback up, we might be up again tomorrow. That's fine too, because that just leads more to my thesis that this is what overbought looks like, people.
Yeah,
this is what overbought.
I think you're right.
This is what price extreme looks like. This is what overbought looks like.
If you look at this on an 8-hour,
I haven't found one person, including myself, that explains this move. Like earlier, 6 months ago, a year ago, but this recent move, I mean, arguably over these last, I don't know, since October began, really. It's kind of crazy. And I think evidence of that is the last 2 Fridays. You saw the big sell-off on those last 2 Fridays, and then Monday they got bought up again. And
where nobody wants to hold it over the weekend. And maybe that is sort of indicative of the multipolarity thing, where you go, you know what? Who knows what Washington is going to say and what Beijing is going to say, and who knows how they end up squaring into the open on Sunday. Let's not have this exposure. Let's back up. Let's let them say what they're going to say. And this weekend, they didn't say anything that was particularly combative, which makes this rally interesting. But I suppose we had a big sell-off on Friday, so we've just reset to neutral. Maybe that's what this is. Maybe we're looking here for something more complicated than what there actually is. Maybe the market just said, you know what? There was weekend risk. Nothing happened. Reset weekend risk. Let's go again.
Or gold is like the birds flying up into the trees ahead of the tsunami. And actually, what we should be doing is massively getting short the dollar and short stocks, because gold knows something that no one else knows. And this is foreshadowing a financial abomination.
That could be. That could be.
If I, with my gold puts, if I lose money in that situation and it's a complete washout of everything, that'll be a good story too. I mean,
hey,
the financial system is broken.
It'll be.
That'd be a great story too. I can't help but look up these headlines on gold right now.
Mine, Sorry, go ahead, Jamal.
I'm looking at these headlines on gold. CBS News, I lie to you not. Should you invest in gold before the October Fed meeting?
Oh my God. How is this?
Financial Times, why gold and stocks are partying together. Yahoo Finance, gold historic rally comes with a bonus for emerging markets. What?
How is this not a sentiment?
Again, the smartest probably idea is what you two both have, is not to have a trade on gold right now. It's probably the smartest thing to do. Neither long nor short, just be out of it. And I was out of it for a long time, but about a week ago, I'm like, this is.
Got sucked in.
I did. I'm just like, this is the best trade on the board.
I have to totally agree with you. I'm half talking myself into it during this conversation right now. I'm feeling more like I want to do something.
Just one put, Dylan. Just one. That's all you need.
That's how it starts, Jamal. A stack of them.
I just think it's one of the most interesting trades on the board. I mean, even if it keeps going up, honestly, I think it's still just as interesting. Even if I don't win on my trade, this is one of the most interesting things on the board right now.
I mean, this is one of the more interesting things, because this is an asset class. I mean, gold is bigger than NVIDIA. This is like functionally of some version of a currency move. I mean, imagine if the dollar moved like this, up 50%.
Yeah. I mean, the dollar moved down sort of adjacent to this in the first 6 months of
but not by
the
this
year,
order of
but
magnitude.
yeah, but that move is over. Ostensibly.
And the move was 20%, not 50% or whatever this move is.
Yeah. Yeah.
I mean, yeah, that's the thing, right? Like gold is part currency, part commodity, right? There's not too many things out there that exist like that. And just again, when you look at the volatility in gold more recently, it's the highest volatility across any asset class, bar none right now. At least, I shouldn't say that. At least like ranking wise, it is, right? Just the sheer nature of how far away the spread is for implied vol in gold versus historical vol in gold. And so I just think it's one of the most interesting things. It's definitely a sign of our environment, and it's definitely something we're going to be telling stories about in a couple of years from now.
Yeah. I mean, whatever this is, that it had this reset today makes me want to get on the short side. I'm going to be watching it here really closely overnight. This 8-hour chart seems to tell me that there's some level of, oh no, we've lost momentum right at the spot where you're supposed to, kind of a thing. And so I'm looking at this now and going, okay, well, that's the last 8-hour session. This is basically the U.S. cash equity day right here. This is mostly overnight. If you zoom in on this on the intraday, you look at where this is overnight. You don't really get into U.S. trading hours until here. And by this point, you're already stuck. So whatever this was Asia and Europe.
So that's what I was going to say. I mean, is that leading into that theory that Asia's buying gold like crazy?
Yeah, maybe, or at least that Europe is preparing for something. I mean, that those markets are jittery in a way that U.S. markets are not, because I mean, we can see here for the most part, U.S. markets did not pick this up.
So what's if I want to get short, Ilya, put spread? So I mitigate the volatility?
I think the only sort of logical way to go about this seems like it has to be some sort of, I would think, longer duration. Let's call it maybe even longer than 35. Let's maybe even go to 64 days. And I would say GLD is the better way of doing it, so you can do it smaller, so you don't have to use the futures, because obviously you're fighting a market that thinks you're crazy for even attempting to short this thing. So GLD and a put vertical, let's say from current levels up to the next big pocket of liquidity is what, 395? I mean, you can do okay.
Can I show you something?
Sure, of course.
Go to November. I just noticed this. We all know that gold typically is inverted skew, right? Usually skewed to the upside versus downside. Go to November, 30 days out. This is essentially 30 days out. Look at the 25 delta put price. Look at the 25 delta call price.
Yeah.
So typically, the 25 delta call should be trading higher. It's basically the same. If you look at the 380 put.
That's so this is the interesting thing, right? Look at if you want an easy way to look at this, look at the max profit, max loss. Even if you go out a little bit, it's basically 1 to 1.
Yeah,
that's weird.
Yeah.
I mean, you can go out $10. You're basically 1 to 1. That's weird.
And yeah, when you see that so the 429 call and the 380 put are basically the same price, that means the puts have caught up to the bid and the calls, which means this damn thing should fall at some point soon. I feel. Maybe I'm wrong. But typically that upside call should be more than the downside put in gold, and it's not right now.
You should be able to get let's say, and maybe this is, I mean, this might be the elevated. Vol, obviously, IV rank is kind of high here, but you should be able to get at least 2-to-1 risk reward when you go 39 or even 60 days out. You should be able to get much better risk reward, and you can't. So that tells me, yeah, I mean, this is weird.
The downside
I mean, if you go out to the 60 day, as we were just saying, you go to the current market and you go $10 out, I mean, you're barely apart at all. And you go $5 out, $7 out, you're exactly 1-to-1. I mean, that's odd.
It's the most interesting thing going on in our markets right now, I think. More so than any tariff talk, more so than, I don't know, insert whatever else. I can't even remember what else is important anymore because this seems to be.
I mean, this is more interesting than the supernova right now. This is the supernova.
So the meeting between Trump and Xi is coming up on the 29th. That's a week from this Wednesday. Or at least the APEC conference is set off for the end of this month. The meeting, I think, starts on the 29th and runs into the weekend. The deadline for the 100% tariff, apparently, maybe, who knows, is the 1st, which is that Saturday. So the question is, will she give Trump rare earths access? Number one. Number two, does Trump care? He just signed a deal for rare earths access with Australia today. And so, and let's not forget, China's main sort of killer app in the rare earth space isn't the having of rare earths. The having of rare earths isn't that big of a deal. Rare earths aren't rare. It's the processing capacity, the smelting, the refining, all of what takes the raw inputs and makes them into the useful things for electronics and etc. That's what China has such a stranglehold on. A lot of the inputs come from Australia to begin with. Australia and China have a very close relationship on digging up Western Australia and shipping the things that come out to various ports along China's coast. That's really the bedrock of Australia's economy. But it looks like there's a pivot here. If Australia is going to start sending that stuff to the U.S. already refined, that seems to be the sort of crux of this agreement today. Anthony Albanese, the Australian premier, was in Washington, and they signed this thing. Everybody is ponying up a big chunk of money to build refining capacity, both the U.S. and Australia, in Australia, to then do the processing there, ship finished things directly to the U.S. Now, it'd probably take about a year to get online. But Trump is not in a corner here. He's got rare earth supplies lined up. So she doesn't want to give him this, and Trump might not want to bend.
But take me back to gold then. I mean, that everything I'm hearing you say says multipolarity, that neither side has much leverage, and that they both have the liberty to go deeper into the multipolar world.
Yes. And that's the scary thing. If
gold is really that, now you're backing your way into a gold explanation, which is that there is not, that the barrier to multipolarity does not exist. I mean, it exists maybe at a greater threshold in terms of trade dependence and all that. But at this threshold, the multipolarity barrier is relatively limited. And so both sides can go deeper into their own hole, as it were, and that all goes to gold positivity.
So this is the most interesting question of all. And I think, yes, that's exactly right. So the question then becomes, is this in fact about multipolarity or not? And if it is, will both of them essentially say, look, neither one of us has a strong hand here, but both of us understand that this relationship is vital because China doesn't have an economy without a consumer market to sell to, and the US needs access. And so surely, if both sides have a weak hand, ostensibly Trump has a stronger hand now that he's got this Australia deal in the bag. They signed it. Now that he's got this in the bag, maybe he can get Beijing to calm down. Because before this deal, he didn't have anything. Before this deal, he would have had to do what he did last time, which is come back to China hat in hand and go, won't you please send us your rare earths? As of today, he actually has a bargaining chip. So maybe he'll actually get them to come down now.
Yeah, it is fascinating because, I mean, some of that is, I think, clearly a little bit baked into some of the gold move that we've seen and obviously some of the market too, right? I mean, that's part of the reason.
Look at this thing jumping after hours, to your point.
Yeah, I was going to tell you that. Yeah, GLD, you see that big spike? I don't know what that was about. I don't know if that was a real print or somebody just capitulated. I'm not sure what that was.
Yeah.
But just in GLD, though, it didn't show up in GC. So I don't know. Clearly that was a GLD thing. But, jeez, I mean.
November put spreads. Come on. I mean, who are we kidding? Now, we don't want to do a whole hour on gold here. I understand. But it's probably worth it. It's probably worth doing a whole hour on gold. I mean,
right?
It's incredible.
Let's take a look at what's going on here in stocks world, because if concerns about multipolarity are what apparently inspired this thing today, then let's explain what's going on here. So last week, after the big holy moly, we couldn't make it stick on either side. We just oscillated.
And we even got that Thursday rollover. I was all worried about that Thursday rollover like an idiot.
Didn't happen. Didn't do anything.
How many times do I have to be taught the same lesson is the only question.
So what's interesting here is we come back today, obviously. We storm higher, but we're still within the highs. So whatever this range is, basically holding here from, let's call it, these lows here, which, by the way, hilarity ensues. This is the Fed. This is the Fed low. So against this Fed low, we are in a range. We're back at the top of the range. We're not through the top of the range. It's the same thing on NASDAQ. Here, same range, Fed low, holding right here. Top of the range, not through the top of the range. Is this a mulligan to sell, or are we just masochists?
Fade market here?
Can both be true?
Yes.
Yeah, why limit ourselves?
Yes. Because, I mean, I look at this and I go, okay, do I get out of my shorts here? Because I'm basically short from around here. I'm short from against these highs. So, okay, and I'm not touching Russell here, thank God, because this regional bank kerfuffle is making things even weirder. We'll get to that in a second, I'm sure. But in the main indexes, S&P, NASDAQ, I'm basically short against these highs. And so I go, okay, well, it broke last week's range. Maybe I should get out. But at the same time, it's right nose up against its high. Would I go long here? No. The risk reward is terrible. You're right up against the high. Either it breaks the high and then the risk reward resets, or the better risk reward is a short. So why would I effectively buy by covering my shorts to do that here in the worst possible spot. So it's kind of a weird spot.
I mean, I'll be honest with you. It's hard for me to reconcile the idea of being short here because the wall of worry is not as big as it has. Well, it's getting close though. I shouldn't say that. It's actually getting close. I think part of it is the gold story, honestly. Not to bring that up again, but just to kind of say, like, I think it's that important to this market right now. I think the fact that gold and the market are both moving, market was up 1+% today and gold is up 4%. Like, that's not the way that we've seen markets work. And so I think something is kind of broken right now. So I guess I'm going to take that back. It is nice. It's probably a good idea to have some shorts right here. Will you have to take some pain is the real question, I guess, as you're asking right here. Because, yeah, truthfully, I mean, you're asking this question because like I know, you're looking at this and you're like, it's coming up against that former high. It could have a breakout from here, right? Like, I get it. I mean, that's exactly what it looks like.
Or a turn, something. But this is going to be an inflection point of some kind.
Yeah. And with the turn, I think you're going to need a macro situation, which I'm sure you are all too happy to hear. But
I mean, give me some kind of something on this macro front because it's been crickets.
Well, there is I think we are supposed to get CPI on Friday. I think is what I saw.
Theoretically,
right? I saw some like weird explanation about they got to. No,
I saw it on the calendar. I'm like,
you saw that too, right?
Yeah, I saw it on the calendar. I'm like, wait, how is this going to work?
Well, this one guy knows who sends out some news. He also had it in his letter, and he had like an explanation saying we're supposed to potentially get the CPI report. They have to sort of, I think, publish the report for some reason relating to Social Security, and if they're figuring out if they need to do an adjustment or something like that. I think is what I read. I'm not entirely, but you know what too? And I looked at the SPX options, and I thought I saw like there was a little bump for Friday, and there's no other data point other than that potentially coming out. It's not like it's expiration or anything else. So I think we actually might get it. And maybe that's the macro thing you need.
That would be interesting. So if we take a look at
maybe that's the macro thing we all need.
We need something. I mean, this market is begging for a catalyst. Looking at the Friday here, I mean, I suppose it's a little bit elevated here as relative to earlier in the week, and then it comes back down again. So you got a little something here.
Yeah, it says, bringing their hands over the next inflation report. Oh, wait,
What's interesting about this also is we're going to get the PMI numbers on Friday, and in the absence of U.S. government data, that's the only kind of meaningful other thing that you could use.
Yeah, no other major reports, including jobs and retail sales data, will be published until the shutdown ends. However, something will occur differently with the CPI data coming only 5 days before the Fed's meeting. So it's almost like they decided that they have to put that thing out. I'm not sure what happened.
Can we get some furloughed BLS workers?
Yeah.
Get this CPI number out.
Yeah, I think it's actually coming out this Friday. I think it is. So that could be fun. Listen, if that report comes out and says something that gold doesn't like, and it's another Friday where gold sells off, watch out, folks. Watch out.
Yeah, that could be something.
We just found something to be excited about for the week, didn't we?
I mean, how could
I think so.
not be hot, by the way?
I know, right? I don't know how.
So, whilst we're here, we might as well take a look at what the expectations for this thing are going to be, and see if we can pull this up right here. So,
like Dylan said, it's expected to be hot. You know that.
Boom.
Hot heat. CPI index bringing the heat.
Here we got the economic calendar. Here's the inflation numbers. Expectations are that core inflation will remain unchanged at 3.1%. Headline will come up to 3.1 from 2.9. 3.1 in context here. would be back to, let's say.
Listen, I'm gonna tell you right now, that report is gonna say what Trump wants it to say. Okay, it's gonna say exactly what he needs it to say, so that we can get rate cuts. That's what that thing is gonna say.
Well, so this is where things get interesting then, right? So that would be the highest since May of 2024 at 3.1 for the headline. For the core, which is the one that the Fed cares the most about, expectation is we stay at 3.1, so we stay basically in line with where we rebounded to, which was the reference point to February. What's interesting about this, to your point, from the rate cut side of this, here's the current likelihood of a rate cut in October. Shock of shocks, no one is surprised. 98% chance. If we compare how this has evolved over the recent days, not really much of an evolution. The only thing we really did here was Friday, we thought maybe they'll go 50 basis points, slight chance. We've walked that back, so just a 25 basis point cut. And then if we look at December here, we still have a slight possibility of a 50 basis point cut in December, but it's very, very low. So 96, a little bit more chance that we get a 25 basis point cut here. So, and this is like a week back, it was 95.5, and now it's 96.5-ish. So this hasn't really changed at all. So what's this CPI number going to do? Do we finally get something that addresses the disparity beyond this year? Because it looks like for this year, we're pretty locked in here and have been.
Yeah, for some time now we have been. I mean, you know, again, I really think, I mean, in my mind, it's almost like he said, look, if you need this number, we'll let you get back to work for just a little bit and do this number for us, but you got to make sure this number is done the right way. And so,
don't mess up my number. Now.
Don't mess up my number. You saw what happened to the BLS, the other BLS people. So I don't know. I mean, I don't. Dylan is exactly right. I don't see how it can not be hot.
Here's the main kind of disparity.
The only way to make it not be hot is because Trump told them make sure it's not hot.
Yeah,
yeah, that's the only. Yeah, right.
Yeah, I mean, so here's the main kind of disconnect here. We can see for this year we've got about another 40 basis points on the menu, so that's pretty much lined up with what we just saw. Right, so we're almost sure that we're going to get another 50 basis points. A 25 basis point cut this month, 25 basis point cut in December. Obviously, it's not perfect, so there's about a 10 basis point fuzz around those two meetings, but that's really nothing between friends. If we take a look at sort of the cumulative likelihood that we get both of those cuts, we're talking about 80%. So it's there. Those cuts are essentially a given. And when we dial it up for the dates, as we just saw. And we are back, trying to figure out what's going on in these financial markets as we continue to have macroeconomic data on the back burner amid a U.S. government shutdown, with the markets nevertheless swinging with gusto. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is take a look at what the price action in these markets has done over these recent days, and then try to figure out what is the likely path forward here in the days ahead as we try to figure out, first and foremost, what will be the catalyst du jour, because we increasingly are looking at a set of conditions here that is starting to challenge sort of perceptions of market relationships and challenge what might have been the sort of going narrative for 6 months from the sentiment extremes in early April through the beginning of this month. But at the same time, the way that the markets begin this week really leave one wondering which direction the evolution in these trends is going to go. So let's take a look at, first and foremost, how these markets performed last week. We can see here the stock market found its legs ultimately after quite the sell-off in the previous week. What's interesting about all this, of course, is it looks like a fairly modest rebound and a fairly modest sell-off, but that kind of obfuscates what actually occurred. And this is where things get especially interesting. Because if we consider what the chart here looks like, even just for the S&P 500 as a kind of stand-in, we can see here that there is a tremendous amount of violence on this chart. And it really stems from that violent performance that we saw in the Friday price action there, where ostensibly the main issue was a situation where we had the escalation of the U.S.-China, let's call it trade conflict, because whether it is a war at this point or it isn't is about as complicated of a question as one might think of. Because, of course, one of the main sort of issues here very quickly becomes, well, are we actually looking at a negotiation, or are we instead looking at some sort of a drifting further apart of the world's largest economies? And what does that mean? If we look at the perspective in gold, one might say, well, this is what devolution of the U.S.-China relationship looks like. Markets are seemingly sort of betting on a further coming apart of the world's biggest economies, and perhaps that's why we're seeing the response that we're seeing from gold. That's how you get this relentless march higher. You, once again, looking at the performance here for gold last week, you again get a potent push higher, 5.3% gain. At least this time it somewhat coincides with a pullback in yield, so at least a little bit more sensible here. The 2-year in 1.9%, the 10-year in 1.2%, and at least this time the dollar is a little bit softer, so at least the sort of ingredients for a gold rally make sense. They were much less sensible last week, where the dollar was rallying, but at least this time the yen is up a little bit, 0.8%. The euro is up a little bit, 0.5%. But looking at sort of what last week wrought ultimately, that's almost a bit of a misnomer. Because if we consider that rise in the euro and that rise in the yen, it is more a reflection of risk aversion, seemingly, than anything else, because the Aussie ended up lower against the dollar, so did the Canadian dollar, so did the Kiwi dollar. So these commodity currencies that are the most linked to stock performance, they ended up ultimately having a bad week. And risk off currencies like the euro, the yen, the Swiss franc, they did better. And so this is what sort of makes today's rally so interesting. You'll note here, we're basically back at the high that we set before this big sell-off. We're almost there. We're a little bit closer on the NASDAQ. And we ultimately haven't gone anywhere. What's particularly interesting about this whole endeavor is that when you look at the way that markets have performed since the beginning of the sell-off, here is that top before we really get going on a sell-off on that Friday. Here's last week's kind of meandering sideways. And of course, we heard that maybe the reason for the markets being soggy is this kerfuffle we had in the regional banks once again with the troubles that were had at Western Alliance and Zions. And that's tempting as an explanation. But what we see is this came and the Russell, the small cap index here, was actually outperforming until that story. We can see the Russell was then crushed down to kind of join its other index cousins here. But this is where the whole situation is so interesting. If this sell-off was ostensibly about escalation in the U.S.-China trade war, which was the kind of main narrative, and if it is in fact a trade war, and we are in fact seeing these economies go further apart, and it's not just a sharp elbowed negotiation, which is sort of the assumption that the markets had until this latest escalation, then we're in a situation that's a little bit different. Because you can see here that what was underperforming through this whole period is the NASDAQ. It is narrowly now outperforming the S&P, but they're basically looking at the same thing. They've both essentially come back to flat. NASDAQ is down less than 0.1%. S&P is net down less than 0.2%. So we've rearranged this a little, but clearly, whatever is going on here, you'd think trade war escalation is primarily damaging, or at least disproportionately damaging, for small cap cash poor companies versus cash rich tech mega names, which is what really populates the NASDAQ and what has been the driver of the stock rally going back close to 2 years at this point. So if that's the trade war, why is it why is the selling concentrated in NASDAQ here? And if it's the regional banks, well, how was the Russell outperforming here into that, and in fact is still outperforming, if those are the issues that we're concerned about? And so this, of course, lends one to ponder, well, what's actually going on here? And first of all, how did you end up with last week every attempt at undoing this sell-off running into a wall? And what was it today that seemingly broke that deadlock, at least to get out of this range, if not to get over the major high here? And there's a number of points that stick out. There was a deal on rare earths access between the U.S. and Australia that should get the U.S. access to almost all of what it needs within about a year's time. Then, of course, there were some positive comments from U.S. President Donald Trump about his upcoming meeting with Xi Jinping on the sidelines of the APEC conference in South Korea. That apparently is back on now, even in the parlance of the president, though he is saying that those 100% tariffs on China due for November the 1st are still on the menu unless there's a deal at this summit between he and Xi Jinping. We'll see what that might look like. And that's been sort of the story that people have told today, looking at the headlines, for how we are up. It's an interesting story because at the same time, we've had a rebound in gold, which has really been an avatar for how fractious this relationship is going to be. We've argued here that as you get escalation between the U.S. and China, third countries have to ponder the possibility that there will be a U.S. payments universe where the dollar continues to be the currency of settlement. Then maybe there will be another separate China-based universe where the yuan backed by gold will be the vehicle of settlement, and gold will be the sort of nonpartisan go-between if the two major powers here really go full Cold War and go into separate corners and establish for themselves separate financial ecosystems. Now, on a day like today, you get positive squawking from Washington, D.C. Stocks ostensibly rise around that idea, but gold is back within a hair of its record high, storming off the lows here. Also, by the way, not breaking its high, but at least consistency here. If we take a look at the way that these markets performed just today, you can see here's your wiggle higher in stocks. Yields are a little bit lower. Crude oil is leaking slightly. Dollar is back on the offensive. Euro and yen are both down this time. Bitcoin is back to doing its stocks on steroids thing. It is up when stocks are up, just more so because it's a more volatile asset. But gold is surging today, 3.8%. If this is in fact some kind of a thing where gold is a multipolarity hedge, as it were, then we have a situation here where the story seems to be inconsistent. And so you get pulled in the direction here of a conversation that instead says something along the lines of, rather than this being a story about this or that narrative, it seems more like a story about the markets resetting after last week's inconclusive price action before what is an eventful week at the very least on the earnings front. Before we get there, though, we may or may not get a U.S. CPI report this week. The expectation is that maybe we'll get one on Friday, finally, despite the government shutdown. Still no word on whether we're going to backfill this NFP report, but we are maybe going to get a CPI report on Friday. Going into it, relative standstill on policy expectations. We're sitting here with the October meeting fully baked for a rate cut, hugging the 100% mark here. And you can see that's unchanged from about a week ago. So no big controversy there. At least the possibility that it's a 50 basis point cut has vanished. It was there on Friday. It's clearly not here today. Looking at December, we're again hugging the high 90s here, right around 96% at this point, that we're going to get a second cut in December. Again, very little changed from a week ago. There's a slight possibility and a lower one than Friday that we'll have a 50 basis point cut, but that's in the low single digits. So we're very much anchored to this idea here, which of course still leaves the main disconnect between the markets and the Fed for 2026. where we can see here those two cuts that we just saw that the markets have already priced in, they're firmly in the Fed's summary of economic projections. No big surprise there. And we see that the markets know it, the Fed knows it, not really an object for speculative fervor there. But for next year, the Fed only sees one cut, the markets see 70 basis points in cuts. So they're erring on the side of 3. Now, we haven't had the kind of economic data that would help us to reconcile this disparity. But maybe finally, we are going to get a view on inflation here. The core CPI number expected at 3.1%, which would be the highest since May 2024. We'll see if that actually transpires, or the headline rather, expected at the highest since May 2024. We'll see if that actually happens and if those numbers actually come out. But looking at the sort of upshot for where this conversation sits, here we are back at the highs here for the S&P, and one would think we would have been powering higher here more forcefully, considering going all the way back essentially to the beginning of sort of mid-May to early June. What we've seen is a very clear inverse relationship between Fed policy expectations becoming more dovish and stock markets going higher. That relationship appears to break right here at this most recent top for the markets. And so you have expectations going more dovish, but stocks, as of last week, were going down with those expectations. As of now, appear to be basically range bound. And so there's an interesting evolution here that seems to be occurring, whereby stocks are struggling to make hay of these expectations looking as dovish as they are. So we'll see what that looks like if we finally get some economic data to begin to reconcile what markets are looking at. Here's the US dollar, the other kind of big indicator in this story. And we can see that adding to this idea that, first and foremost, gold is not up because of some debasement narrative, because clearly that couldn't be happening if the dollar is trending higher, because after all, what is it that you're then debasing? And we can see that since the lows here, the dollar hasn't really set a weaker level since the beginning of July. And since the Fed meeting in mid-September, we have gone higher on the dollar. And that's despite policy expectations starting to look more dovish. And so the dollar here seemingly retaking its haven bid here, and maybe starting to anticipate something here. Because, again, since this Fed rate cut, we've only seen things get more dovish. You'd think the dollar would weaken on that basis, but it isn't, suggesting maybe it's once again finding a haven sort of appeal, perhaps alongside gold. We'll see what that looks like, but certainly if whatever is happening here in both gold and the dollar has to do with the Fed, it's not immediately obvious. As far as the data is concerned, it's a quiet calendar Monday through Thursday. We could get this existing home sales data if the government shutdown ends. Perhaps. We'll see. There's a little bit of inflation data on the menu for Canada and for the UK. We likewise just got Chinese GDP numbers overnight. Those were basically in line with expectations, 4.8%. Industrial production a little bit stronger than expected, 6.5% versus 5%. Retail sales basically spot on, 2.9% expected, 3% the actual result, and a come down from the prior month. No big shockers there. The really big story actually comes to us on Friday, where whether or not we get this CPI report, which we don't know, I think, for sure, whether that's coming at this point. We are going to get a private sector look at the U.S. economy by way of these PMI numbers, and we can see that the expectations here is we're going to hold relatively steady on the manufacturing front, maybe even see a hold on growth or something close to it on the services side. Obviously, a cool down here from 54 down to 53, but maybe we get a situation where that isn't going to signal something more ominous. Obviously, the question of U.S. growth has been front and center for Fed officials here, and last week we heard all sorts of dovish squawking on this front from everyone, of course, critically including Governor Stephen Miron. But at this point, there is everything to figure out and not a whole lot of catalysts until this data is out. So we'll see how that is going to play from here, and if in fact we get some actual official data on top of it. The earnings calendar is, needless to say, long. A couple of the key names here, of course, the Magnificent Seven type of names, although there's clearly a lot here. But Netflix is up tomorrow. Tesla up on Wednesday. Those will be the big ones to watch here, it would seem, given how important these names are to the overall market cap. Thursday, in sort of adjacent names, you'll also get Intel, and obviously there's a ton of other reports around these. We'll see how that plays out. Perhaps the most interesting part of this story now is the latest numbers from FactSet, which we'll share in due course here tomorrow. We'll get an updated chart of this, but they are starting to show that the average for reporting of positive surprises for this earnings season actually gives us a net loss for the reporting companies of 0.1%, whereas the historical average is a 0.9% gain. And the average negative surprise is a 4.5% loss relative to a 2.6% historical decline. So we're having a hard time rallying on good news here around these earnings reports for the stock markets. We'll see what that means going forward. As far as positioning is concerned, I am begrudgingly still holding a little bit of a bearish exposure here going into the week, looking at the S&P and the NASDAQ, and still long the U.S. dollar, looking for it to continue to recover. So still short the Aussie, short the pound, short the euro, short the Canadian dollar. On the spot side, I'm also short the yen and the Swiss franc. And I've added a little bit of a Bitcoin short here through IBIT after last week's breakdown. We'll see if that manages to find legs. A little bit of a put vertical here. Here are those stock market shorts looking for the most recent highs to hold. They did today. We'll see if they continue to hold some put verticals here. Still long the bond market. That seems to be quietly working for now, and still short crude oil via a put spread here. That seems to be cautiously working as well. And that is Macro Money for today. As ever, we are here right after overtime, a show I usually co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. I'm also now at u/Ilya Spivak on Reddit, so come check that out. That really is me. And I'm commenting on the Tasty Live subreddit there, so come check us out through that as well. In the meantime, happy trading. Macro Money's back tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
All right, we're back. Tasty Crypto Show. I'm your host, Ryan Grace, and with me today, well, I'm rolling solo. Missing Shelly and Dan here, so it's just me, and we're going to switch it up. We're going to do something a little bit differently here today. We're going to run through the Tasty Trade crypto offering and kind of give everybody a demo. In detail, we're going to talk about how to get started trading crypto at Tasty Trade, trading, transfers. We're going to cover stable coins, so there's a lot to unpack there. We're also going to take a look at setting up recurring investments. So I'll show you how you can do that on the Invest tab. And then towards the end, I want to go through adding some of my favorite chart indicators to the charts, and I'll talk about how I use those as well. And for anybody that is streaming live on the Tasty Live YouTube channel, we'll hold a brief Q&A at the end of this demo session. So if you have any questions, feel free to pop those in the chat if you are streaming live on YouTube. If you aren't and you want to chat, you want to join us, get into the Q&A, go over to youtube.com/@TastyLiveShow, and that'll get you to the live show if you aren't over there. But quick Q&A at the end as we wrap things up. But like I said, today's show is going to be a demo. This is Crypto Trading Live. Here with me, Ryan Grace, your host on the Tasty Live Show. So let's do that. Let's get right into it, and we'll jump over to the Tasty Trade crypto offering. Let's talk about what it is, what we've got here, and show you how to set this up and how to use some of the features. So if we can jump over to the browser, guys, we'll get started. So the first thing that I want to talk about is the offering at Tasty Trade. So if you have an individual cash or margin account at Tasty Trade, you can enable it for crypto trading, and you can trade spot crypto across 25 different tokens, and we're adding more and more tokens every single week. Hopefully we'll get that up to 50 or so soon. But again, cash or individual margin accounts are eligible for crypto trading at Tasty Trade. And in addition to that, not only are there spot crypto products, but obviously with Tasty Trade, you have the ETFs, the options on the ETFs, the futures. There are some options on some of those futures as well. So you have a variety of products that you can trade, many different tokens on the spot side of the business, and it's all commission free. So we'll talk through how that works in just a second, but it's $0 commission. There is a small spread attached to this, but you can see here on the page how that compares to other similar offerings. We also support crypto transfers. So if you want to transfer, deposit cryptocurrency in your brokerage account, you can do that. We'll talk about how to do that here in just a second. You can also use this and the exchange mechanism that's offered. I kind of think about it as a store. So if you want to buy ETH, you want to buy Bitcoin, you want to move it to your own self-custody wallet or use it on chain, you can withdraw crypto from Tasty Trade as well. And you can also, as of recently, deposit and withdraw stablecoins. So if you want to fund your brokerage account with stablecoin, or you want to acquire stablecoin via the brokerage account and withdraw that fiat currency into stablecoin, use that as well on chain. You can do that at Tasty Trade too. So that said, let's jump over to our platform tab here. This is the main dashboard that everybody is likely familiar with if you're already a Tasty Trade user. And let's just first talk about how to set this up or enable crypto trading on your account. If you are interested in trading spot crypto, maybe you have heard about it at Tasty Trade, you haven't seen where to do this just yet, it's really easy to turn this on. All you have to do is from the dashboard, click on Manage at the top here, and then on the left-hand side, you're going to see My Accounts, and you're going to see trading preferences. And this is where you go to really add or enable any different trading preferences on your account. Obviously, it's called trading preferences. When I click on that, you can see that there are a few different choices here. So my individual account that we've got set up here today is already enabled for crypto trading, and that's through Zero Hash. So one thing that I want to point out, I'm sure everybody's probably heard about Zero Hash by now. They recently just raised a ton more money, so shout out to those guys over there. But Zero Hash is our crypto service provider. So they kind of sit in the background. You have a fully disclosed account with Zero Hash, but it's through the Tasty Trade front end. So through the Tasty Trade platform, I kind of think about it all as the same thing, but ultimately the custodian and the service provider on the back end is Zero Hash. So you have to enable cryptocurrency trading with Zero Hash, kind of similar to the setup that you have with futures and enabling futures trading. And once you do that, you'll see that your account's going to look a lot like mine does here, where it's already enabled. When you are enabling it, and I apologize, I don't have slides up here that show what this looks like, but basically you are just signing the agreement, you get a risk disclosure, terms and conditions, etc., and you see that you're setting up that account. Same thing with enabling futures margin intraday if you want to use a little bit more leverage in your trading of futures or turn on futures trading. All of that here is included on this trading preferences as well as portfolio margin if you have an account that you want to enable that for. But again, to turn on crypto trading, very, very easy to do that. Really 1 click, 2 clicks maybe. Once you check the boxes that you've read the terms and conditions, then you enable crypto here with Zero Hash. Additionally, once you've enabled crypto trading, if you want to transfer crypto in and out of the brokerage across the tokens that are supported for transfers, you can do that as well. You also have to turn it on though. And you can turn that on through cryptocurrency transfers. So that's through My Money. Cryptocurrency transfers, your screen, if you don't have it enabled, will look a little bit different than mine does here. And you will just have to go through the verification process where you've set up 2-factor authentication, 2FA, on your account for securities purposes. And then sometimes you'll have to re-verify your identity so that you have the security in place and we've got you all set up there. But you can turn on cryptocurrency transfers here as well, and then you can transfer crypto from this page. So why don't we stick with transferring crypto? And if anybody has any questions, if you are streaming this live on YouTube, just pop them in the chat and I'll get to them either in the middle of the show if it's relevant, or at the end we'll hit the Q&A. But if you want to deposit or withdraw crypto, and there's some changes coming to this interface, it's going to look a little bit different in the future, should be a little bit easier to navigate. But if you want to deposit or withdraw crypto, you can do that from this screen. And you'll see that I have a handful of different wallets that I've used across different blockchain networks for transfers. In some cases, you need to get that wallet address approved. That's for AML purposes. We need to adhere to certain regulations, so we do that via the brokerage. But you go through that approval process. It's usually a pretty quick process. And then once those wallets are approved, you can use them for those transfers of different crypto assets across different networks. So you can see that's what we have here, some of these wallets that I've added a nickname to or I've transferred from, etc. But if I want to deposit crypto, click on deposit. You're going to get a couple different warnings here, just telling you again to make sure that if you are depositing, you're depositing the right asset on the right network. Of course, you don't want to deposit or try to deposit ETH to a Bitcoin wallet address or vice versa. It's going to be lost, unfortunately. So if you've used crypto before, you're probably familiar with that. But if you haven't, just a couple things to call out. But that said, on the deposit tab, as you scroll down, you'll see the account where you're going to deposit the crypto, and it clearly has to be turned on for transfers and have crypto enabled. You'll also see the assets that are currently eligible for deposit. So we're working to add more here, and then you can select that network. And so let's just say, for example, that we want to deposit to the ETH address associated with this account. We would select Ethereum, and then I'm going to be able to just scan this QR code from my self-custody wallet or from another exchange wallet, wherever I might have that crypto that I'm going to send to the brokerage account here at Tasty Trade through Zero Hash. I can simply just scan this QR code. I can also copy the address here, copy paste that into your Coinbase account, for example, and then if you have ETH there, you want to send it to Tasty Trade, you can do that simply by copying and pasting the address. So again, not anything that looks unfamiliar or foreign to anyone that is a crypto user, but if you are new to this, this is how these transfers work. So that's deposits, and you'll see, excuse me, I want to select the asset that I'm going to withdraw, and these are the assets that are available for withdrawal. So let's say that I want to withdraw Solana, have some Solana in my account, and when I do that, it'll show me that in this case, I don't yet have a Solana wallet associated with that account. So I've got to add that through the My Wallet section. And then once that's approved, which again is a pretty quick process, I'll be able to withdraw Solana. I believe I do have ETH set up here. I've done this previously with some ETH. I haven't withdrawn any Solana, only purchased it through Tasty Trade. But now if I want to withdraw ETH, I can select one of those wallets that I've already used or have been approved for previously. And once I do that, we'll go Ryan's trading wallet here. It'll show me how much ETH I've got in this particular account. So in this particular account, I've got a little bit over half in ETH. I can select how much I want to send. So maybe I want to go 0.05, small amount, or 0.5, half in ETH, or just click the max button, and that'll let me do the whole amount. And then again, once I confirm that I've checked both the wallet address that I want to send this to as well as the amount that I'm going to send. I can click on this and then I can request the fee details. It's going to give me an estimation of what the gas fee is at the time that I'm going to transfer this. And then I can complete the transfer. And so really easy, again, to deposit and withdraw cryptocurrency. Wanted to talk about that here before we set up a trade or go through the rest of the features that we're going to discuss. But you can transfer right here from the My Money section. Additionally, while we're here, I guess let's also take a look really quickly at stablecoin deposits and withdrawals. So we're on the deposits section. Go to withdrawals, you'll see stablecoin as well. But if you have stablecoin on a variety of different blockchain networks and you want to use that to fund your brokerage account, those funds via this process will be available immediately as buying power in your account. So what's nice about this is if there's a big move over the weekend, you want to put money in your account, you don't have to go through the traditional banking rails, which can at times take a few days. This is available instantly 24/7. Click on stablecoin. Again, select the account you want to deposit to, click start deposit. You're going to get this little modal that's going to pop up. And then select that asset that you want to transfer. So we've got USDC, PYUSD, Ripple Ledger USD, and also US dollar Tether. When you click on the asset, you're then going to get the choice of which network you want to use. So if you have USDC on Base, you have USDC on Ethereum, and maybe you have it on Solana, whatever network you have it on, you can select that here. And just again, make sure that you are sending it from the right place. So if you have it on Base, don't send it to a Solana address. But when you click on this, it's going to give you a couple details about the fees. Click I understand. And then same process here. Just like when we want to deposit to the brokerage account in terms of crypto assets, Bitcoin, ETH, etc. When it comes to stablecoin, you're going to see the same thing. You've got this QR code, and then you have your address that you're going to use, which you can copy or paste into the place where you're going to send that stablecoin from. And so again, very easy to do that here. And then you go through that process, and ultimately you complete the transfer, whether that's depositing or withdrawing that stablecoin asset. So that said, let's now talk a little bit about...
So here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! I know Eliminate! You were on Eliminate! Oh my god!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
You get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's...
No.
That woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned round to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "Oh, I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just going to get some pudding.
I don't even know what spotted dick is, really. It says it's delicious.